Good morning, traders. Welcome to live trading. As you guys can see in the background, it's a little bit of a red light day, so we got to be careful out there. We'll see if the market turns around. We're in the red right now. Will we turn back towards the green? Find out on live trading. Let's see what we got up our sleeves today. Let's get to it.
Winner, winner, chicken dinner. Those words have been dancing around my head all night. Oh, it's Vegas lore, that phrase.
Good morning, traders. How we doing out there? Definitely smash the like. Let us know your top stock on the watch list today. We'll make sure to touch all those stocks. If you guys throw it up there to the right-hand side in the comments, let's get to the action. Of course, I'll go ahead and share my screen. The boys will be here in just a few, so stick around, team. We got a lot to talk about. Looks like my man Ryan's already ready. He was battling, flying through in the background.
I am here.
Trying to get back here.
I was worried I wasn't going to make the start, but then when I was all done and I heard the intro music, I was like, yes, I'm not going to let anyone down today. So here I am.
Never, never. And one of the things I'd say is you're kind of like from the future. Maybe Zunaid sent you or something, but we'll get Zunaid a little bit later today. Let's get towards the stock market action. Today, we did get some GDP numbers that kind of hit the tape, and I think that's an important thing to talk about here. Also, ADP number, right? ADP came in, non-farm employment change at 127,000 versus 200,000 estimate. Then we can go into GDP change. That was 2.9. versus 2.7 estimate. We'll have to wait and see how this really reacts, but you can see how we came up on the ADP number, then came down on the GDP number. So I'm going to have to wait and see. Big level for me, 395. Talked about it way before it even bounced off of this level. So it looks like we just bounced off of it at 905. So we'll see if we cut through that towards the open. Move to the upsides for breakouts, 397. Big range you see here, 2 points in the SPY where we could be moving for a while and be chopping. So just be careful there. And of course, Jerome Powell speaking later today could shake things up, right? So we don't know what's going to be happening right now. We could take a look at some of the biggest movers in the pre-market. That's in one way that we can always do this, and you guys can always join in and do this on Benzinga Pro, right? Get your free 2-week trial right now. If you guys take a look here, sorry about that. It made full screen the wrong screen there. There you go. All right, so we can go towards the pre-market. Why is HZNP up, right? Well, Horizon Therapeutics. Well, if you guys saw this morning, looks like they're talking about potential deal with several big pharma companies. This could get, of course, it has HZNP running, some of the other healthcare stocks to kind of keep an eye out, but also keep your eyes out on this one, VRDN, which is running with it. Viridian Therapeutics had a nice push in the pre-market, well, after hours towards 30, pulled back to 26. We'll see if it comes back right below 26 really quickly, and then right back above 27. This is one to watch today. This is VRDN. You guys can check that one out. All right, and there's some other news, of course. Wolf reported their earnings. We'll see what happens to Petco today, as it did go up there towards 1120, pulling back around the 1075 area. We'll see if it catches the lift. Xpeng up 12.46% on the day. They released their deliveries today. Wasn't able to catch this on pre-market prep, so I'll give it to you guys here. Q3 total deliveries were up 15% year over year. Now, one thing that I think Xpeng really wanted to tell you guys about, and it's almost like forget their earnings. They clearly wanted to tell you that Tesla, their rival quarterly vehicle deliveries, increased 15% year over year to 29,570. But still, what is that? Below what Xpeng is being able to kind of get deliveries of. And I think that that's an important thing to note, right? And so if you look at that, it looks like the outlook here for Q4, though, is really bad. And this gives me insight more, not into XPEV, because I'm not going to probably be trading too much of these China stocks, but this gives me more insight into Tesla. I'm really concerned about Tesla's Q4 deliveries. If Xpeng sees Q4 deliveries down 49.7%, to 52.1% year over year down. Well, how will Tesla's numbers come? Looks to me like this could be affecting Tesla, and we could be getting some bad news from their China delivery. So we'll just have to wait and see. But this could take down Tesla down even further. And then eventually on the 1st, tomorrow, we'll get the Pepsi event, the semi-truck event from Tesla. So you might not want to miss that. That's going to be tomorrow. So you could see Tesla go down today and then eventually come back up. So we'll see what happens there. It's going to be definitely something to think about. And there's just been so much news in the kind of the tape from Elon, and it's almost too much. It's almost like, all right, this is enough. But hey, to each his own. We'll get towards the stock action out there. All right, that's going to do it for me. Can always run you through some big movers, team. If you guys have any stock that's making big moves and you guys want to bring them up, we can talk about them, like maybe Wayfair or some other names. But like always, you guys control it too. Throw it up in the chat. Let's get out of some of my charts. We'll go to Ryan's charts and take a look at what Ryan sees out there, and maybe some smaller price names or maybe some bigger ones, whatever he likes.
Well, I'm going to pick up kind of where you had mentioned regarding HZNP and VRDN. Good morning to everyone out there. Great to see a whole bunch of returning faces here. Edson, Becca, Cliff, Jay, Ashvin, Tony, Yasser, Kevin, everyone, Chris, Angelina, nice joining us from Chile. Anyway, good morning to everyone here. Well, I did want to talk a little bit about VRDN because this is a potential sympathy play from HZNP. So as you mentioned, in fact, I'll go ahead and pull that up while we're talking about it here. Horizon Pharmaceuticals was halted yesterday right around the close. And it was halted for news pending, and they released some news that they have a potential offer, and there's in discussions with 3 different companies. Now, this is important because the fact that they're releasing that they're in discussions with 3 different companies means that there's synergies there that these companies are trying to actually gain access to by merging this company. And when you have multiple companies, sometimes you actually get into a bidding war. So company 1 will bid X dollars, and then company 2 will try to outbid them and bid Y dollars. And sometimes that process can go back and forth. So this stock was halted. When it was reopened, it actually popped as high as 110. We actually did get 110 prints yesterday after hours. We've come back in a little bit to 102. So the question for me here is, what is it worth? What is the price? What should the price actually be? And I don't know the answer to that. So while the price is going to try to discover what it should be, we can try and trade this. The other thing to keep in mind here is that you actually might get better moves in some of the sympathy plays, like Mitch had mentioned, VRDN being one of those, because the news isn't out yet. It hasn't had that outsized move. Now, if we take a look here at VRDN, it did pop here this morning, but you can see that it immediately retraced, popped from 23 to 30, and we've retraced down to 27. So we also might be able to get a move off of this depending on what happens with HZNP. So if you're going to trade either of these names, I would advise watching both of them and then trade the one that you have a better feel for, or the one that more or better matches your risk profile. Again, I'm not sure how this story is going to end, what company is going to end up merging or any of that, but this is one of the pieces of news that's affecting these stocks, and it's likely going to do that all session here today. One more thing to keep in mind, we do have Powell comments today at 1:30 Eastern. That might also shake up the market, so just keep that on your radar. We will be off at that time, and I think that some of the trading that we can do ahead of that won't necessarily be affected by that. We'll see what happens afterwards. I think we can actually get some trades in before that information comes out. So that's it with these two. Oh, the other thing that I wanted to check in on, we talked a little bit about potential swing trades yesterday on some of these energy names, and we're doing that a lot based on what we were seeing as well as the actual chart here. And if we take a look here, ENPH, our thesis here was a short down to a 280 area. So a trade long puts or short common stock down to a 280 area, basically off this 320 double top. So This still here kind of hanging in. Thesis here yesterday was a really good day for this potential trade. We'll see if we end up bouncing here at all today. What I'd really like to see is a retest of the bottom of this candle, which has me at 30306. If we break that, I think 300 is absolutely on deck same day. So we'll see. EMPH, this so far is working. We'll see if this continues. And then the other side of that is that if we bounce, to me, what I would really like to see is to maintain this candle. I don't want to take out the top of this candle. If you're short and we end up trading above, what does the top of this candle give us? 315.74. I think at that point you can probably cut it. Maybe wait for a 5-minute candle to close above that level if you're worried about being shaken. But in any case, this is one of the things we talked about yesterday, working so far here today. The other one we talked about was AMR, right? I typed in AMT. That's not right. AMR here. This one not really breaking down yet, but it does look like we're kind of buttoned up against this. So looks like 180 might be your next resistance level. Let's keep an eye on that and see if AMR sets up. Again, possible swing trade to the downside. We shall see. Now, looking at the movers tool, we got a couple of things here, several Chinese names on this list, so take that with a grain of salt. First one we have here is XPEV. Mitch talked a little bit about Tesla, deliveries, NIO, and XPEV, and all of that. These stocks here are moving this morning. So again, these are not companies that I believe in. I certainly wouldn't own these overnight. However, they might produce trading opportunities today. And judging by how XPEV is trading today, I wouldn't be surprised if we get any type of buying volume that might take us over this 835 pre-market high, and we can pop to new highs. Now, if we take a look at the 15-minute chart, the other thing that's pretty juicy here is that if we take out that 835 level, we're kind of gappy up to 868 or so. I have a line marked off at 891 here from one of the last times that XPEV popped into this range. But this is interesting, right? We've kind of sold back down. We're trading back up into this range here, and now we're kind of gappy if we end up taking out that 835. So let's watch this, and let's see if let's see what's actually going to happen here on XPEV. Let me go back to the daily chart here. No, this wasn't it. Let's go to Billy next. This is Billy, and I believe this is another Chinese. This is the Chinese entertainment platform, right? Billy is a Chinese online entertainment platform, best known for its video sharing that resembles YouTube. So this is the Chinese YouTube, if you will. We did pop here again. This seems to be moving with a lot of the other Chinese names. 1688, your high here. Goldman Sachs, it looks like we've got some ratings here. Goldman Sachs maintains neutral and lowers price target. Barclays maintains equal weight and raises price target. So it looks like a price target rearrangement here. None of the actual ratings themselves changed. We did have earnings yesterday morning, and so it looks like maybe this is just a kind of a continuation of that. Interesting thing here again is 1688. If we take a look at some of the other charts here, you can see where this kind of ran into, right? And I don't think it's any coincidence that 1688 level matches with the high that we put in on November 15th of this year. So we'll see if we can end up breaking this. I would imagine that a break above on this probably sends it, probably turns this into a day trading opportunity. If we take a look at the daily chart here, we can see this stock is down massively. What we've seen before in this, when we've seen stocks that are really crushed, sometimes those pop pretty ferociously. So we'll watch and see if that sets up here. We talked a little bit about NIO. Let's review the chart here on NIO real quick. Got another beaten down stock. The high that we have here is 1118. Really kind of came off that 1090. One of the things I would watch here with NIO is going to be the VWAP. I wouldn't be shocked if this regresses to the mean and comes into the VWAP, but perhaps we bounce from there. So we'll watch NIO. I'm not thrilled about any of these, but it is what it is. We got to trade what's in front of us. Next one here is going to be LU. This is Lufax Holding. So this is another little kind of a small cap. Went as high as 179 here today. 177 actually looks to be more of the resistance area, but about the same. Again, if you take a look at the 15-minute chart, you can see where we've kind of come from. If we end up breaking this 177, I would actually put 190 on deck. And if things really get toasty, 2 absolutely could be on deck today. So we'll see if we end up materializing there. And then RLX. So kind of have to do a mea culpa on this one because this ended up being an amazing swing trade. And one of the things that I've talked about quite a bit here when we're taking some of these off the movers tool is to, trade them intraday, manage your risk, keep yourself safe, and then make sure that you stack up any of the gains that you make, keep them in your pocket, and then roll those forward to the next day. I've told you guys a number of times I really enjoy swing trading things. More so than day trading if I'm given the opportunity. The market really hasn't presented that. Now, unfortunately, here on RLX, this actually made a great swing trade, right? So the first time that we started talking about this was right around here, right? It was right around this 160 to 175 area. It kind of putzed around there, and then it started to take these moves up, and it started to move up every single day. Currently printed a high of 235 here. I didn't feel confident in the market conditions to take out a swing, especially on a company that I don't feel great about. This is an example of where that actually goes wrong. Day trading this would have just been a couple of pennies. Swing trading this over a week or two would have had some pretty nice gains. So we talked about this one a number of times. I never really took a trade on it. Looking at it now, obviously there was a bit of a swing here that I was unable to capture. So sorry about that. We'll stay strong and keep trying to find some of these. I do believe in 2023, when we actually bottom, I think that'll be in the early part of the year. I think there will be some excellent trading opportunities, especially swing trades to the long side in 2023. And I'm looking to sink my teeth into those. So kind of getting ready here. Interestingly enough, HZNP now appearing on the movers tool this morning. We already know about this. We'll see if this holds 100. Really, I want to see, does it hold this leg up or does this actually break down? And then, of course, how does that affect VRDN, excuse me, VRDN. I'm getting these tickers mixed up, Mitch. Got to be careful here. VRDN actually already curling up, looking like it wants to move to that 28 level, interestingly enough.
Coal is dirty, says OP.
Yeah.
I don't expect it to be clean.
Yeah, no, I think one of the things that we were talking about, Jay. Hey, thanks, Jay. Let me put this comment up there. Nari, right, might be another name of interest on the HZNP news. This is why we do.
Look at
do.
Jay.
That was not on my radar, Jay Rice. Awesome suggestion here. Let's see what Nari is doing here this morning. Looks like not a whole lot here in the pre-market, but this might be one to actually watch. This is actually not a ticker I think I've ever pulled up. Medical device company focusing on developing products to treat patients suffering from venous diseases. Okay. Well, there you go. You're giving us another one there.
I know
buying a $2 stock has more risk than going to Vegas. Okay, Ty, I would agree with that in a lot of cases. Again, it's just the only problem is that we talked about RLX several times. Like Jesse saying, it's down from 35. We talked about RLX several times, and really none of the times that we talked about it, it provided a good day trade. But when you look back on the whole thing, it actually did provide a pretty good swing trade. So, but this is pretty odd. I might repackage this time and reuse that. I like that a lot.
Yeah, we've been seeing the oil names hang on there, Matthew. We'll see what happens today. Can oil continue just hold on here and then make a move back towards the resistance? We'll see what happens. Definitely been holding the supports. They just don't want to break. They go down to the supports and they hang out there. Don't break. So we'll see what happens on names like that, on oil names. Now, Angelina is talking about some stocks there. Ryan's already pulling up one of them for you. And Angelina, I saw you earlier say that you're joining us from Chile. Well, if you're joining us from Chile, one company that I would have you keep in mind is SQM. Don't forget about that one. What is SQM? Do a little research. I really like this company because they have diversification in minerals. We know how important minerals are going to be in the next couple of decades, especially if we're going to go into this big EV movement. Well, then pay attention to companies like that. One of the ones I would keep in mind is SQM, and that's a shout out to Chile. It's a Chile company. So shout out to you. And believe it or not, I have cousins that live in Chile. So I love Chile. Shout out to you.
Yeah, no, I've heard really great things about Chile, Mitch. So you'll have to let us know. Can I take shop here real quick?
Let's do it. Exactly. Yeah, let's do it.
Beautiful. So one of the things here with Shopify, we actually talked about Shopify yesterday. And in fact, I believe it was Tom was saying that this is extremely overpriced. Now, that's true, right? This is definitely overpriced. I think the PE was something like 200. I'd have to look. I don't actually have the stats in front of me. I'd have to look. But I agree. This is extremely overpriced. Now, with that being said, there can still be a potential trade here, especially depending on what you're trying to do. Angelina, if I recall correctly, I think that you are a swing trader mostly. And if we take a look at this chart here, this is actually not looking bad, right? We definitely based right here, right? We had really the low here was 25, but we really kind of carved out this area between, what is this? 25, 26, and 40. So this area seems to have held here. We do have our 200-day moving average really kind of coming back down to the price. And this actually is kind of converging with the 50-day moving average. So one of the things that I would be thinking here is if we can actually kind of trade back up and take this number out, maybe we can move a little bit. However, I think that one of the more likely scenarios, looking at the RSI here, we're kind of in no man's land, right? We've got a print of about 57. I actually wouldn't be surprised if this just kind of consolidated, maybe came in a little bit, gave some more time for these moving averages to kind of converge and then lower the RSI. And I think that if that happens, you're actually going to be in a better spot for a long side trade here because one, you might have a golden cross setting up where the 50-day moving average is going to cross through the 200 to the upside. And if we get that RSI to kind of come back in a little bit, it would be perhaps more attractive than buying something that looks overbought off of a recent move up. So I'm not a huge fan of Shopify. I do understand though that this stock can make quite a bit of money. There were a lot of people trading this on the way up, and there were quite a few people trading this on the way down. So just because I don't necessarily use or really appreciate the company doesn't mean that this can't be a good play. Overall, I do think it is expensive, so it's not something that I would really want to hold for a long time, especially given the market conditions that we have now. But for a trade, yeah, I could totally see that. Well, let's see what happens. I don't think the setup is here yet. I think, again, what we'd like to see is have some of these moving averages converge.
All right, so going to go ahead and talk about that 3M stock for you. Let me go ahead and just pull up
really quickly. Buy a 200x earnings and sleep well because you know you will lose money. That's exactly it, and that's one of the reasons why I'm saying I'm not thrilled about this. It's definitely expensive, but keep that in mind.
Of course, always got to keep everything in mind. There's so many variables in trading, right? And so you got to find what works for you. Let's go towards it. 3M here. I'll go ahead and I'll put it full screen. The big thing with 3M though is that it does look good, like long term, right? Off of this level. Let's go to the monthly chart to kind of make it a little cleaner here for us. But one of the things that I would keep in mind is that they do have that big lawsuit. And I don't know how that's going to work out with the stock. And so whenever I see like a lawsuit being brought up with a stock, I try to stay away from risk like that. But that's just my personal opinion. Now, from the actual chart itself, it does look like it's trying to bottom down here. But, you know, there's just this little price consolidation period that we have right here. It's not looking too bad there when it bounced there off the 110. But if it gets down below that, this makes more sense to me, like a level down here in the 100 where you had more of that resistance where it came into play, like this trend line action here. You guys can see here, right? So are we going to come back where we actually make this kind of attempt down? I would actually be looking for moves down there if I'm looking at like opportunities to get in. Now, if I'm already in this one, I really wouldn't want this to break the 110 again. Would want this to get back here towards 150. But it doesn't look like it's too fast of a mover here. Looks like it's just a little bit all over the place. So I would find some way to stay with the trend. Is there some kind of trend that can be created here where it can actually, you can trend follow? What I mean by trend following is maybe using like a moving average, like a 9 EMA or something like that, where the stock kind of just, where you see in the moving average just kind of follow the stock here on the pullbacks and not really breaking it. Maybe the weekly chart. The weekly chart looks like the cleanest chart to me right now. Because why? Because you get this kind of outlook, right? And so at least you have a better understanding of the price action. Support around 124.25s. We'll see if this comes back up through 130. Cut downs through 124.50s. That's what you look to hold, and you need to get this back towards the green weekly candle. If this gets to a green weekly candle, it doesn't look too bad. We'll see what happens, guys. Let's get towards it. Let's get towards the action. Let's roll. Ding, ding, ding. It's time.
Good luck, everybody. Sorry, I was going back to just doing more work. It never ends.
It never ends, man. Never ends. One that I might try to get right here out the gates is UNG. I like the trade setup here. Just want to see a little pullback to 22, but I know how UNG likes to do it. It like plays around, and then it just takes off. So I'm going to pay attention here for a quick little pullback. Look to see if I can get a nice little pullback there and nail this down. Let's see what we get here today. It's already moving to 22.10. Looking for a little bit of a pullback there. All right, so right out the gates, I can see that healthcare is leading. Those healthcare stocks probably getting a little bounce there. Consumer cyclical still up. Utilities up a little bit today. That's interesting. Nothing really in the red there. We'll see what happens in the overall market. Need to switch off with this chart. Sorry about that, guys. I'm just looking at everywhere right now. UNG is one that I'm thinking about taking a shot right now on. But I wanted to get it at 22. Look at Google. Hard hit to the downside, team. I'm red light in the background for a reason, team. I feel like today we're going down, and that news today of that GDP number could hurt us. But we'll see what happens. SPY did a kind of little bit of a bull trap right out the gates. That's what that looks like to me. We'll see Apple dropping fast there. We'll see if Dills keeps dropping, Amazon dropping, Tesla actually up move out the gates. So we'll see what happens on those stocks. Those oil names. Oil names pulled back a little bit, trying to catch the VWAP. We'll see if they fade off of the VWAP or do they get a VWAP bounce.
XPEV, first move here out of the gate, rocket up.
Yeah, nice little move there. I'll pull it up there. XPEV. There you guys see it. With XPEV making that type of move, you can look at NEO to lagging action. Look at NEO in there. You could also look at LI. LI getting a nice lift. That's probably the strongest one out of the three right now, I feel like. Even stronger than XPIV. LI. AMR, great call. Yes, AMR is a nice one there. AMR, the thing about AMR, though, is you got to understand there's a little bit of a spread. It's like a 50-cent spread. So you have to always try to get it on some like nice little pullback. Just be careful with the spread, but I always like the stock. And it kind of has a less volatile movement than, let's say, a BTU. CEIX is another one that I really like in coal. If you like a cheaper name, if you like cheaper stocks, oh, well, this is $77 stock. It's not really cheaper. I mean, cheaper than the AMR reference. But what I like about CEIX is the patterns that it holds. Look at this pattern here on the 5-minute yesterday. Nice little pattern. Now you get above it. Looking good there. Nice little push there. CEIX. Coal, another one to watch, is a cheaper name is METC.
Or
but that
BTU.
doesn't move as much. Yeah, BTU is already in 32s.
BTU, yeah.
I mean, that's the leader. I mean, you guys know we've been talking about this 30 level for so long. And one of the things that I would say on BTU, and I'd have to show it to you guys on my other charts, so I can show you that 9 EMA. I need to add a 9 EMA on here. Just need to get it done. You got to mix it up. I'm trying not to confuse you guys too much with my charting there, and I can always switch towards my other charting and show you guys for just a second what I've seen in BTU really hold. If you guys are BTU fans, look at this daily outlook here. So the daily outlook, this light blue line is the 9 EMA. Look how it holds really well. Every time we cut below the 9 EMA, we actually recover it, and we close towards that 9 EMA. Now we're expanding away. That shows me this kind of type of move, the expansion type of move away from the pattern. You could measure this flag to see if maybe you're getting this type of move. That's a $6.22 type of move from the breakout. That's where I would be measuring it. About $6 could put us even up there towards $6.20 or six. It's about 35. Could get up there to 35. That's a big outlook there. And now that we've gotten through, we actually haven't gotten through it completely. We're going to get towards the 52-week high. 52-week high is 33.29.
KTRA, Jay Wild shouting out KTRA. Remember, KTRA had a fast track designation on Monday. Today we have news that they regained compliance with NASDAQ for a minimum bid price requirement. This is moving here today. We're up 12% here today. Interesting thing is on the daily chart, we're actually running up right into a resistance area. So if we're able to, kind of take this out and keep the upward momentum, I really think that the high sevens is probably going to be your next area of resistance. Let's call it 775 or thereabouts. KTRA looking pretty good here this morning. First move out of the gate here, just up. We already took out yesterday's intraday high here at 617 after a really healthy move yesterday. So this looks like some more continuation here. Again, I would say that the next resistance level, if we take this one out, is going to be high sevens. So another $1 from here, maybe $1.05 from here. HNRG, that's another one that has really been been moving. This stock was like $1 for the longest time. $2, excuse me. Yeah, no, even this wasn't a one handle. Yeah, this was less than $1. Okay, I was not far off. Look at this move here on HNRG. Just an absolute monster. Let's see where we're at now. Really, we took out this resistance level. It goes all the way back to 2017. Next all-time high here, or maybe that's not an all-time. Let's go back and find out. All-time high here is going to be this double top around 14. So that would be something to keep in mind here. Let's see where H&RG goes. This has been a huge winner. If you've held this overnight recently, you have got to have gains in there at some point. Make sure you keep those.
Trying to look for a deeper time frame pullback. UNG.
Okay, so Billy, we got the move that we first talked about here, right? We took out that pre-market high about 1686. Looks like we went as high as 17 and change. Now it looks like we're back testing this breakout. So say if this holds, maybe a move to the upside here is next. I'll probably pass on these China names, but actually there does look like there's a trade here. Let's see if this 1688 holds. Looks like bib was halted and resumed, and then is it halted again? Looks like it. Biogen, right? What happened here?
Biogen
trial results for their Alzheimer's drug. This is not halted at the moment. This is open.
Yeah, it was halted earlier today.
It was halted earlier. Okay.
Yeah, it was halted. That's what we gave the news in the chat there. If you guys were here earlier, you guys saw it in the chat.
Sorry, I'm reviewing my tools a little late.
No, you're good. I was more long for the chat, so they know it. Like we threw it up. I threw the why is it moving in the chat there for you from Benzinga. So if you guys caught that earlier. CEIX continuing to move. Haven't taken a trade here yet. UNG pulled back really fast here towards like kind of 15-minute support. Thinking about taking that, but it's so weak right now that I would have to jump on it here and hold really tight risk. I think there's other opportunities that make sense. Technology leading the way up, so you can see what's going on there. Looks like solar is getting a little bit of a bounce today to the upside. We'll see if this can continue to push, right? There's still stocks here that have been making big pushes. We're right back down, and now we're just pushing right back up to yesterday's levels, even after it sold off yesterday. We'll see what happens on these names. Run. You guys know EMPH was a big trade for my man Zunaid yesterday, so we'll see what happens today. And look who's in the background getting ready to come after.
Burning, Mitch. It's like his ears were burning.
Yeah,
Unreal.
You know that's what happened. You can only say Zunaid, and then if you say it a third time, guess what happens, team?
He appears.
Boom! He appears. Zunaid, my man.
What is up, fellas?
You know, you can't say Bloody Mary in the mirror, but you say Zunaid, you know what happens.
Early morning dev calls are not the move.
Yeah, with a dev, oof, that's tough.
Oh, like I have to like be intelligent. I'm like, bro, it's too early for this. Anyway, what's up, y'all? What's up?
So then you just come to trading, right?
Yeah, bro. Yeah, and then I'm like, you know what? This is more mindless.
More mindless than the meeting with the dev.
Like I had to wake up earlier and everything. Like, come on. Like I had to take notes to be prepped for the meeting. Like, come on. Anyway.
Right? Come on.
All right.
What's
How
in
do I
the
make
red?
money? Let me
Let's
know.
take a
What
look.
should I buy?
Technology
buy?
up right now. So if you want to take a look at the SPY right now and you think that we're going to go up, well, that's your outlook there. The SPY is actually pulling down to 395. Apple's still coming back to the VWAP now. So very off correlation right now with Apple and the SPY. That doesn't happen often. There's a way to take advantage of that, right? I mean, who knows which way it is? It's to the upside or downside, but I will call it out when I see it. And I can clearly see it now. Apple's like price is going up right now, the SPY coming down. That's odd to see, right? There's not too many times that you see that action.
Yeah, my biggest thing is do we get chopped around with all the Feds stuff that we're gonna have going on?
Well, it's not only Fed stuff. It's a lot of more economic data that I would be worried about than the Fed stuff. The Fed is actually going to say, I would think more along the same lines that he's had said before, but I would be more worried about the economic data. You get crude oil inventories, you get pending home, JOLTS job opening, you get the M2 number, you get the beige book, the Fed beige book. Those are things that you know can really shake things up, especially kind of like the M2 outlook. A lot of people use this to talk about liquidity and the liquidity out in the market. We'll see what happens today. It's going to be shaking up.
We already got the GDP print, which was good. And we already got the, what was it? The GDP and then a non-farm payroll employment change. So
the
we already got
GDP,
some of these data points.
Yeah, the GDP number is good, but bad for the market. Because
right. I'm sorry. Good. You're right. I was not clear at all.
Good, but bad for the markets.
It's good that we've actually already had that print, but you're right. The number is actually weaker for the market. Although here we go. SPY bouncing.
You see, Apple was leading us to the upside. The SPY was coming down. Was the SPY playing tricks on us, or was Apple was? That's what I wanted to call out. There you see it. Now you see kind of a reaction. Look at the volume that came into Apple there. That's an important gesture also to catch. Huge amount of volume change from the 15 minutes, right?
Real quick, not to change subjects too abruptly, but I just want to call this out before I forget about it. No trade yet. We've talked about ALLK several times. We've actually traded this back in the day here. We've talked about it recently. Look at having like a pretty decent chart here. We have another move up out of the gate, which took out yesterday's intraday high. And remember, if you flip over to the daily chart here, we're looking at a humongous gap if we're able to get back over this 1173. So just something to keep in mind. It certainly does look like we're trading back up to this gap level. This is not a guarantee that this is going to snap, but if we take that 1173 out, you can see the size of this gap. This thing's gappy all the way up to 70, it looks like. So I talked about this earlier. It might have been Monday. It's still moving in the same direction. I have no position. There's just not a lot of volume in this, so it really doesn't set up nicely for a day trade. But the chart here, definitely interesting, definitely something to keep your eye on. Again, look what we've done here, right? We pop into a new leg, we kind of consolidate, and then we break through that and go up again. I'd be looking for this pattern to repeat.
All right, still looking for some pullback on Wayfair. I'm going to look for an eventual move eventually through 34s, but I feel like this is the little trick pop right now. So I'll show you guys Wayfair right now on that chart and why am I staying out of it. So on the 1 hour chart, we have a lower support down here towards the 33, 37 area. Let me draw a little trend line there for us. And then so in that area, I'm looking for a retracement in the hourly. 15-minute has that retracement coming into play here. On the 1 minute, you can see how we just started to pop to 34. I feel like that was a little bit of a bull trap. Going to let it come down towards that 33 and come back through that 34 if it really wants to come up today through 35. Best Buy has been really strong. It's actually weak today. We'll see what happens in Best Buy. Will it catch the dip here and come back up? We'll see. Technology still leading from the open. Healthcare behind that. Keep your eyes on some healthcare names. We'll see what's moving there. Biotechs and drug manufacturers, specialty drug manufacturers getting the lift today there. Let me take a look at some of the higher cap names there. Stocks, of course, that's HZNP getting that lift. It's pulling back right now. It's off of Interesting level. I'd look at the kind of like the 1 hour chart on this one. The 100 seems to hold really well on this chart. We'll see what happens on there.
I'm short the futures here. A quick trade, a quick scalp might even not even be worth mentioning, but I'm short at 39.65s. Stop loss for me is going to be 39.7125s. And yeah, looking for a 1-to-1 trade. So if I go ahead and lose, I lose $100. If I go ahead and get it right, I make $100. We shall see what happens.
Baba 5%, man. These China stocks just so volatile. I don't know who can trade these, but power to you.
Let's take a look at Baba here real quick while I lose money in the futures. Yeah, Baba, nice, beautiful move. Matter of fact, it's 85. Hello, let me see if I can be cute with this one.
JD looks pretty off the VWAP if you like Baba. Just relationship outlook. Oof, it went too quick there.
All right, I'm short Baba here. I'm going to look to have a stop loss of approximately 50 cents or so. Stop loss for me is 85.55. Looking to just scalp it real quick off of the rejection of 85 with it being the whole number. Stop loss 85.55. Take profit 84.37.
NIO continuing, XPEV continuing, LI. It's near the VWAP, so that one doesn't look too bad there.
All right, there's Baba. We were about 20 cents in the money. Obviously, we're looking for a lot more than that. I'm going to go ahead and focus back on my futures trade. Let's go ahead and switch accounts. There we go. Come back, lock in the futures. Futures still kind of bouncing around. If we go to check out the 1 minute since I got in, it went ahead and went against me. And then it came right back down to test the previous close. Excusez-moi. The previous close. And now it's coming right back down here. Not going to take profits unless we get to 39.5875. Matter of fact, I want to... Here, let me see if I can do this. I want to go ahead and scatter my take profits if I can, but I got to quickly get in. I got to then close the accounts here. Let me see if I can finesse something here. Let's see if we can have some fun, chat. Oops, didn't mean to drop my water.
Woof. Who let the dogs out?
Where is my...
Woof, 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 woof.
All right, here we go. Oh, no, please. Okay, there we go. So there's my stop loss, right? Still 71.25, but what I'm going to go ahead and do, come on, there we go. I'm going to go ahead and take some profits here at 39.5950, then 39.57s, and then I'm going to go ahead and leave this last little bit. Let me go ahead and cancel this puppy out at around 39.52. So I'm pretty much scattering my, why is this? Come on, man. Oh, I got to move all of them. That's why. There you go. Cool. All right. So our first take profit is going to be 39.59s. If we can go ahead and get it. While that's happening, we can do a split screen. Oh, yeah, baby. Come on. We're like, boom. There's our fill on the, there's our fill on the first contract there. The second one's going to be 39.57s. And let's go ahead and check out Baba to my left. Baba back to break even.
The trade's really giving up today to the downside is the financial services trade. I'm seeing everything get that flush down to the downside. I'm going to be looking for shorts off of this. If I can get anything to come back to VWAP, you guys let me know. I'll definitely be looking in that area. Morgan Stanley, JP Morgan, Goldman Sachs, all down on the day, and they're getting hit hard on the downside. I might even look for some leverage financial trades, but they're definitely getting hit hard here.
Thank you. Who was it? Thank you, Jan, for pointing out the daily resistance on Baba at 85.69s. That might change where I take my stop losses. Matter of fact, let me just be a little gutsy with it. Let me switch accounts again. Come on, how do I do that?
SPY still playing games. Apple up above VWAP. SPY down below. Looks like it wants to crack to 395s here. I think this is going to be an important level to watch here. We crack through fast here. Just be careful. If not, I'd be looking for a quick recovery of 396 to the upside. It seems like we're in a chop right out the gates. We'll see what happens here. Can we determine a area to trade?
What I've gone ahead and done is I went ahead and set my stop loss on Baba at 85.80s, and then I'm going to go ahead and go short some more shares at 85.45, and then my stop loss will be above the daily resistance. Thank you so much for pointing it out. Or I hate you for pointing it out because now I'm losing more money. You know, either or. But here we go. I went ahead and took more
That really
size here.
escalated quickly.
So I'm short 100 shares now at Baba with an average price of 85.21. Stop loss is going to be, I'll tell you guys exactly what it is. Give me one moment. Okay, boy, this is really going to try to take me out here. 85.81, which is about to get taken out. So, yep, there it is. Cool. Got stopped out. Sweet. Jan, why'd you mention it? No, I'm kidding. The next resistance area here, though, is going to be this 86.31. Let's see if we can break through the 86 level.
So if you want to play against Zunaid, you could look at JD to the upside. That looks good. I was seeing it off the VWAP. It looks like a VWAP bounce. Looks like it's trying to get to 58.
If I'm going to play against Zunaid, I'm just going to long Baba. That went right through the spot at 85.68, printed a high of 86.31.
Yeah.
That just blew right through it. I'm not even
It
selecting
sure
the
did.
stock at that point.
It
Yeah,
sure
I mean,
did.
JD was right off the VWAP when he started
More
that.
highs,
That was
Baba.
right here. And then so I was also calling out that JD.
Chad.
Sorry, Baba, not interested in resistance. Clearly not, which is interesting because it also went through the daily resistance of the other one as well. Man,
So
this thing just keeps going.
PDD keep running too.
So here's the thing about this. We've talked about a very, very similar chart formation. I feel like every single day on this show with different stocks. All right. I showed it to you a couple of times yesterday. We saw it here on Baba. Let me throw my screen up. This is what we're looking at, right? This is it. And mine here was 85.76. I think the top of this candle was actually 85.68. That was the spot here. So I'm actually off a little bit on the line that I drew here. But this formation where the stock curls back up, comes off, and then takes that out, this happens a lot. And this is one of the things that we're trying to trade. Baba gave you a great trade here on this today. We've seen this quite a bit on a lot of different
Short
lines.
Apple.
Short Apple.
Apple.
Well,
Off
that should do for my
142.
futures.
142 is my risk here for Apple. Got it at 141.79. Big thing here is the SPY. Are we going to get a breakdown on the SPY? I had a feeling that it was looking a little heavy, so I'm definitely leaning into this, and you can see it wicked there. And I was looking for a breakdown, so I'm looking for a breakdown at 395. It wicked right to 395. We got to be careful, but if we can actually get a real close down below that 395, I think we can get that drop here in Apple. So you just got to be smart too, because it's kind of in a bullish trending chart right now. And so we got to be kind of careful here on the 142. You can get a wick here. Got to be careful. SPY is holding on there. Hands on the trigger, get out right now. Apple's just squeezing on me. Look at the volume that came in there. Some buyers stepped up through 142.
Oh man, we were just a point. We were less than a point away from another contract being filled on our SPY short, excuse me, on our futures short.
Trying to give this 1 minute here. See if we get this pullback or not. SPY coming back here. Getting led by Apple. I know that there it goes. I'm out. Got squeezed out through that 142. Buyer stepped up through that 142 right here in that area. Now let's see if the SPY really comes back towards 396. If you're trying to play to the upside, you want to see that 396 get taken out. Apple should continue to run if we get that SPY there towards 396. We'll see if we get it or not. Stopped out on that first trade there. We'll just keep battling. Let's see what we can get here. I have a feeling still the SPY is looking weak, but it bounced right off the 395. Should have maybe looked for it to actually break. Tried to jump it a little bit, and that's how it happens sometimes.
If you're interested in going short, some of the weaker names, if you will, compared to the SPY itself, Or the only one I can really find is AMD. I'm sure there are more out there, but just on my watch list, AMD is to the downside as that's made a green to red move. Pre-market lows are 93. Matter of fact, if this closes 5-minute candle below 73s, I'd be interested in possibly going short, but I wouldn't be surprised if we bounce a little bit here. Again, we're about 2 points away from taking another contract off the table with a limit. Come on, baby. Just come on down. Look how close we got. Let me go to this one here. Let me go to the 1 minute. Look how close we got right over here. So this is 70.75. So less than a point away from getting us filled. And of course, it starts to move to the upside. But we're still staying short. I did go to move my stop down, y'all. I moved it to 39.6775 just to make sure. Just to make sure I don't lose too much money on it.
And XPEV put in new highs.
And what a surprise. AMD bounces from 73 just like we thought. You can tell that was going to be the support area if you go ahead and look left, which means now if it breaks 73, I definitely would be interested. Now this previous close would be the first resistance spot, and obviously VWAP would be the other one.
Spies is playing games right now, right off the 395. Be careful, team.
Oh, man.
Sideways action right off the 395 there. Seeing Wayfair kind of try to do the reverse to the upside, but just staying patient a little bit. Got a little impatient there with that Apple one. So want to really kind of get the crack of 395 or 396.
Bless you, my Lord. Yeah, what I'm hoping for is on the futures to just have it test at 39.50s. Therefore, my orders at 39.57 and 52s would go ahead and get taken out. And so far, that previous close is acting as resistance. Regime change. Hey, man.
Yeah, so I think Jan's asking, did anything happen on the China stocks?
Yeah, I went short, so.
Lol. But for real, I mean, Baba's just ripping. So one of the things that we had was these protests, Jan, in China are leading some to believe that China's going to have to back off the zero COVID policy because it's clearly not working. They're telling their citizens that it's working. They're telling their citizens that people are dying all over the world. And now their citizens are turning on the World Cup and seeing a bunch of healthy people having a great time with no masks and being like, what the hell is going on? The next time the same broadcast comes on TV, there's masks added artificially to the people, or they blur the crowd, or they don't show the crowd at all.
Oh, wow.
Yeah, it's really bad. And so what you're seeing here is you're seeing potentially people thinking that some of this is either she's going to have to step down or be replaced. I don't know if I believe that, or there's just simply a rollback of some of these COVID policies. The groundswell is getting so big that they're not going to be able to continue this. Now, I don't know if that's what's going to continue.
I think it's the opposite.
Mitch.
I think it's the opposite. That will be able to continue. They always control their people. It ain't going to change.
Well, see, so I'm not gonna dispute that. I'm just giving you the other side of why some of these stocks here are moving.
Yeah, but that's what I would say. You know, China's never changed. So until that happens, then we could say it. But
you've got numbers coming out here in a minute.
Yeah, like I'm sure they tracked every single person that was at those protests. So just saying, I don't think I would be worried too much because you can't get anything done. And there's some conspiracy theories out there on Apple. I was seeing some talk on even CNBC article today about what was going on with their airdrop. So who knows? Not going to get into what it's about, really, because you guys can read up the article if you guys want.
And on top of all of that, Zunaid shorted.
I did, man. I did.
Oh, we just out here having fun.
Yeah, I felt bad because when Zunaid was getting into the trade there, I was looking at JD, but I was looking at it long.
Yeah.
Right off the VWAP. And I was like, I didn't want to like kind of ruin his thinking there. and being like, well, I like a long here, and just kind of ruin his thinking. So I just let him do what he's doing. And I think that's an important thing also, just like other traders out there. It's not always, let's say, even a good thing if you're just trying to like poo-poo other people's trades, because just because you see something else doesn't necessarily mean it's going to be 100%.
Looks like the numbers
There's a
have come
spy
out.
to the downside.
And I did go ahead and take one more contract out. Now we've got another piece to take out here at 39.52.50s, baby. Come on down.
Trying to get, you see Apple's starting to come back down here now. I just would need a little bounce. I did get some Amazon short here. I do want to
there's
short
no
some
way.
other names.
There we go, baby. And we are out of all of our contracts on the SPY short. Whoop-de-deep.
Short some Google.
Done and done.
I'm getting short a lot here, so we'll see what happens. I'm taking my shot to the downside as I see things coming down. I'm
getting short a lot here. I hope it doesn't bounce.
I didn't think Mitch could get shorter, but hey, do you?
I'm getting short.
I'm going to wait for this 5-minute candle to close below 73, and then I'm going to look to go short AMD. And look at that. I was right. And you're right that I was right, Tony.
Bob, 89 calls.
89 calls.
Yeah, it's not a whole lot though.
Oh, okay.
But they're clearly buying them on the way up here.
And no surprise. See, this is the reason I wanted to go ahead and get out before the 39.50s were tested, because I know the bounce would come on the futures, or at least I believed the bounce would come on the futures. And if you go ahead and look left, you can see that's where support was held last time.
Support until it isn't, right?
Support till it turns into resistance, baby. And here comes the crack of 39.50s, possibly.
There we go. Getting some downside
Thank you, Carly.
action.
OTIC, one of those penny stocks here at the highs today. Not trading that, though. XPEV still pounding highs. XPEV looking like a 10 magnet coming here on XPEV.
Those oil stocks turning to the red also. Making a little move to the upside. Slowly, technology looking like it's starting to leak into it was up bigger. Now it's only up 0.25. Healthcare is only up 0.26. Then you got utilities, followed by communication services. And then we start going red, consumer cyclical, defensives, industrials. The real thing that's getting hit, I talked about it early on, tried to bring it up, the financial trade. They're just getting wrecked, guys. They're getting wrecked today in the financial trade. Look at JP Morgan. Look at this chart, guys. Look at this. This is getting wrecked.
Goldman Sachs, very
That's
similar
what you call
story
getting
right
wrecked. That's a whole. This is why I pay attention so much to industry trades, because let's say if you actually had an algorithm that you could tell it to be like short all financials, bro, you would make a killing on a day like today. A killing on a day like today. So these are the kind of moves that I've been trying to slowly but surely adjust to. And in the long run, have algorithms that can go and do something like that know all the financial stocks, can easily just put in some orders for me, and we can hit a rotation move down. Because that's a rotation move off. Like when you see moves like that, where it's like straight, what this means, what this chart shows me is bidding action, where the bid was getting hit through here. Bid, 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 ask, bid, 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 bid. That shows me right there. They're just hitting it on the downside. They're breaking it down. So we'll see what else is going on there. Let's hit some software with a basket. Yeah, Tony, that's kind of the idea there is you say, okay, well today and you could do this in a pairs style, right? Let's say we could short all financials. And if you wanted, you can go long like one of the ETFs to kind of hedge it even further. There's so many other plays that you guys can do here. And I'm just bringing this up so that we don't always just think about like just like pattern day trading. There's other ways to trade too, right?
Who dat? I love that you come in here and talk about Mullen. I love it because every time I get
this guy comes into every stream.
I mean, it's fine.
Throws a couple rockets. But my thing is, he just puts it up in one message, so I let him go. I let it
Oh,
go.
I mean, it doesn't bother me. I just mentioned it because
we all like different stocks, right? So I'm not going to be upset with somebody mentioning a stock.
No, not
they
at
like,
all.
even if you want to throw in a rocket emoji. I'm with Mitch though, 100%. If you're spamming that thing on multiple lines over and over and over again, and you got nothing else, like you got to go. But if that's not happening, we tend to be a little bit more.
No, I personally don't care. It's cool. But here's AMD though, couldn't quite close a 5-minute candle below 73, so we did not go short. And you got a nice bounce on the futures by 8 points here. That 39.50 level, baby, coming in clutch.
MYO took out 85 here, so it looks like MYO next spot here $1 if it can keep going. That's 15 cents away. MYO.
Got
Another
a good
penny
above
stock
VWAP here.
XPEV on its way to 10.
Want to see if we can start getting some flush here. SPY bouncing a little bit. But it rejected the 395. That's the only thing that's keeping me alive here. If it gets above 395, I got to really be careful about the SPY. It's bouncing. Using it as rejection. Let's see if we take another leg down here. I want to get through 9281s. That's going to stop me out on that Amazon. Can add here, but there's no point in increasing risk. SPY could come back, so I need to see the SPY just flush down. Lehman Brothers to the moon.
Okay, Gary. That's funny.
NVAX, says James. I'll take a look at that. I haven't taken a look at NVAX in a long time. It's red right now. I don't know about Novavax. I don't know about that one, man.
Charge point 1186, yesterday's intraday high, looks pretty strong today on decent volume. I think if you pop 1186 to the upside, I might have a trade here on charge point. Let's take a look. And yeah, this is I actually kind of like this setup. You know what?
I am looking to go short, by the way.
Yeah, I'm going to take a little here.
What are you taking?
I like it.
A little bit of charge point here at 1184, looking for
Gotcha.
a break of the highs of yesterday's intraday highs here.
All right.
At 1186. Let's see if we can get a bit of a trade here. Looking for 12 plus.
Show you how I see that. It's kind of like a little 5-minute flag pattern, then followed by a little push up to resistance. Resistance right around this level. You get through it. I see you. Can't see it another way there. I'm just going off the 5-minute there. 15 minutes has a nice little push.
Check the downside here. It's just going to let the trade work, as Mitch likes to say. Let's see if we get the pop.
Yeah, I mean that's how we do it, right? We set up trades. We look at a lot of variables. We're running through things in our mind. We take the trade, and then from that moment on, the only thing you can do is let the trade work. You know your risk. You know your reward. At this point, it's not about pressuring yourself if it's going to go right or wrong. It's about being focused on execution. This is where a lot of traders get things twisted. What they do is they get to the point where they take the trade, and now they're thinking about, am I going to be right or wrong on the trade? You're never really right or wrong. You either win or lose, and this is all due to probability. And so it's not about being right or wrong. It's about trying to be in the probability towards the winning side.
MYO Crow, looks like you hit MYO right through 85, printing 90 here. I think a dollar magnet on deck here for MYO. 91 now. So, okay, so if you're long here on the 85 break at Crow, maybe you have a different entry. That's totally fine. But if you're long here on this 85 break, I would definitely think about taking some gains at a dollar. Maybe even
that Amazon.
You want to front run that.
Still in Google, though. Might get stopped out in Google also. It's not looking good for me today, guys. And that's how it shows you that, just because you've seen it right doesn't even mean that you're going to get into the green. So it's all more about execution. That's why it's not about worrying about right or wrong. It's more about nailing down strategy. SPY back above the 395s, just playing games with us. The chop continues. I'm out of here, guys. I'm out of the Google. I'm out of the chop zone that's out there. It just seems to me like we're just playing in chop. And so with that being said, I'll pull my capital to the side today versus keeping it into the market. But I can hang out with you guys and chill out and yell, USA, USA,
Hey,
USA.
you know what? Let's take some time here to give Mitch credit where credit is due. Yesterday, when we first started the show, before any of the games had started, Mitch came on here and said, "I'm going to give you Pulisic today to actually win." And what happened? It was he laid it all out on the pitch yesterday. It was his goal that got the United States the win, in addition with some really good defense late in the game. But you called it, Mitch. You called it ahead of the thing. You gave us the sports bet. Tell me you bet that. Tell me you bet that.
Plus 280. Unfortunately, I'm in North Carolina, maybe in the Bahamas, but we won't talk about that.
I mean, you know what a bookie does, right?
I have my guy SBF in the Bahamas.
Why did we do this?
Tell us more what it is that a bookie does.
No, I mean that was a joke. Man, get out of here with that. Bring Mitch back.
Why do I gotta go?
In all seriousness, we need to give.
This is
Mitch
why
credit.
we don't give Zunaid privileges, guys.
I try. Yeah, you know what? We give Zunaid a child,
like a different, like a parental control of StreamYard.
Parental controls, yeah. You know, he's the type of friend that when he gets into the car, you know, you hit the little thing on the door so you can't open the door from the inside.
It's
the child safety lock.
The child safety lock. More like Zunaid's safety lock, but it's okay,
child
guys.
Safety lock. That'd be crazy.
Kind of lock Zunaid in. He ain't getting out.
Crow, I'm guessing that you took your gains here on this pullback on MYO.
Yeah, I do need to hop the border over there to Virginia.
But Mitch, all jokes aside, that was an excellent
good call.
That was an excellent call. You
the
gave
big
it to
thing,
everybody before the game started. Plenty of time, and it's exactly what happened.
And I could show you guys my So Rare. He was my captain this week. You can only give the captain attribute to one of your players, and I have Messi. That just to show you guys how confident I felt in Pulisic coming through. Because if you see the last two games, he played really well with nothing to show. Maybe an assist in the first game. So that showed me also that he was playing well. He's passing the ball. He was pressuring. The guy can kick the ball. He plays in Europe. So, I mean, that's another thing to keep in mind, right? He plays with real good defenders. That's the best defenders are in Europe. That just goes to show me and why certain teams are so much better and why I feel bad, but why Mexico struggles in the World Cup, because European defenders are hard to stop. And that's what Brazil had. So just to kind of show you guys different types of kind of playing out there, especially in the World Cup. I mean, European soccer is still on top.
So folks, MYO, we're watching it here while Mitch is talking here. This is going to one. The 85 break, if you took this, now is a perfectly good time to take some profit. You want to wait, maybe scale half of this position. See if we get a one test and a break. Just make sure this was a great move through 85 here. Lines up with the pre-market high right out of the gate here. Make sure you take some of these gains. Make sure you don't give this back. 97 cents here. 97-cent ask here, and they're taking it. They're on it again. They took it higher here. Okay, so this is a nice one. Shout out to Crow on the assist on this one. You were talking about this one early. This is a penny stock one that I normally don't play. Great trade here, though. This actually ended up working. Now we're getting a little bit of a pullback.
Short XPEV at
charge
996.
point, baby. Let's go.
Yeah, I was about to say, what about charge point? That looking good to me.
Good to me.
Looking good to me. Nice little push there into the 1190s. Now you're through the highs, and it's looking good on the 5-minute multi-time frame kind of move there. We'll see if you can continue pushing. RSI pushing up there too. That looking good there for you. We'll see what happens there on that charge point. SPY still heavy red. I don't understand. This is one of those days where it gets a little confusing, right? Our leadership into the green, but the SPY just dragging. That just shows you the split there. Look how Amazon's like this, but look at the SPY. think it eventually comes down, and maybe I just got caught on the pushback, but I'm just going to stay out of the trades, team. Tesla rejecting the VWAP bounce. That one's another interesting one through the 183 level. I just hit it right now. We'll see what happens on that one. But today I'm just going to sit back, relax, and enjoy the show for you guys. So if you guys have questions today, you guys want to take a look, I got my study guide that I can give you guys a little look into. I'm not even going to pass this one out this time. I think in the long run, I'm going to be creating kind of my own little investment club, and then I'm going to be trying to include people and giving them access to even more information that I really work hard on. But the big thing there is not necessarily that, oh, look at my little Slack sign coming on. Got to change my little Slack chart. Let me pull up my Slack here. Just give me a
Mitch,
second,
all I got to
guys.
say is that I better be a part of your investing club or I'm going to be upset.
I mean, it's all about trying to give it back to you guys. I feel that that's what I'm always here for. I mean, if not, I would quit today, guys. I mean, if I felt that I couldn't give you guys more value or provide you guys a little bit better way in getting through the learning curves of trading, well, I wouldn't be here, team. That's what I'm here for.
MYO, by the way, we were talking about it. Pretty big pullback here on MYO. So again, this is why when you're trading these, got to be able to book your gains. We had some targets lined out. It doesn't always go exactly to the penny. Just be sure to book some of the gains. Got a great move there.
Yeah, I'm going to actually start the form today, and I got to get it set up. But I've been doing a lot of the feedback. I'm going to kind of shift away from that now, and I'm going to be giving a form for the book club, the financial book club from Benzinga. It's going to be led by none other than Money Mitch here. So stay tuned for that, guys. We're going to start collecting up some emails. The big reason is that we want to make this as valuable to you. If you guys are going through the book and doing the hard work with us, we might as well give you guys some quotes, some PowerPoints on these books so that you guys can continue learning, because that's what I'm really here for, is to keep pushing us forward.
I'm going to go short here on Tesla with a stop loss above 184.32s. Looking to take profit at, actually, I'm going to go and delay this puppy a little bit lower. Looking to take profits around 181.50s or so on Tesla. I am also short XPEV. This is in the red, however. It's about to get stopped out, so it's not a pretty trade. XPEV, there we go. It's about to get stopped out in 2 cents. And there's a stop out on XPEV. No need to talk about it, but for breaks 10, I'd be interested in going short that puppy one more time.
You're right. Those trades are strong today. Charge point with a nice little push, almost to the 12 there, 11.95. So we'll see if that can keep moving. And NIO is really strong too. LI is the one that's not the strongest one there, but definitely those stocks are pushing. And China is just so it's so scammy. I almost think that we should almost not even have these stocks in our markets, but that's just my personal opinion. China stocks, because it's it's so crappy, the news that comes from them. Do you remember this? I mean, this stock got a capitulatory bottom there on October 24th when they pretty much were telling us it was the end. This is the end.
So let's see what the futures are doing here. Coming back to test the 39.50s. As you can see, it couldn't get the over resistance on the previous close. Let's lock back in on AMD. Still having that 73 hold.
Breakdown.
And of course, that's helping our Tesla short to the downside. And yeah, maybe trying to short a stock that is up 10% is the dumbest thing I've done today.
It happens, man. And it's just more along. It's something to review versus something to get mad about. That's what I would say, right? It's more like, all right, well, what kind of trades did I take today, and did that make sense, right? Well, we can always learn from our mistakes. That's the important part. Just like one of my mistakes today was probably stop watching Wayfair. That's actually done pretty exact move that I called out earlier in the day. But guess what? Wasn't watching it, so wasn't able to take the trade there. So I'll show you guys what I was talking about earlier, and you guys can rewind the tape. It's not like I'm picking here, cherry picking. Remember I talked about that 1 hourly low and how that could end up working well for that Wayfair. We drew this out here, and it came right to it. A low of 33.28. we had 33s that we were looking at. It recovered immediately, and we were looking for a move back through 34s. It just did that move. Now pulling back towards that 34 mark. We'll see if it goes to 34.40s. It actually wants to go to 35 today. And this is just Wayfair. Had a good retail sales. I think it's the type of stock that could get a Santa Claus rally, even though it's not making money. So I was keeping it on eye, but I'm not going to trade it anymore. I'm looking at the SPY just continue down there. And the SPY definitely played games when it got right back above there. Stopped me out. Too much size once more. And that's why I'm getting stopped out quickly here versus kind of taking more of the swing trade size. So if there's anything that I'm going to start going back to, I might actually start going back towards my swing trading team so that I can focus more on trying to build positions versus trying to take these quick short-term trades.
Yeah, I totally feel you there. By the way, MYO traded right back down to its VWAP and looks like it's trying to bounce. So there might be another setup here on MYO. Charge point continuing to the highs here. Oops, let's go ahead and load that up here. So we're looking good. Really, again, what we want here on charge point is a break above that 12. That is the exit trigger. So we currently have a high of 11.95. Let's get that 12, get out, and get on to the next.
Oil's dropping fast there, guys. Oil stocks dropping fast. Oxy down, Chevron down. A lot of oil stocks coming down today. Will they finally break the support?
Next leg down for some of those banks too, Mitch. If you check out Goldman Sachs, from the last time that you mentioned it, it actually started to break down again.
Yeah, I mean, it's the weakest sector, right? And it was one of the strong ones that were holding on to the daily. And that's why it's so important to also stay with the trends, right? And it doesn't mean that it's completely done, but definitely when you see motions like this where a lot of them are going down versus just some of them, right? And you can look at like, what's the financials, XLF? Yeah, XLF. So when you see kind of this kind of action, you can see it on the daily. We were trending up, we were trending up, we were trending up, we were holding. We even did a nice little push out. Now we're starting to come down fast for that kind of break. If it can hold the trend line, you're still looking good, but it looks to me like you're starting to break at least that trend that you got out of. So it looks to me like right here, in this kind of indecision that we just got, we just decided where we wanted to go. We didn't want to go back up to 36. Looks like we wanted to come back to 35. 35 can act as support. So you could see some support eventually coming through these names. But for right now, it's been a hard downside action move. Take a look at Bank of America's daily candle here. Watch this. Boom. Support, support, right to the support now. We'll see if it holds or does it take the next leg through 36.
Charge point still struggling with that 11.95. There's not a huge seller there, but every time it runs up there, it gets rejected.
Nice levels on the daily. I think that's what you're fighting there is the 12 on the daily if it wants to get through there. Doesn't look too bad, right? It's just been battling through here. We'll see if it can actually get through Monday's high of 11.98. And you got a lot of closes. Friday, 11.99. Wednesday, 11.97. You can see how 12 is going to be so important. Another thing to look for is maybe on that 12, do you squeeze out some shorts? Do you see some volume actually increase into the move? That's what I'd be watching for. All right, Bank of America continuing on the downside. We'll see if the SPY continues on that downside action. Looks like we're bouncing a little bit there. And take a look at some different stocks. Did Wayfair continue from that 34 bounce? Yeah, came right back towards the 80s, right back through the 34, now towards 34, 30s. So definitely one of the stocks that I was looking at this morning could have been a good one. Now it looks kind of like a kind of weird cup and handle shape. I'd look at on a bigger time frame, the 1 hour kind of pattern to get back there towards 35. We'll see if it eventually makes that move. SPY coming back a little bit there. Charge point at 11.94. We'll see if it gets through that price point. How's the Tesla Dragon? Adeline, that Tesla Dragon.
Yeah, our short that was in the money is now red. Coming back to test VWAP here.
Fubo making moves today. I remember when we had like someone in the chat that's always telling us that Fubo was going back to 100. This guy Pat McCaffrey or whatever, or I forgot. What's that show? Do you watch that show, Zunaid?
No.
I think it's Pat McCaffrey.
Oh,
Pat
the
McAfee?
kicker?
Yeah, Pat
The
McAfee.
punter?
There you go. You got it,
Oh,
Ryan.
The
yeah. I thought you were-
podcast? Well,
Yeah,
I
the
missed it. I just
podcast.
got back from the bathroom. What did I miss?
I think that we had someone talking about that Fubo was going through 100 because it was mentioned on that or something like that. I remember that. It was kind of funny.
Yeah,
I
don't know.
I don't think he's going to make it go to 100, but
Yeah, he's not. I mean, his podcast is good. He's enjoyable. He actually is on College Game Day too. He's good on TV. I like him. I don't think that's him mentioning it is enough to be a catalyst to drive that stock to $100. That's what I would say. Wayfair got just what you need there, Mitch.
yeah, Wayfair is doing exactly what we were looking at on the hourly swing trade today. Oh, that would be looking pretty. SPY's just now kind of in this kind of sideways stuck period. We'll see what happens. Going to keep coming down. And also remember, 130, you get Jerome Powell. There's 1030 numbers that are about to hit, I feel, with oil. So oil could shake up here. There's so much on the tape. How do you follow all this? Well, simple way is just go to Benzinga Pro, right? I mean, that's how I'm following with everything. I mean, all you got to do is just pull up your calendar widget. Look at all this stuff that's going to come out today. Look at the United States stuff. It's not a little bit, guys. It's a lot. It's a lot of information. And so it's very hard to keep up with all this. One easy way is just right here on the calendar widget.
And
right?
as another pro tip, you can I see you have it sorted by Fed, which is awesome, but you can also click on the importance column and sort it by importance. That can give you an idea of some of the different data points, as well as different data points from different countries. You can filter that for only US, but might be worth taking a look at some of the other numbers as well.
Yeah, I do it by US sometimes on days like today where it's like, okay, well, that's just too much to look at. Let's just keep it simple. So you just go to the filters here on the right-hand side. You can find country. You can find a whole bunch of different ways to sort it out for you. But as you can see there, that's not a little bit to talk about. There a lot coming on. Let's take a look at what comes up here at 10:30. All right, so 10:30. Look at all the numbers that come out. All these numbers come out at 10:30. And there's some fives in there, right? There's crude oil inventories coming out. You're going to get heating oil stockpiles. That's an interesting one with UNG. We'll see if maybe you get natural gas moving today. So there's a lot going on. You'll also be getting kind of the M2 number. That's what was released at 10 a.m. That's what took us down, I think, that M2 money supply number. And also you got pending home sales and JOLTS. The JOLTS came in at what? 10? I don't have the actual. I want to take a look at the JOLTS. Let me go ahead and look it up here. I'll look it up while you guys continue taking a look. What do you guys see out there?
I'm watching ChargePoint here. It continues to get rejected off of that 1195. Actually printed 1197 briefly and kind of came back in. It's holding up here, but if this reverses, remember my stop initially is at 1174. To trade is in profit as the buy point was 1184. So what I'd really like is for this not to go red. We'll probably move my stop up to break even here, but still ChargePoint's still kind of holding this. I'd love to see it just push one more time through that 1197 and 12, and then we can exit here. So that's what I'm watching, Mitch.
All right. JOLTS job opening at 10.33 million versus 10.30 estimate. So looks like we filled more than estimated job openings. So not what you wanted to see. That's why we got hit towards the downside a little bit there. Pending home sales weren't that bad, but I mean, I don't think that really moves the market too much.
Tesla test and VWAP here.
The test.
Yeah, we were in the money. But obviously didn't hit our stop or didn't hit our limits, and now it might hit our stop to the upside.
Powell is 130. BZNB trading. BZB? Nah, it's BZNB trading, right?
I don't think I ever get it right. So I just say BNZB and call it a day.
Ryan, the story of reading stuff, man, on stream. I do this all day long.
I know.
I've gotten a little better,
It really
but
is hard. It really is hard. And I'm someone like I if I make a mistake, I like to correct it. So that's
yeah.
why I'm saying sorry and excuse me all the time because I'm trying to correct things. It's not easy. It's really not easy. Charge point 1198 here. Come on, we got a little bit of a seller wall here at 1198. We got to take this in 12. Let's go. Let's go, charge point. This trade has actually worked out pretty nicely here, especially if we can end up getting this last final pop here.
Yeah,
there goes 1198. Here comes 12. Come on, just break it for me. Let this plan work.
It's all good, Ryan. Let it do the lifting for you, man. You don't
it.
got to lift for it. Let it do the lifting.
Don't forget, while in this, I actually went to the washroom. I stepped away.
You plugged in the charge point. Now you let that baby charge you up, Ryan. Let's go.
I see what you did there, Mitch.
You
Good
plugged
Lord.
in. You pulled up
Here
to
we
the
go.
station.
Here's the 12 battle. We're going to exit on a pop through 12 here.
You looking for a full battery? Or are we going 75?
There goes 12. Oh, you were so close to being taken.
One thing to look at, level 2. What's going on there? Is there volume there? Is there a sneaky little offering, like maybe like in the hundreds or 200s? What's level 2 showing up there for charge point?
Level 2 is actually looking really good here. It's not a whole lot of huge orders. There's definitely some bigger orders being taken. But again, we've identified this as a resistance point, so that makes sense. One of the things that you've talked about quite a bit, Mitch, is watching some of those bigger buy orders flow through the level 2. I would expect to see that as 12 gets taken down. We've actually seen that earlier. Actually, at 12, we did see a whole bunch. Now that I'm looking at it, we got 1,000, 5,000, 1,700, another 1,000, another 1,700. So they're hitting it. It just hasn't been strong enough to take it down yet. We'll keep watching it. Kevin, thank you. So here we go. Charge point's upper Bollinger Band is 1208 on the hourly. So a push through 12 here, that might be the top side of that pop at 1208 on that Bollinger Band. Thank you very much for that. I actually don't use Bollinger Bands on my charts very regularly, so I really appreciate this, Kevin. Good shout. Maybe we'll take one more attempt here at 12. If we get any type of violent knife back, I'm just going to cut it here because I don't want this trade to go red against me, and we're up near the target anyway. So when you're up at resistance levels, sometimes those resistance levels cause the stock to break back down. If we get a sharp drop here, we'll just exit. But again, hoping to clear out this 12, and any type of pop, we're just going to exit on that.
Neo might pull back. Man, I'm still wanting this XPEV to break 10 so I can go short. But so far, it's holding on to the 10. You can see how 10 was kind of resistance, and it popped up, and it's tested it, holding on as support at the moment.
Yeah, I was proud of myself for not chasing XPEV, but it kept going. See that break? Here we go. A charge point back at 12 here.
Let me put you up again.
See that break of that top candle? Go back to your chart real quick.
Oh, you don't want charge point? Okay, there.
No. I mean, we know what we're waiting for here. We're letting the trade do the work. We're taking a page out of Mitch's book. You see that first green candle right out of the open there? When the top of that candle got taken out, to me, that's the entry. Just the way I do day trading, like that right there is the entry. And you can see it really didn't even come back to that spot.
No. Yeah.
I'll tell you what is coming towards a spot that I was looking at is Wayfair. So I don't know if you guys are done. I can show that trade right now.
So you good?
Look at this. Look at that. Look at that line. Went right to it. I'm coming back towards that 35. Talked about it early, and this is what I talked about, where sometimes a lot of noise is in trading, right? And so sometimes the hardest thing to do is you make some really good plans in the pre-market. One of them was Wayfair, right? And then the market opens, the noise starts hitting, right? A lot of times what ends up happening is, as day traders, we get drawn to the noise instead of sticking towards what we were thinking about in pre-market and our plan, our setup, our strategies, right? And so with this being said, the better trade today, instead of looking at and reacting off of the SPY, would have, for me, been probably trading this Wayfair traded plan, right? Like where I already had levels fixed on in the pre-market, looking for that levels to come in, Talked about how I thought that was a bull trap when it first went to 34. It trapped some bulls, came back down towards the longer time frame support, and then pushed off. These are the types of trades that, as a trader, when you miss these types of trades, this is what hurt my mentality in trading for a long time, right? Is this particular style of trade where you had a really nice defined plan, but you were looking elsewhere when the actual market happened, and that's probably why you missed this type of trade. So just wanted to bring that up as something that we can learn from today. Boom, 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 boom. It's almost December, team. Can you believe it? We'll get some new monthly candles. Some new monthly candles are coming
Today will be the last day.
Yeah. It's an important thing to look at those monthly candles, team. I always like doing like a little look towards monthly candles. We can even do that tomorrow. I'm gonna try to do that for us tomorrow. Towards the end, we'll just start taking a look, monthly candle outlook, or maybe even later today, stock market movers might do a little monthly candle outlook to see which candles are looking good going into the December month. You charge up. Charge up, right? All right, let's get out of here. The SPY found some bottoming around 394. Just been on a slow leak, but of course, there's other news that's going to come in here. How did oil stocks react here as we got in some crude numbers that hit at the 1030? You saw a little bit of a spike there in XOM getting a little bit of a push up. We'll see if this actually turns around the oil stocks or not. You guys can see it here. Little bounce there, started pushing back, and look at the 5 minutes so you can see how you pushed up and now are pulling back a little bit. If you cut through that 1030 candle, well, then you got to be careful because you could keep coming down lower. We'll see what happens today.
I'm short XPEV one more time here at 10:05s, but I am looking to go ahead and add some more short at 997. We're about 6 cents away from entry. Also keeping an eye, if you believe in BABA, all right, and you believe it to the upside, you've got great support area right now around this $88. If you would go ahead and take a look at BABA, you had resistance at 88. It popped above by 50 cents, and now it's kind of basing right above 88 as support. And it looks like I did go ahead and get executed on my short on XPEV. So now I'm short 300 shares with an average price of $10 on the spot.
Have both trades up there for you.
Appreciate that. Stop loss for me is going to be 1040. Looking to take profits at 959. God bless.
I don't know why. I always find it funny when I see Papa Powell in the chat or something about Powell. Everyone likes messing with Powell. Everyone got to mess with the Fed a little bit.
Yeah.
Can't blame him.
I was hoping this. Excuse me. Whew. How rude of me. I was hoping this 5-minute candle on XPEV would close below $10. Clearly, I came in at an earlier entry. May screw me here. Do you guys think she will get picked on by the EU, WTO if they crack down the protests? I personally have no idea about anything in terms of international affairs.
I can't predict what the political stuff that's going to happen in the future is. By the way, charge point pulling back here, not going to let the trade go red on me. Didn't knife down, but kind of drifting back down, just not going to let it go red. Got so close to. God, we hit those 12 prints and I didn't take my exit there. Shame on me.
Where can a good entry be on Disney? I think if you're looking to go long, right around here, and a stop loss would be 93.93, which was the yesterday's low. So you're risking about 30 to 40 cents. First take profit would be VWAP, but if you're looking to go short, I would wait for a 5-minute candle to close below 94. Kind of like how I should have done on XPEV. I might actually close out of this one early and save some money. Baba's still holding on to that 88. Come on, XPEV. Come on down. Futures didn't want to give up the 39.50s as they go ahead and reclaim it. I believe the low was approximately 39.48s or so. in that range. Come on. And there's the break of 88 on Baba. All right, Shell. It might be time to get cute.
Going to cut charge point here at 1185 for effectively flat. Bummer. Good idea here. Just didn't quite get it. Was really waiting for that 12 break. Never got it. Should have taken gains. Shame on me. It's my own fault though. Nobody else to blame. Kevin, appreciate all of the assists here too. You guys are all trying to help out.
Thank you, man. What do you think, chat? Should we cut XPEV for a $12 loss, or do we go ahead and risk it for the biscuit? So let me go ahead and put up my charts here so I can talk about XPEV. As you can see, my entry is $10 on the spot for the short, stop loss 1040. Looking to take profits at this 959. Kind of want to cut it simply because the 5-minute candle didn't close below, and you've got a wick here. Now on the other side, I'm short Baba here, 50 shares as well at an 87.96. Stop loss is 88.60s. This 5-minute candle, did not close below the $88 level. So that's why I didn't want to add another 50 shares there. Tesla strong today. Tesla is nice and bouncy here from VWAP. So if you're looking to go long, you got a good risk reward. Stop loss would be a crack of about 183. So you're risking about $1, looking to get $1 to the upside. Clearly the 185, 150, 185.50 range is your resistance area on Tesla. And then coming back to the futures, they're bouncing nice and strong. Would be surprised if this one tries to, I would not be surprised if the futures try to test VWAP and the previous close of 39.62. And if that rejects, then that could be a solid entry for us right there. Matter of fact, I'm going to go ahead and trim some size here. I'm going to go ahead and close out of the trade on XPEV. I don't like the fact that it's kind of gaining a little bit of strength. Baba here, I'm okay with it because I've only got 50 shares. Not really worried about anything there. Let's go ahead and take a look at Apple. Downward trend. Now a little bit to the upside. Let's see if we can draw a little trend line here for us. There's the trend line on the 1 minute, and you can see a little bit of a break. No real volume here. You got the volume here, but then it's kind of tailored off a bit.
Kevin, watch charge point bounce right from where I sold it. I would not even be surprised. I would not even be surprised. All you got to do is laugh about that. It's starting. We'll see if it ends up keep going here. That's unbelievable.
Oh, boy. Nice little compliment from Mitch here from the Crow, saying he's been nailing drip and gush with the 1 hour chart. Thanks, Mitch. You paid for Christmas shopping.
Boom.
Way to go, Mitch.
Awesome.
It's one thing to always take a look at, right? It's not even that maybe I got it right. It's more along just take a look. I think Crow took the time to really take a look if it works, and he found out for himself, right? And I think that's what I can do for you guys a lot of the times. I can't tell you exactly how to trade things. I can't do it. Literally, I wish I could, but there's one thing I can do is point to things that I see out there. And then it's going to be up to you if you guys see the same. Looks like Crow found that the 1 hour charts really work well. What I like about the 1 hour charts, it's always a lot of really tight risk with a big return. So you don't have to put that much money into the market. You don't have to put that much risk up. That's why I like the 1 hourly charts. ASPN moving at resistance, says Webcoin. Charge point ticking around. Just ticking around. Hit 12 for like on the dot. I'd love to see if there's a kind of look deeper into the kind of the books to see if there's anybody hiding up there. PDD right at the VWAP. VWAP for some people, you know. That's an interesting trade right now. That's so binary, but it really interesting trade because wherever it goes, it's kind of interesting. Like
Seeking, teach me. What do you mean, Seeking?
XPEV trying to set new highs.
Yeah,
right?
it is.
Said,
I think that we got out of it.
Give me that auto tools. Auto channel, I'll take it. There's a lot of like you use like TradingView, right? I think
I'm sorry, say that again.
you use TradingView, I think, or
Yeah, this is
yeah,
TradingView.
yeah. There's a lot of coding. A lot of people have like tools
Yeah,
for it.
so if you have, like, for example, let me share my chart. You can have things. I don't know if this is what Seekin's talking about, but like you have, obviously, you can see that I use quite a few different indicators, but you can even have something like, hey, bull flag. Where'd it go? I think
Yeah,
I
they have
just
good
had it there.
pattern.
All right, so it's like, you
coding.
know, you can, and so it's like, hey, is this, but again, it's like, man, I don't know. I don't want to rely on someone else's, but like, hey, is this a bull flag? And like, I'm not going to lie. I don't really see
That's
the
the
bull flag
whole.
there. So,
You're actually making a huge thing that is actually, it's like a whole chapter in my CMT studying about what you're talking about right there, Zunaid. It's that a lot of times patterns aren't defined to a point that everybody can know that the pattern exists, right? Like where Zunaid can say that's, yes, that's a flag. I can say that's a flag. Ryan can say that's a flag. Why? Because the pattern would be what's called, it has defined points. A lot of
yeah.
times patterns are really kind of subjective versus objective. And if we're looking for an objective outlook there, well, that's not going to really help us if we're using a subjective pattern. So sometimes you got to just define it for yourself. That's how a lot
Yeah.
of people end up doing it. They defined it for themselves. And what Zunaid's showing is there is that someone else defined that. I don't know how they defined it. So maybe
Yeah.
I'm going to get fooled there because I don't have the full understanding. So actually a really big thing in technical analysis.
If you've got indicators that you're using, Seeking, that you're happy with, feel free to DM me on Twitter, man. You see my handle right there. I'm always open to looking at different things to see how I can improve my trading. Baba, by the way, went ahead and cracked. I'm going to go ahead and now add 100 shares because I'm a degenerate. Or excuse me, I'm going to add 50 shares. Come on, short it real quick. There we go.
The crow saying it's a nice change from day trading and having my capital work for me. That's one thing that I realized. And the crow, one thing that I realized is trying to mix some of that day trading skill on the hourly to get a really nice entry and then swing trade. That's when I was really killing it, the crow. In the bull market, I was getting to the point I was like, do I really even need to be here anymore, guys? I could maybe do this full time.
Let's go.
And then of course,
Whoa.
November came around and I was like, yeah, let me calm myself down.
Yeah, you got a little bit of humbling going on right there.
You've got, real quick, I'm in some Tesla shorts here, but that's already puking, so don't try to trade that one until it comes back up to maybe test VWAP. But here's the SPY pushing to the downside, looking to test low date. We'll see if we get a bounce there or not, just like that, Mitch. And you've got futures testing the lows here as well in this range. Let's see if this now ends up being the basis of a support for the futures. And if we continue getting a bounce, and there is XPEV looking to make possibly lower highs. And again, I'm going to go to make the mistake of shorting it. I'm already short Baba here as well. We're already in the money, but I'm looking to get about 40 more cents on this trade. Hopefully it works out in my favor. If not, what a surprise. If you don't understand the indicators yourself. Yeah, I definitely understand the indicators. For me, it's more so of like, I love automation. I believe in saving time where you can. So yeah, if I know that, hey, I would manually have the same exact look on my chart, then I 100% want it to easily be able to show what's what. But XPEV comes right back up, bounces as soon as I entered, but Baba's looking okay. Would love for a Baba to flush. Now let's check out what Tesla's doing. Tesla, again, crawling right back up. Do you use market orders? It depends. If it's a liquid stock, like you just saw me enter Baba short, yeah, I'm okay with market orders. But when I get in and out, though, you can see I've got my entries and exits already kind of planned out here. I use limit orders and stop loss orders with limit. Don't cry. It'll be okay, Ryan. I'll come back to being a profitable trader. It's fine.
Oh, I'm not crying. You're good. I do want to point out that charge point broke down, right? So kind of happy that I had XPEV up because I was marveling at that, but kind of happy that the trade plan worked. Honestly, I didn't execute. That's what this comes down to. I was waiting for a break of 12. We got 12 and I didn't take it. And now here we are breaking back down. So glad we got out even, glad we didn't take a loss. This went right to my stop, would have stopped me out. It is what it is. Sometimes you're the windshield, sometimes you're the bug.
Yeah, I think one of the things in that charge point, if we can like look back at it now and think about it, is right. You were looking for a breakout, right? You got 1201, at least from what I can see here for a
Yeah.
second. It hit 1201. So one
Briefly.
thing, yeah, really, it might have been even a millisecond that it happened there. It's not that you can sell at 1201, but one thing that I would think about is that if I have a mentality of breakout, right, that to me is what I call a go or no go type of trade. And so what do I mean by that? Go by no and no go means that it either is going to break out there at 12, or instead of being worried about it continuing, if it doesn't hit that 12 breakout, it's a no go, either break even on the rest or stopping out on a level that you can on maybe the pullback. Like in this case, maybe your level is 85, but I think you got in on the 85, right? Ryan, did you get in on the 85?
84.
84. So there you go. Perfect example for me. I probably would have just been like, that one's like kind of go or no go. So in my mentality, and just this is going back hindsight, right? It's maybe it would have been fine for Ryan to like let it go to 12 and thinking, okay, I'm looking for the breakout. So at this point, I'm going to set a stop on my break even and just hands off. Let it break out. It either goes or no go. It either gives you that breakout.
It doesn't. That's exactly
it's either
right.
work or it doesn't. And I'm not going to lose on the trade. I'm just going to stop out on the rest.
So
that's just one way to think about it.
So just to kind of carry that forward, since we talk a lot about process and how we're actually setting that up, when I was unable to get the sell on the breakthrough 12, notice what, let me zoom in here so it's easier for you folks to see. Notice what actually happened here, right? So this is the candle, come on. This is the candle that broke 12 by literally 1 penny, had a high of 1201, happened in a millisecond. You see it was immediately yanked back and closed beneath. The next candle tried to pull, but the buyers stepped in and brought it back up. So my thought process at this point was, well, 12 is going to get retested. So I'm going to stay in for that test. Now we got this. 12 didn't even get there. We started to sell back off. At that point, I was like, you know what? What you were just talking about, it stop at break even. It's time now. We got to the number that we were talking about. We didn't quite get the pop above for the exit that we wanted, but the trade plan materialized as outlined. So at this point now, the responsibility is on me. I'm going to move my stop up. And I cheated a little bit. I actually moved my stop to 1 cent above my buy-in. So I'm saying that I'm out flat, but I'm actually out for a 1 cent gain. That's nothing. I mean, 1 cent gain is absolutely nothing. So in any case, that's what we're looking for. I agree, Mitch. When the trade works, first of all, that's another way to kind of reduce some of the stress, right? Because if the trade works, move your stop up to break even. Now your worst case scenario is flat on the exit. You didn't lose. You took a trade. It either worked or it didn't. And that's effectively what was happening here. But Mitch, that's a really good point, and that's a really good strategy for making sure you don't let trades that go green then go red on you again. That's no good.
Yeah, and one thing that I would say there is that you were looking for a bigger breakout, and when you're looking for a bigger return, we kind of have to be what? We have to either let the trade go and it just gives us that money, or I say we be kind of more risk adverse, because if not, then it could have been more the range style trade. If Ryan's idea was, I'm just looking to get 12, well, then yeah, we could look back and be like, well, you got your 12 and you didn't take it.
Well, no,
but that's not what you were looking for.
Looking to get 12, I would have exited when they were hitting.
Exactly.
When I was looking for a break of 12. And so I didn't do that. We didn't get the break that I wanted. Now I have to adjust my plan. My adjustment to my plan was, instead of stopping out at a small loss, was to move the stop up to break even and take no loss.
Yeah, that's what I would look back on. And the key there is always looking back and understanding it's not a matter of being right or wrong. Probability, right? The probability was there. I understand why Ryan took the trade. Probability seemed like it wanted to get through 12. But then when things go back against us, it doesn't mean that we're wrong on the trade. It just means the trade didn't go in our favor. And I think this is where a lot of traders sometimes focus on right and wrong versus wins and losses. Like, this is a loss on Ryan, and Ryan can always look back and learn from this. And losses don't necessarily mean you are wrong. This is what I'm trying to draw to. And And I think that this is where it's hard to draw to, because traders sometimes consider if a trade plan didn't go right, it just being wrong. And that's not necessarily true, because as long as you executed, I think that sometimes you got to give yourself just a pat on the back, because what you're doing is you're focusing on your discipline and your process. And that's more important than being right. That's what I would say.
All right, folks, I'm going to get rolling and get to my
Perfect.
day job. We will be back at this again tomorrow, right?
Yes, we will. We'll be back
Thursday,
tomorrow. Yeah, we still got a little bit more to go
Have a
to
great
on the
hump day,
day.
folks. Take care, and we will see ya tomorrow.
See ya.
All right, I'll get the boys on out of here, and we'll be getting us to some educational content. Zunaid, you good to get? You're good to hop. You're gonna get out. And you can stick around for another couple minutes.
I'm gonna go ahead and bounce here. XPEP is not looking pretty. I'm probably gonna get stopped out on that. Looks like I got a little too greedy on with Baba, as that one we were in the money for 40-50 bucks. Now we're at slightly in the red by 10 cents or so. But you guys have a great rest of your days. Trade smart, trade profitable, and most importantly, make sure you preserve some capital to fight another day. But Mitch, good luck with the trading stuff. I'm sure it'll be good stuff, man. And I'll see you guys later on. Do you got an interview soon? No, I don't have any interviews this week. It's just been a nice, calm week. So
Yeah, you know, it's December time, and we're getting to that time where people are just taking their all-day time. So I'm sure we'll get some interviews from Z coming soon.
yeah, yep, sounds good. Later, y'all.
All right, have a
Bye.
good one, Zunaid. And now I'm going to get you guys over to some educational content. We've been trying to do this more often, is give you guys some extra, right? Value. That's what it's all about. So we got more here for you. Don't go anywhere, team. I'm going to go ahead and bring up one of my favorite traders. I said it, and I'm not joking about this. Literally one of my favorite traders to keep a close eye on is Christian Fromhertz. Why? Well, big reason is he focuses on sector and industry analysis, intermarket analysis, looking into the market and focusing where the rotation's going, where the relative strength going, and he's a really good trend trader. So let's go ahead. Let's get into a replay from our boot camp. This was Christian Fromhertz, founder of Tribeca Trading Group, and you guys can check it out. All right, let me get this started here.
With my
All right,
background, but
there you go.
basically, I spent a lot of time as an institutional trader.
Check it
with
out,
Merrill
team.
Lynch, which later got bought out by Bank of America. So for a while, it was called BAML. Now then BOFA. I don't know. They seem to keep changing the names of the company. But so yes, I traded a lot of Delta One products, which does not include, when you think Delta One, it's kind of one for one. You know, not optionality, but you know, I have learned and traded a lot of options. You know, as I kind of made that transition, you know, into starting my own company and you know, back into the retail arena. So there's really a lot of good uses for options. You know, I think that options is one of those tools that you have in the toolbox, right? So I'm going to try to come at this from a little bit of a different approach to kind of help a little bit, because you know, I think that there's so many, you know, younger traders that start with options for whatever reason. You know, maybe they just kind of get the little bit, I don't want to say the wrong idea, but it just seems to that it entices the leveraged, and the movement in the options really gets the interest of newer traders. The issue with that is, and I've been through this, you know, I've traded options for a number of years. Believe it or not, you know, just to try to swing trade options is, I think, one of the hardest things to do in the market. It's a lot easier to trade stock because you could be in a stock position and you only have to really get one thing right in a stock position, right? You have to get the direction. With an option position, you have to get multiple things right. And it's really tough just to get the one thing, the one thing right now, which is, you know, is it going up? Is the stock going up or down? But you've got to worry about things like implied volatility. You have to worry about how much time you have. If your trade that you put on in an option, basically, you know, if the stock doesn't go anywhere, right, you're going to lose, right? If you're long a call or long a put, you know, if you're basically just going sideways. And if you like to be patient, right, you can't really be patient in an option position because the meter is always running, right? So, that's a very big distinction. Also, it's very difficult. I've heard a lot of people and a lot of different approaches on this, right? I use stops religiously in my stock trading, right? I always have my stop set up before I enter a trade, right? Not while the trade is going on. I'm planning out, especially in this market, where I'm taking my exits, and I know exactly where the trade is going to go wrong. It's very, very difficult to do that in an option trade. It can be done to some extent, but a lot of times, when you take a stop in a stock trade, normally it's like, hey, it's 2% down or 3% down, so you're not losing that much. But in an option trade, if you decide to kind of, I've heard that people unwind options at a 50%, if the premium has lost 50%, right? But that's huge, right? That's half of your trade, half of your investment in the trade. So, number one, I think that you could structure trades where the position size is very important. I often, when I get newer traders into the Tribeca Trade Group, sometimes when I'm trading options, they'll ask me, well, what's the stop on the option? And I may actually use 0 as the stop, meaning I've sized the trade appropriately. So if I bought a call option for $1 or a put option for $1, I'm not going to take the trade off for 50 cents or for 70 cents. I'm going to just realize that I'm in this trade, and if it doesn't work, it doesn't work, and I lose the dollar. Right now, some people are like, "Oh, geez, that's crazy." Um, that's, you're losing all the premium. But if you think about every time that you put in an option trade in, what's the maximum that you want to lose? Is it $500? Is it 1,000? Is it $5,000? Then you can back into how much your option trade can be. So that helps to kind of think about it in those terms, that basically your premium is your stop. The reason why I don't like to take those 50% stops is sometimes you're in a trade, and there could be something that goes on with volatility. It could be that nothing is really going on with the stock, and automatically, as I just mentioned a couple minutes ago, is that the meter is always running, right? So you will have decay in that option, and sometimes it will go down from $1 to 70 cents, 60 cents, and meanwhile the stock hasn't even moved. So you may take it off, for 50 cents, 60 cents, and then ultimately the stock ends up moving in your direction, but you stopped yourself out of the trade. So that to me is one of the most frustrating things, is that if you're trying to do that type of thing and you're stopping yourself out for 40%, 50% of your investment, and the trade ends up working, right, then you're really shooting yourself in the foot. So I've kind of learned to say, I'll just put the trade on. If it works, great. The premium is my stop. Now, there's a question I see. What about iron condors? Sure. So there's, I always talk about the basics first, and puts versus calls. Just outright, plain options. But yes, I have used, over time, especially when the VIX, which, the VIX is sitting at 20 right now, so it's nice that if you have been trading options, for a while we were in the mid 20s, upper 20s, and that becomes much more expensive to put on, options. So you're paying more in premium. Remember, I'm not going to go over the Black-Scholes model, but it's, you don't need to calculate the Black-Scholes model to trade options, but you should know. It always surprises me a little bit when I hear some, newer traders, inexperienced traders who are trading options, and they don't know what the component of option pricing is. And again, you don't have to calculate by hand like they make you do a little bit in the CFA exam, how to calculate the price of an option. But you should know that things like implied volatility, right, theta, the time, right, a couple of these components are really important to know how to trade options. The other thing too that I find that some traders who are just kind of thrown out there and start trading options is they don't know how to delta hedge, right? So we're kind of, we're going through we're going through earnings season. We're kind of getting to the tail end of earnings season, even though earnings season really doesn't end these days because companies report all throughout the quarter. But in terms of the heart of the earnings season, we've got the retail names reporting now, which always kind of marks the tail end of earnings. But there'll be so many times where I've seen traders put on a call option or a put option, and they're based on the earnings move, they've got a huge winner, and by the time they get to the open or the first 10 minutes of the trading session where the options are really liquid, uh, the stock reverts back, whether or not the stock gapped up and you're holding calls, or the stock gapped down and you're holding puts, and the name comes back. And I always get alarmed that traders don't know how to delta hedge, right? To lock in profits when you have a gap up or gap down by buying or selling stock. So I'm not going to go into that in this presentation because it's a little bit that would take me a little bit too much time. But there's all kinds of resources. The really nice thing is, you can order books. You could attend. You could listen to different webinars on how to do this. You could Google delta hedging. But personally, I would not be trading options if I didn't know how to delta hedge, right? That saves me a lot of times with options, where, hey, I've got a big winner on earnings, and what I'll do is if I'm long a call, I'll begin to short some stock. Versus that, again, I never do it one for one, but I usually do about 50% of the delta. So again, knowing what the delta, how to calculate delta, these things aren't very very important, and actually pretty easy to learn. Will take you about 15 minutes, a half hour to kind of you could read like Investopedia basically on the internet and learn how to calculate delta and learn how to delta hedge. So again, I would make sure that even before you even thought about trading options, that you understand a little bit of option pricing, as well as delta hedging. Too many traders are just given the keys basically to a Ferrari, and not knowing how to drive a stick. All right, so I just made that analogy up. I hope I do that quite a bit. So yeah, so delta hedging is very important, especially when you have earning season and all kinds of gaps, because it's happened to me where, hey, I look like, and it's funny because people do this on Twitter all the time. They start doing victory laps, and it's like they haven't even sold anything yet. But Twitter's a funny space, and that's a whole nother separate conversation. All right, so I've just got a few concepts up here. I'm not going to go through all of these, but there are now that and again, like whenever I talk about a subject, you will find me always talking about some of the negatives first, right? The problem is whenever traders start to get involved in trading, they always have dollar signs on their brain, thinking, how much money can I make? But if you worry about the risks first, right, and you understand the risks, right, then often the profits will come. But you have to know where your risk is. I'm drawing a blank on the saying. I always use sayings, and I forget who mentioned the quotes, right? But there's I don't know if it's Paul Tudor Jones. It might be somebody else who says, the number, and it might be Buffett as well. There's a couple of these sayings that are very close. But rule number 1, don't lose money. Rule number 2, don't lose money. Rule number 3, don't like. So I think that's somebody saying is, or go. Rule number 2 is go back to rule number 1. So knowing, your money, you've earned it. No matter if it was at another job, if it was in trading, you have to protect your money, right? And giving that up, and you will lose money, in terms of learning how to trade a product and so forth. So it's important to give yourself some leeway, but once you're really kind of ready and you're committing a little bit more capital, you really want to understand that you don't want to be losing. You want to be protecting your capital. right? So I always go over the negatives or the risks first, talk about and that's why I have a couple slides up here, the pros and cons. But here's the pros, right, of option trading. Well, it does give you leverage, right? So you can incorporate leverage into your trading for a really fast, aggressive move, which is where you can really make some money in options. Is when you get those fast, aggressive moves in your directions, you can have a home run, right? Very nice. And I know some people probably talking about those, especially on Twitter, where no one ever loses any money. Things like Bed Bath and Beyond and so forth, on how quickly the option premium can explode when you get these crazy moves that we've seen in some of these short squeeze names. Volatility change, right? So you can make money on that alone. And I think that's also what's going on with going back to the Bed Bath and Beyond example. As the volatility changes, right, the option prices blow out, right? So you get that huge move. You get that big gamma move. All right. Another pro is you can only lose the premium, right? So that is, again, as long as you size your options correctly, right, you can own. The only thing that you have to worry about is the premium loss, and that's very big for option risk, right? So many times, and again, like this quarter has been a little bit different, but we have certainly seen some disasters, on earnings quarters past where names have just fallen and they keep falling, right? And if you're owning stock, you could lose a lot more than, hey, if you just lost, if you didn't get the direction right on the trade, you're only going to lose that premium. So it does, your loss is defined there. You can also collar your trades, right? So you could use options, to collar a stock position. So you're limiting your risk. You're also limiting your return in that situation. You could also sell a little bit of premium, right? We see that a lot with option flow. We continue to see a lot of put selling in Apple. But as the market kind of bottomed out, about a month ago or so, I think it's been longer than a month now. But we did see a lot of selling of premium, right? And this way, traders can get involved and they can earn some money where the volatility was really high when the VIX was pushing around 30 or even higher than 30, and traders wanted to get involved in names, and they're taking advantage of that heightened volatility to kind of collect some premium and knowing where they ultimately would get long the stock by, let's say, selling puts. Right? You can increase your yields, of course, by covered calls. Here's a good place too, right? I mean, we're at the 200-day moving average in the S&P. It depends on what your viewpoint. If you think the market's going to stumble around here, you can hold your stock and maybe sell a little bit of premium against it. Spreads are something that I use quite a bit, right? So I think in the chat over here was mentioned about an iron condor. That is a form of that's actually two spreads, combining them, right? Selling a put spread, selling a call spread, right? And earning the premium. That's very good if we're dealing with sideways markets, or if a stock is in a sideways pattern. Right? That's a great strategy for that. I sometimes use those, although I haven't really lately for earnings. But sometimes if the implied volatility is jacked and is much higher than the stock's historical move, an iron condor comes into play. But I really just like to use call spreads a lot, put spreads. They really kind of, in some of these names that the implied volatility is so high that it will really cost you a lot if you don't get the trade right. You can basically make that into a spread, a debit spread, where you're buying the closer to expiration call and selling a further out call, right, to collect that premium. So I do a lot of $10 spreads. Sometimes I do $20 spreads, but for the majority of time that I'm putting on some spreads to exploit a move, I usually like to price out like a $10 spread, right? And I usually like to try to pay for that for under 350. So again, $10 is the most that you can make when you put on a spread like that, and I don't like to go over 350 because you're giving away, you're giving some of your reward, right, when you go over well, anytime you're paying out for premium, you're giving up some of your reward. But the further that you kind of go into, go higher, for a $10 wide spread, you're really starting to eat away at your return. Any questions so far? I don't want to, I like to have some interaction in my presentations, but those are really good. I mentioned, so whenever if I'm going to play earnings, usually what I'm doing is I'm doing a spread, right? I'm doing a call spread or a put spread, probably 90% of the time for my options trading. Trading around earnings, it's going to be a spread because, as you're probably aware, the implied volatility is just super super high. Yeah, sure. I mean, there's one that I was just actually talking about for a spread. So if you look at, and you could do these not just for earnings events, but you could do these for other type events. So Generac, right? Anybody, what is sometimes you associate Generac with? I'll even give you a hint. What season is does Generac really work? A trade in Generac really work? Anybody have any ideas? Just gonna close my door while you guys ponder that. No? Any takers? What season that's coming up? There's rain, there's wind, there's all kinds of things that go on. Yes, hurricane season. Yeah, so Generac is thank you. Generac is one of those names that works really well around hurricane season, right? If there is the potential to get a couple hurricanes, ones that hit the Gulf, that type of thing, you will usually see names like Generac, names like Home Depot. They will rally into sometimes and again, it's just like anything else. Sometimes it's buy the rumor, sell the news. Sometimes once you first start to hear about a hurricane coming, right, is the time to put the trade on, right? The actual event, something, because again, a lot of times it's the precautions that we hear, and you hear about, that, oh my God, this is going to be a horrible hurricane. And this is, a good thing when it hits landfall. Sometimes it really, fizzles out and is not as bad as what they originally predicted, right? So I always want to be basically putting on that type of a trade, as the hurricane is gaining strength. Once it actually makes landfall is when I actually want to take the trade off. So Generac is something we had an idea about this, and so the issue with Generac is the options are pretty expensive, right? So um, hurricane season is somewhere between, I guess, now September, October. So if you looked at the Generac options, and I think I structured my trade a little bit too soon, because you could see that Generac has been selling off here a little bit. But if you looked at, let's say, the September 280 calls, right, which would get you basically here, right, and that's about $30 away, right? That's not a cheap trade, right? That's going to cost you about six. It's going to cost you about $6. So if you wanted to exploit, a hurricane type trade, it's not going to come cheap, right? So what I would be basically looking is for, and a lot of times I look at my technicals to help me structure the trade. There's a version point of control up here, which indicates overhead supply. So you could look at maybe something at 280. You could go 280, 300. So you could you could buy the 280 call for about $6, right? And you could sell the 300, for about 250, 260. So you're really reducing your cost, right? You're reducing it by about 50%, right? Now you still have, because, these trades, like, Generac is not probably won't go up 100 points, but it may go up to 20 or 30 points. So, you could put that trade on for, how much did I say? I said 280 calls, right? Minus the 300. So 280, 300 September call spread minus, let's say 260, right? Oops, put the 260 minus 6, right? So you're putting that, so the most that you can make, so how much is the most that you can make in that trade, right? If I'm putting on a $20 wide call spread and I'm paying about 340 for that trade, right? Anybody want to just quickly do the math on that? Yeah, also helps with the yeah. So I like when you've got multiple catalysts for trades. All right. So for lack of time, I will give you I will give you the answer. But whenever you're looking at spreads, right, you always want to look at the width of the spread minus the premium that you're paying, right? Again, always want to think about these things before you put the trade on. Yeah. So it's three. So it's about 340 to structure that trade because again, you're buying the 280 call, you're selling the 300 call for September, right? You do the math on that. That comes out to be about 340. Amy's got it. Perfect. Thank you, Amy. So that's the most that you could trade. That's not the most that you could trade. That's the most that you can make on that trade is 1660 net. Okay. So if you multiply, the or divide 1660 by your 340, right? That's a nice looking trade. Yeah, you can make about almost 5 times your money on that trade, right? So you're defining your risk, you're lowering your risk, right? Rather than paying, $6 for a trade, which again is quite expensive for a short term option. Again, September's short term because after Friday, that September is going to be front month, right? So that's where you have your biggest theta decay. So you're really reducing your cost, and meanwhile, you still have a nice reward on your hands. Yeah, exactly. um, you could, I mean, and that's another way that you could structure the trade. Yeah, you could get fancy like that, and you could sell a put spread, right? So you could actually lower your cost even further. You are increasing your risk when you do something like that because let's say there are no hurricanes, right? The stock may continue to kind of move down, right? So you are increasing your cost whenever you do something like that, but you could really reduce your capital outlay so that you could almost make it like a zero cost trade by buying a call spread, selling a put spread. And if nothing happens and the stock goes sideways, you have very little capital outlay. But again, I'll say that again, if the stock goes nowhere, if the stock goes down, then you've got risk. Um, there was a question in here about implied volatility. To do an option, what is the best implied volatility, right? You really want the lowest. So again, this goes back to understanding option pricing. It's a great question, but please, go through and read a little bit about option pricing. But the if the lower the implied volatility, the lower the premium of the option, right? So there's about for whatever reason I can't think of the exact number right this second. We can certainly walk through them, but there's about 5 different things that go into what goes into the price of an option. It's your time, it's your implied volatility, right? It's your strike price, right? So those things. So I mentioned in there is implied volatility. The higher the implied volatility, which is generally higher when you've got an event. So if you have earnings, for example, you will notice that the price of the option is much more expensive. That's because of the applied volatility, right? You've got an event that is a big unknown event, and the price will go up. It's the same thing that we've got. We don't have a Fed meeting today, but we've got Fed minutes. This happens more so when you've got a Fed meeting, right? Options are a little bit pricier going into a Fed meeting. Why? Because there's a big event that's coming out, right? And it's whenever I say event, it's an unknown event, right? So the options market makers are going to make the options more expensive because there could be a big move that happens because of that event, right? And then what happens after the event, whether it be earnings or the Fed, you get what's called vol crush, right? So that implied volatility will be very large before an event, and then after the event, it will come down a lot, right? Because again, you have the there's some probability that there may be a huge move on earnings. Okay, so again, that's just a little bit about option pricing. All right. Any other? So again, we're going to be coming upon the Fed minutes. I again, this is kind of just the basics that I'm just kind of covering of options and just how to structure them, right? I talked a little bit about stocks in the beginning of this. What's the pros of stocks? If there's chop in the market where we're going sideways, it's no problem owning a stock, right? You can own a stock for as long as you want. Obviously, there is some opportunity cost in there, but you're not getting dinged because of the theta decay, right? You can set it and forget it with alerts. So in any event, I like to make sure, right? It's very important that you understand the difference between the pros and cons of option trading, as well as the differences between owning stock versus an option, right? So the other thing that I mentioned in the very beginning of this, it's another tool in the toolbox. There's too many times where I see traders saying, "Oh, well, I'm an options trader or I'm a stock trader," right? You should be able to do both, or at least even if you're mainly, if the majority of what you do is stock trading, which right now the majority of what I'm doing is stock trading. But every once in a while, I do want to exploit some type of a move, right? Or if there's an event, and I just want to basically try to participate in the earnings, or I want to hedge myself because we've run up a little bit too quick in the market, and I think that we could see a turn back the other way. Options are very, very good for having that. But and at the same point, if you're just, for whatever reason, just trading options, you're increasing your odds for probability of profits if you know how to trade stock as well. So I think that's the kind of the wrapping that up very quickly.
Not a worry. I just wanted to jump in here and make sure that we could get you on out of here, Christian, before the minutes hit. But I do want to take a quick second to take a look at Tribeca Trading Group. Definitely, I want you guys to check this out. I put the link in the chat. Go ahead and check out. As you guys can see, looks like Slack to me, but I won't say that's Discord. I'm pretty sure that's a Slack there. And you guys can keep up with the elite member trade alerts. What I love is that it's a mix, right? What you guys do is generally swing trading and day trading, a little bit of a mix there. Is definitely what I have found has worked for myself. So I understand why Christian's going about it in this sense. And it's definitely fun to keep up. What are some of the features that, let's say, if you watch some of these market recaps, what else would a member get if they were a part of Tribeca Trade Group?
Yeah, sure. And just to touch upon, thanks for mentioning that. But yeah, I think no matter if you're trading options, stock, whatever, to be very flexible in this market, right? That's something that we try to be, and that's sometimes why I'll day trade more. My bread and butter is swing trading, but a lot of times this year I've been day trading because you just have to go where the opportunity is, right? And be flexible with what you're getting. But traders can see basically, my trades real time. I report my P&L. I'm very transparent. I think that if you're running a service, which I am, you want to be transparent with your customers about what you're doing, how you're doing, and where your struggles are, where you're doing well. So, traders can see how I'm doing on a day-to-day basis. And, I try to give as much in terms of, theory behind my setups and why I'm doing it. Every time I take a trade, I've got, I let you know where my stop price is, as well as where I'm thinking about taking targets and so forth. And really right now, just staying flexible and nimble in this market is key.
Definitely, I agree with staying flexible, and I agree. You have to have some multiple tools in the tool belt. And even myself, listening in on the presentation there, Christian, I'm taking notes myself. I'm like, well, I do a lot of equity trading, and I dip and dabble in some options, but I need to do a little bit more in the sense of trying to hedge certain moments like you talked about, where that there's a little bit of a turn. You don't think that it's going to come completely against, but there are definitely ways of staying in positions and taking away some of that risk. So appreciate you like always. If you guys haven't followed Christian Farmers, even on just Twitter, I would definitely suggest you do that. We put up the link there, and I'll let you get on out of here. 2:00. Get on out of here, Christian. Go check those minutes.
Appreciate it. Good luck, guys, and thanks for having me on.
All right, team, how we doing out there? Hope you guys enjoyed a little bit of Christian Fromhertz. Of course, he does join AB sometimes on Benzinga Live. I don't know when his next appearance is going to be. Maybe you guys can ask AB coming up on Benzinga Live when we're getting Christian Fromhertz back on. But I hope that you guys enjoyed learning from him. One of the things that I always like from Christian Fromhertz is his recaps on Twitter. So definitely give him a follow. Let's go ahead. We're going to bring you over now to Benzinga Live. That's going to be starting up in just a few seconds here. Taking a look into the SPY. The SPY is around 395. Getting a little bit of a bounce. We'll see if it can continue bouncing on the day. It went down towards a low there of 393.76. And of course, 1:30, you'll get Jerome Powell speaking right during Benzinga Live. So stay tuned. A lot to talk about with AB. That's coming up next. But of course, I'll get you guys over and get you to Benzinga Live. Now, one thing I want to tell you guys before that, of course, is the Future of Crypto event. We've been talking about this. It's going to be next week. We're finally here, December 7th, 8 a.m. Eastern, Pier 60, New York City. One of the best views that you can get in New York City. Come out here towards the Future of the Crypto event. I'm going to throw up the link in the chat and then throw up the video, and we'll get Benzinga Live started right now.
What? Ooh, whoa, what is up, everybody? Don't laugh at me, Sophia. I didn't know that was going on. Happy Wednesday, everybody. It's hump day. That's our favorite day here in the Benzinga office. Hope everyone is having a great day. Kind of a little gray outside today, a little bit, but hey, we're here. We're kicking it. Let me go ahead and pull up my Benzinga Pro. We'll go ahead and roll through some stocks, ones that I've been watching today. I saw Natty Gas futures getting absolutely hammered before I hopped on the show today. I don't know if we've got any energy traders in the chat or anyone that's watching Natty Gas or other energy, but we can go to XLE is doing a little bit better than actually the XLE is green. All right, so XLE is green. Let's see. That must mean the oil stocks are doing all right. Yeah, Chevron, Exxon are doing okay, but again, the natty gas names, if you go to the UNG, United States Natural Gas Fund, getting absolutely wrecked, down 5%, LNG, Cheniere Energy, up, wow, that's something. I don't know, well, why is that down so much? The futures of the actual commodity are getting crushed. I'm surprised to see Cheniere trading the way it is, but quick rundown for the show today. So we're gonna touch back up on the newest developments in the Twitter Elon Musk Tesla saga, because it does seem like more and more analysts are starting to come out. Actually, some are getting a little bit bullish on Tesla, saying, okay, these Twitter fears are starting to weigh down the stock, maybe a little bit too much. So I do want to talk about that. We will also, of course, be talking about a little Jerome Powell preview. Jerome Powell will be speaking at 1:30. It's not exactly a FOMC, press conference or anything like that. It's at some sort of conference or something, I believe. Let me go ahead and pull that up. A little preview that we've got going on here at Benzinga. Then let me know in the chat, of course, what stocks you guys are watching. Are you guys looking at any trades? Are you guys looking at anything? All right, yeah, here we go. Let me go ahead and share. Shout out Bavik, who got this article out. So yeah, he's speaking at the Brookings Institution, like a think tank in Washington. Kind of Brookings. I don't know. Brookings has had a lot of influence in Washington for a long time. I don't really know what to think of them. I don't really know what to think. I don't know what I think about really any of those type of like think tank type institutions. Really, I don't know what the best like things that have come from them, what the best developments, what the worst things are. Like I don't know. I kind of see them in the same vein as like the big consulting firms. But anyway, it will be interesting to see what Powell says. We had Elon Musk on Twitter basically calling for what's up, Blonde Broker? We've had her on the show before. Elon Musk is was tweeting that the Fed needs to reduce interest rates. Where is this? Where did he delete that tweet? Did Musk delete his interest rate tweet? Oh, yeah. Fed needs to cut interest rates immediately. They're massively amplifying the probability of a severe recession. So trust me, I don't think I don't think Powell is reading Elon's tweets and saying, "Oh, Elon says I got to do this. That means I got to do this." But the more and more you have business leaders basically saying we are going to be screwed, I do think eventually the Fed's going to have to respond to that. And you have, Professor Siegel, the Wharton professor, going on CNBC, and he's been talking about it. And it is surprising to see him and Elon kind of agree on something. They're both saying basically the Fed needs to cut interest rates. Well, I'm pretty certain we can go ahead and check this over here on our watch tool from CME that just shows us the probability of the next rate hike, and they're using bond markets to find this. Basically saying 70% chance, 7 out of 10 times we're going to get a 50 basis point hike as opposed to a 75. I would see that as bullish. Of course, that means we're still going to be raising rates, so it wouldn't technically be a pivot, but I've talked about this on the show before, why I would see that as a more bullish move, at least slowing down those rate hikes. And I do think what will be important today with Jerome Powell in his speech at 1:30 is going to hear it. Has his tone shifted even in the slightest? If he's talking about, of course he's going to still say, we're watching inflation and we're worried about inflation. Of course. But if he even starts talking about, the idea of being able to start bringing down rates or whatever, I think this could be the first time this afternoon that we really, really get some sort of a type of tone shift. And I don't think it'll be a big tone shift. I'm not saying we're going to come out here and hear a big dovish Powell. No, I'm not. That's not what I'm saying. But I think there are a lot of investors that want to hear that. And it might be one of those things where when they want to hear, you hear things you want. It might be one of those things you want to hear things. Oh, what is up with the big meta? Are we just getting a spike in SPY overall? Yeah, we are. We are indeed. I don't know. I don't know if there's. Let's go back to Benzinga Pro because we'll actually get our news feed. But yeah, so Powell is going to speak, and we'll talk more about that exactly, why I think that could be the case. And it's not just going off nothing here. Or going off gut, but I'd be lying if I said that wasn't part of it. All right, Meta. I think SPY's just spiking. Meta's kind of been oversold the past few days, so it makes sense. I'm trying to figure out something. All right, guys, come on, chat. Let me know what stocks you guys are watching and what trades. I'm gonna. I just realized we never played our Benzinga Live intro, so I'm gonna go ahead and play that. And when we come back, I want to see some stocks flying in the chat, some trade ideas that we can talk about.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
Alrighty. All right, so I mentioned, I don't think, I'm not saying I think Powell might sound a little bit more dovish today, basically going off of nothing. The biggest thing the Fed has been worried about, obviously, has been inflation. And I said yesterday, look, I had been wrong before in kind of calling a top of inflation. I'm not really going to call a top of inflation, but I'm going to say now more than ever, even than 2 months ago, it looks like we have made significant progress on inflation. Gas prices now continuing to drop. We did this drill yesterday. The most, the average or the most common price listed at the gas pumps across the country now is under $3. The average is kind of thrown off because you have so many people, in California and New York where gas is still more expensive. But for most people, or sorry, for the most common at gas station prices listed now is under $3. Gas, we compared the year ago gas price, $3.39 compared to $3.49 today. Not that big of a difference, right? Only a couple percents. Yeah, Andrew, of course. I mean, oil's going to go down, it's going to go back up. It's going to fluctuate like it always does. And actually, I do think, oil, crypto the only. We can talk about that too for a second, because that actually is a really cool, economic mechanism, the way that Biden and the White House was kind of using, strategy to really bring prices down. And I think that's like a textbook example of how the government can properly essentially intervene in markets to actually help. Like if they didn't do that, essentially, like we'd still be paying more for gas right now. And that kind of goes against the notion that, like, laissez-faire, if government stays out of it completely, things are going to be best for the consumer. It's more moderate than that, right? If the government has too much power, that's bad for the consumer. But the opposite is true too, at least in my opinion. And I think there's a lot of facts or instances in history to back that up. No, Kyle. Well, here, I'll find the tweet. I believe it was from Gas Buddy Guy. It was under $3. Yeah, here. I don't know exactly where. News: the most common gas prices across America is $2.99 per gallon. I just searched $2.99 because I saw that earlier. From here. Gas prices are still falling. Here's the latest from Gas Buddy Guide. National average, most common, $2.99 a gallon. So yeah, I mean, like, what's his name? Krugman posted something about rent today. So I've talked a lot about this, about inflation. I mean, Kyle, I don't know, like the Gas Buddy guy, that's literally his job. Like, you can go on his Twitter, that's what he does, is he tracks gas prices all day, every day. So if there's one person in the world I would trust about what the most common gas price listed in the U.S. is, it would be him. And just anecdotally for myself, I will say, like, I'm in Michigan, and here I'll go back to the gas prices. Ooh, no, I almost just screwed up. I'll go back to the gas. It is surprising to me, I would say, being in Michigan, just kind of like in the Midwest, how expensive gas is here. Like, you can see it's not as obviously as bad as California or some out here in the West, but it's still higher than the average. And we were paying like $4.50 in Michigan like a month ago. I was back home in Missouri over Thanksgiving, and gas was below $3 in certain areas. And I was like driving by, seeing like $2.99 at the pump, and I was just like I was just shocked because I hadn't seen that in Michigan in like a year and a half. So I am not too surprised. I was like surprised initially when I saw that. Really, $2.99 is the most common. But then when I the more I thought about it, the gas prices I saw down in Missouri when I was home. I mean, shoot, if you're in Texas, there are probably some counties, right? You're looking at like $2.70 right now at the pumps. So I don't know. I mean, again, if there's one person I would trust when it comes to gas prices, it would be Gas Buddy Guy on Twitter, and I believe we've had him on the show before. But anyway, so another point that we've talked about with Northeast is way higher than the average, and West Coast is as well. I mean, the cheapest gas is going to be in like the middle of the country in Texas. All right, so if you're in Missouri, Oklahoma, Texas, your gas is going to be a lot cheaper than New York or California. One thing that I've talked about a lot on this show regarding inflation throughout the last year or so is that through like the CPI reports that we've gotten, when you start digging in them, it's typically certain aspects that are driving inflation more so than others, right? If you think back to like a year ago when we were first getting the super hot CPI reports, things like lumber and well, actually that wouldn't be in the CPI report, but like there were different things, new and used cars, right? Used cars were like absolutely insane. What's the Manheim used car index? Ooh, where's the... So, like, yeah, if you go back to, I don't know, like this spike up here at the top, those were two of the things really driving CPI higher. And then, you know, flash forward a little bit, like those prices start to normalize, and it's food, right? And then it's gas and food. Recently, one of the biggest drivers of inflation in the most recent 2 CPI reports has been rent. And that has been a big problem for a lot of economists because they see rent as a more sticky type of inflation than other things. I mean, if you think about it, right, like the price of eggs can fluctuate pretty easily. You sign a year-long lease at $1,000 a month rent, that's your rent. That's just what it is. It's not going to go... It shouldn't go up, hypothetically. It could, I guess, depending on your landlord, but it's probably not going to go down, right? Your landlord's probably not going to call you and say, hey, I'm knocking $200 off your rent this month. I don't hear about that happening all too often. Which, you know, if rent was really a free market type thing that fluctuated with the price of properties, it probably should go up and down, right? You could argue. But again, I've only heard about rent really being raised. This is a chart from Apartment List. I guess that's a company. Month over month change in national rent index. So, Krugman points this out that there is in the October, November, December months, as you can see here, because every little, I'm touching my screen as if you could see my fingers right now. Where my cursor, you can see my cursor. Each one of these little, like columns is a year. So from this line to this line is a year. You can see every year on the back half of the year, or on the last 3 or 4 months, there's a drop off in rent. Boom here in 2018. 2019, 2020, there's some an anomaly with COVID. 2021, real estate market super hot. I mean, look at this rent increase. That's the thing, though, with inflation, is that there's always going to be, or no, I shouldn't say always, but like any time you have kind of a parabolic move like this, there's probably going to be a reversion to the mean. And you're seeing that here right now. Look at the last 3 months here in 2022, way bigger of a drop-off in rent prices than you can even explain with seasonal factors. So Krugman's saying, yes, like typically you'll see rent dropping in October, November, these months, but this year has been much more than others. And I'm seeing that as a great sign for CPI, because if we're already seeing that reflected, just think about what it's going to look like 6 months from now. I mean, with interest rates rising, mortgage rates, you know, when they hit 30-year highs or whatever, it's like, that eventually that trickles down to rent prices, the property value, but it takes longer than other areas. So the rent driver of CPI has been the biggest thing that I've been worried about in regards to inflation. And seeing this data that it's already starting to come off a little bit is really good news to me. Again, I'm not trying to say like, okay, this is for sure the sign that we've seen top in peak inflation. If you put a gun to my head and said, do I think we've seen peak inflation on this like inflationary cycle? Yes, I do. I don't think we're going to go back to the 9% year over year or whatever we were at. And I think it's reflective in a lot of things now that we're seeing that prices are starting to normalize on a kind of year over year basis, gas being one of them. But there are a lot of areas that still haven't, right? Food, for whatever reason, has remained very, very expensive. And I think people are, it's not fun going to the grocery store and seeing how much, stuff is right now. So Bureau of Labor Statistics Shelter lags these numbers because of leases. I didn't even see this, but that's exactly what I was just talking about. But we're clearly set for large declines in core inflation over the next year. Waiting on Friday's wage numbers, but if we accept that 3% is the right target, we might be very close, maybe even already there. So, and here's what I think too, is that I think it's also time to start, or I would like to start to see the market reacting a little bit differently to things like wage numbers and jobs numbers, because if like Paul's saying he's looking forward to Friday's wage numbers. If those wage numbers are good, it's very possible the market could be down because it's seen as more likely then that the Fed will need to, or that it can keep raising rates. I really think, though, the more that our economy shows signs of strength, i.e. added jobs or wage growth despite rising interest rates, that all that is just more of a sign that a soft landing is possible and should probably be seen as more of a bullish sign than a bearish sign. Now, the market's obviously not rational, and I don't think that's what will happen. And honestly, I'd be surprised if we were able to add jobs over the last month, considering where interest rates have gotten to. I believe Powell's set to speak at I thought it was 1:30 p.m., but it could be 2:30 p.m. Let me go ahead and get. Oh, here. Let's just search. We can just search Powell on Twitter. Yeah, 1:30 p.m. Eastern. So here in about an hour and 40 minutes, Jerome Powell will be taking the stage. Huh? Oh, we're gonna be streaming it on our channel. You won't need to go anywhere. Woo! All right. Let's see. Catching up on the chat here. That rent percentage is way off in Arizona. Rents went up way higher. Yeah, I mean, yeah, we found him. We found him. Don't worry, Shelly. Do not worry. Let's go to benzinga.com, see what the top news stories of the day are so far. All right, Amazon. You guys want to see what the best-selling things on Amazon were? I'm going to buy some, I might do something stupid here. I'm going to buy some calls that expire tomorrow on this SPY. Just play for a little bounce this afternoon. I deployed some capital. I'm saving some in case we get, like the market kind of sells off into Powell, then I can buy some more for cheap. I don't know. I mean, if I say this, like the smart thing for Powell to do would be for him to do the exact opposite what I'm talking about and just to remain as hawkish as he's been, say no tone change. If I'm him, I don't want to see the market moving up. But, I mean, the market has, like, where are we at on the S&P 500? I mean, we're down 1% on the last 5 days. We're up 2.3% on the last month. So it's not like we've really we haven't really rallied from anywhere. Like we went from lows in October. We're up about 10% from there. But no matter the time frame you look at it, it's not like the market has posted any meaningful returns, right? Like I just said, down 1% the last 5 days, up 2% the last month. I guess that's actually pretty strong because if the SPY went up 2% every month, it'd be up 24% a year. I would take that. You would take that. Everyone would take that. We'd all be rich if the SPY just went up 12 or 24% every year. Down 4.3% the last 6 months. So from 6 months ago on May 30th to now, you're still down more than 4%. Year to date, you're down more than 17%. 1 year, you're down more than 13%. And on a 5-year basis, you bought S&P 500 5 years ago, December 1st, 2017. You're up now less than 50%, which is pretty normal, right? About 10, it's 49.5%. So right under that 10% a year for 5 years. And that's, I think, what a lot of people were looking for when the markets got a little overextended after COVID was because there was a point where, your 5-year returns or your like 1 year return on the SPY was like, like 80% or something ridiculous when the market got so high that there had to be some sort of reversion to the mean, right? The SPY can't go up that much. Wait, calls just ran. Wait for a dip. Yeah, you're right. I think I probably should have. I don't know. The S&P, I didn't get in, right? I got in like a little bit after already a little bit of a dip, but it does look like chart-wise the S&P 500 could fall further here. I don't really know. Again, I'm literally YOLOing a bet essentially that the market will go up like tomorrow. Like it's literally a bet. And I'm using money that I won on a real bet, on a sports bet yesterday. So again, don't think of this as any sort of like investment type thing. I'm literally just kind of YOLOing, having some fun. I got really, really cheap ones. I got SPY 404 calls that expire tomorrow afternoon for 32 cents. So essentially I need the SPY to like actually like rip, not even just like go up. I need it to go up like 2% in between now and tomorrow afternoon, which is certainly possible. It's not, I wouldn't say likely. Otherwise the calls wouldn't be so cheap. But I did it. So, trust me, I literally threw like $90 on it. I bought 3 contracts, and it's not that much money. And again, I bought it with sports bet winnings that I hit yesterday on the U.S. soccer game, and that usually doesn't happen. I actually had a really crazy day betting. It was fun. It was fun. I had a parlay with the U.S. men's soccer team and then the Mizzou basketball team at night against Wichita State, and Mizzou was losing by, I want to say, 9 points with like 7 minutes to go, and ended up coming back and winning the game in overtime, and it was just a very like thrilling game. And I had an option on my sportsbook app because I had the USA game, which was way earlier in the day than the basketball game, that I had an option to cash out the bet like for winnings before the Mizzou game even ended, and I wanted to I was like, I'll just ride it out. It's not that much money. How do we feel about Michigan State tonight? I don't know. Let's go check the line. Bovada basketball. I did. Oh, also the Michigan basketball game. That was a brutal one last night. Michigan was beating Virginia by a bunch, and gave up the lead there. Where is Michigan State? Why is it not listed on here? Oh, here we go. Michigan. Oh, it's a late game. Michigan State at Notre Dame. Ooh. What's not bad, actually? I like... Let's take Michigan State -1.5 and the over. A little parlay there, plus 264. Throw 100 on it. Get 364 back. Easy money. All day. Every day. Here's the thing, is because, like, I think here's the way I interpret this, the lines. Michigan State is the better team. They're ranked. Notre Dame is not. Michigan State's basketball. I haven't seen. I watched the only game I really watched was when they played Gonzaga on the ship, and I don't even think that really counts because it was on an aircraft carrier. I haven't watched any Notre Dame, but when I see lines like this, when I see a line where like a state like or a school like Michigan State is a slight favorite on the road, that's showing me, because I think like a lot of people will see Notre Dame at home. Okay, it's supposed to be a close game. I'm gonna take the home team. I think this is Vegas saying that like Michigan State probably really should be like a 3 or 4 point favorite, but the fact that it's at Notre Dame, they're giving them, that comes down a little bit. But I mean, look, it's supposed to be a toss up. I'm gonna go with Michigan State. I'm gonna go with my boy Tom Izzo and let it ride. Holy shit, I didn't see Baba up 9% today. I did talk about the bull case of Chinese stocks on the show last week. I'll say it right now. We've seen Baba make some crazy moves in the past couple weeks. It got, we'll go to the daily chart here. You can see like had this huge spike up where it went up, 8% in a day. Got up to about $85 and then sold off back down to $74 in like a day. Like literally went down $10 in a few days, and now we're spiking back up. I wouldn't be surprised to see another pullback here, but like you zoom in, right? And it looks like you're like, oh my God, this thing has gone up so much in just a few days. Like, I can't buy it. It's so overextended. And on a short time frame, you're probably right. It probably is getting a little overbought. But zoom out and look where we are. Like, this little move is what we're talking about here compared to this move. So again, on a short time frame, I would be very wary and very scared to buy BABA after it was up. Well, actually, wait. Did it even close up yesterday? Because BABA was up like 5% at one point yesterday and then closed. It actually closed lower than it opened. But at one point... Okay, it closed lower than it opened, but the open was still higher than the previous close. Okay. So anyway, this thing has gone up a bunch in 2 days. And... I'm bullish. Like, long term, I'm bullish. Short term, I'd be scared to buy this. That it's going to be a little overbought up here. But look, shares of Chinese company are trading higher amid reopening hopes after. I'm not even going to try to say that. Guangzhou. I just said I'm not going to try to say it, then I try to say it. I don't know why. Reportedly relaxed restrictions in some districts. China has also aimed to boost vaccination efforts to avoid further lockdowns. So we touched on this yesterday. Shelly was asking about what China announced. They didn't announce, the CCP did not announce essentially like the end of the zero COVID policy or anything like that. And I was very skeptical that they were just going to cave to the protesters like right away. But what they did do is say they were going to start focusing on a lot of these other things, like getting more vaccines, doing this, doing that, to help get the country closer to that point of being able to roll back some of those, policies. So I don't know. I mean, it will be interesting, I think, to see what unravels here with China over the next few months, really, because it will be a very pivotal time with all the civil unrest and protests going on. But I think I made this point yesterday. I made the point, or I'll make the point again. Investing is all about weighing your risk and your reward, your potential, or your risk versus potential return. And I do think right now the potential reward here with buying a stock like BABA for the long term, if you're willing to hold it for 2 years, for 3 years, outweighs the risk. And part of it, to me, is because part of the risk of holding a stock like BABA is if something falls through with U.S. and China relations. And my point is, if that happens, the stock market's screwed anyway. Will BABA fall further than the S&P 500 if China and U.S. relations kind of deteriorate? Yeah, 100%. I'm saying if you're holding SPY will probably drop a bunch too. So I'm saying like that risk is kind of offset there, and I think that's not as big of a risk as people think it is. I don't think that's really on the table. I think U.S. and China relations are going to remain fine. I think both economies know they'll be in a lot of trouble, at least in the short term, if there is something that happens to that trade relationship. And that BABA is a monster, and a lot of these companies are monsters. I mean, if there's one name I want to own out of these, it would be BABA for sure. But yeah, I mean, even something like the CQQQ down here. I mean, like you're going back now to... You can go back to December 2018 levels. And trust me, I get it. I'm not saying I don't think there's more risk than in these Chinese names than different U.S. names. I understand that. But I think because of how much these names have drawn down, because of how scared people are about these names, and because of the fact that the Chinese economy itself is growing had been growing at a faster rate than the U.S., and it's kind of more of an emerging market still, I do think there might be more potential return there as well with a BABA compared to an Amazon. Like if I had to bet which stock was more likely to go up 100% from here in the next 5 years, BABA or Amazon, I'd say BABA, because all BABA would have to do is get up to 167, which is like right here on the chart, versus Amazon having to double from where it's at now, coming from like a $2 trillion company to a $4 trillion company. So, I mean, if you guys watch this show, you know I've liked BABA for a while. I've been wrong on BABA for a while. I think I always was kind of in the camp that like China will be fine, that the U.S. and China relationship will be fine. And that hasn't obviously been the consensus on Wall Street this year. And I've been dead wrong about Baba, and I think now, again, not today. Like if you were, especially if you were trying to like swing trade or something, 'cause we can go to the RSI here, and just see that this is getting now overbought on a daily level. Not terribly right now. Actually, it's not even up to 70 yet, but it is getting up there, and it's up about 9% today. So I would expect to see a little bit of a pullback, but I think the overall trend is that this thing kind of found a bottom, got some buying action down here, and is now ripping. I mean, I hold my right to change my opinion and to be wrong if this thing goes down. Yeah, I didn't really mean monster in terms of stock price. I just meant in terms of like not even like financials, like revenue, just in terms of I think like social importance in China. Like Alibaba is literally like, I don't even know. I don't think you can compare it to anything in the U.S. It's not like it's like Apple almost. Like it's like everything. Like it's you have Alipay, you have AliExpress, you have Ali this, you have Ali that, you have everything. So I don't know. I mean, I was just saying it's a monster in terms of like how big of a company it is and its reach. And I mean, a lot of China, like I think China, look with just how many people they have around and how many people that China's been able to kind of like lift out of like extreme poverty over the last 20 years. Like Baba's market share has so much more potential to go as different areas of China become more developed. And again, I'm not saying there's not a lot of risk there in China too, because I'm very cognizant of that. Dave saying he would like Neo as his pick. Holy shit, I didn't see Neo up. Well, I know you mentioned it when you mentioned Baba, but I didn't know it was up this much. 16%. Holy cow. Neo, I do like. I mean, I really don't know anything other than Boyd, other than that it's a Chinese electric car company that Warren Buffett's a big investor in, and it's kind of one of those things where it's just like I assume my boy Buffett did enough DD on it. Kyle, have a good day, bro. Hope to see you back tomorrow, live 11:30 a.m. We'll also be back here at an hour and a half streaming the Powell stream live. I might hop in and talk about that while Powell's streaming for a little bit. But yeah, I mean, I think there are a lot of different Chinese names. Again, like on a day like today, probably not your time to come in, especially on a shorter time frame. But if you have a long time frame, who cares? Who cares if you buy it now and it goes down a little bit? Wow, Jason just sent me a text. I saw, I don't know, Portnoy, he texted Portnoy about me. That's cool. Wow, awesome. All right. Got Neo. Does anyone else have any China stocks that would be their pick for the next Who's up, Juggalos? Is Juggalos an insane clown posse thing? Isn't I think insane no, Shelly, you don't understand it. No, it's really nice. He said Kyle, peace and love. When I see Neo drop below 10, hard buy. Yeah, I think that's part of the problem with the current market environment is that for people that aren't super like bullish yet, there still hasn't been a terrible amount of just like absolutely screaming buys. I think Netflix under $200 was a screaming buy. Just from based on like just pure like balance sheet cash valuations. Like you got down to a point where like Netflix's forward PE was trading like below 20 for a company that like, yeah, it might not technically be a growth company anymore, but could it grow? Sure. Oh, you're saying you actually did buy Neo below 10? Oh, I didn't realize. I mean, it's still down there, but yeah. I'll buy some Neo below 10 too. Caleb, I'm gonna put a market order in my brokerage right now to just buy some Neo below 10 if it gets there, and I'll let you know. Let's see. Yeah, Netflix got below 180 was kind of a screaming buy. Do we have any other instances? Snap, did Snap ever find a buy? I mean, Snap got down to like $7, but I don't know if that you could really consider that a screaming buy because that company could still go to zero. I don't really know what's going on there. What was Meta's low? Yeah, Meta below 100, you could probably say was a screaming buy. But I don't think overall there's been a lot of names out there that have had that, many screaming buy opportunities. Like that there's no brainers. Disney might be getting close to there. I mean, look at this. Oh, I don't really know. I don't know enough about Disney's company to know if it's yes, I wanted Netflix and I didn't buy it, kicking myself. Not sure a lot of buyers out there because people are wanting to see if a recession is officially announced. As a side note, I think I heard yesterday that Jack Ma has been in Japan for the past 6 months. Surprised if they let him leave China. I'm not surprised they let him leave China. I don't think he was ever under any. Was Jack Ma ever gonna get arrested for anything? I think he was just under a lot of scrutiny and stuff. I don't really know. Jack Ma is a crazy character. This is what I meant last time about Tesla. People like the growth curve and they'll overpay. Yeah, and I think that. I mean, look. The bottom line is if you're buying a growth company, you're buying it for growth. You're typically gonna have to pay a premium on that. Take a brand like Elf Beauty for example. Look at this stock chart. No, this is not 2020 right after COVID. This is now. This is 2022. This stock is was making new all-time highs on Monday, and it's just been ripping. I mean, this chart, it's hard to find another chart that looks like this in 2022. But if you go to the financials, it looks really expensive. Forward PE of 48, 6.4 price to sales, way higher than the S&P average. But the reason that people are paying or willing to pay for it is if you go to their you go to the financials, go to the income statement, say let's go to annual, and you look at its annual growth, and it starts to make sense. 2018, 162 million. 2019, 163. All right, not that much growth. 181, not bad. 200, not bad. 250. So when you start putting together, year after year, quarter after quarter of growth, of revenue growth, of profit growth, that starts to attract investors, and because they're willing to say, okay, I'll pay this high PE now, and if it keeps growing in profits, then that will bring that ratio down. It'll make this a more reasonably priced stock. It won't remain expensive as that growth continues. Now, where you can get really screwed is if you're paying that premium on a growth stock that then ceases to grow, because then you're paying a premium on a stock. You're paying too much for it, and no one else is going to be willing to pay that as much as you did for it, because now it's not a growth stock. And that's what happened with stocks like Netflix, with stocks like Meta, when they had this huge downturn. People were still paying for the premium of Netflix's amazing growth up here at $700 in November 2021. And sure, a lot of that growth was spurred by the fact that federal interest rates were at zero, and companies could borrow to grow more and higher, whatever it was. But then once the company says, oh yeah, actually subs went down the last quarter. We actually, for the first time ever, didn't add more subs. Now, all of a sudden, not only do people not want to pay the premium, they want to dump the stock. They want to get rid of it. So I don't know if that's exactly what you were talking about, Seekin, but that's how I see it. And specifically with Tesla, I do think Tesla is at risk of kind of running into a plateau when it comes to its growth over the next, I don't want to say year or 2 years, because we're still so early in the electric vehicle industry, and there's so much market opportunity in the world, essentially, that Tesla probably still will or should be able to grow at a pretty fast rate. But the more that other car competitors put different models out there, specifically in China and other European, all these things, I would not be surprised that if Tesla's growth rate started to slow down, if it hasn't already, and that would scare me buying Tesla up here, because certainly people are still paying a premium for Tesla being a growth stock. I mean, forward PE of 33, price to sales 8.3. So these valuations, these ratios have actually come down a lot and are a lot more reasonable for Tesla than they've probably been in a long, long time, or maybe ever been on the stock market. But still, to me, not ready for it. Yeah, average of the strongest growth since 1990, usually 8 quarters. How about SoFi at 450? SoFi had good earning the last 2 earnings. I'll probably buy 100 shares and let it ride. Yeah, I mean, I personally, I've talked about this on the show before. My biggest red flag with SoFi is just the fact that I don't know a single person in my life that uses it. Maybe it's bigger in like on the West Coast or certain industries. But the fact to me that I don't know anyone my age that uses it, and I'm kind of probably their like target demographic of people that would be, you know, mid-20s, you know, want to you know, switch up my bank, like, no point trying to catch a knife. Speaking of trying to catch a knife, I'm getting chewed up on my spy calls right now. How do I manage this, folks? So the way I'm looking at the chart looks like if we head down I'm just gonna let it. I'm not gonna buy any more right now. I'm just gonna sit on them. And if we get down to the like lows of the day, like the 293 level, 294 level before Powell, then I might buy some more just to try to like dollar cost average. I don't really know. Also, no trying to point and trying to buying breakout and bear market for swing. Most of them will fail. Yeah, I agree. I think honestly, seeking like looking at like a BABA right now that's up 15% in 2 days is not something I would want to buy in this market, just because you are prone to see these like bear market rallies and they're usually followed by sell-offs. I would actually, and it's kind of counterintuitive, but I kind of want to like look for those Netflixes or Metas that just get so freaking beaten up that like, and this is not investment advice, not a good way to invest or like, but it could be a good way to like think, like frame it almost like it was just so freaking beaten up. Like you look at the RSI down here where it got down to like below like 8, 9 and just realize that like, all right, if you're willing to like sit on some short-term losses, chances are a stock like Netflix that goes down 70% in 3 months is going to come back and like do for a little bit of a bounce. Because I actually think, I don't know if I can say this or if it's like too stupid. There's part of me that like, and I know this, I don't think this is real. This is probably just some sort of like fallacy in my head, but I almost think there's less risk once the stock is already down that much more. Like it's like a Meta, but I don't know. I don't even know how to like, again, that's probably like a bad way to think about it. Cause no matter what, a stock can go down 100% from where it is at. You can always lose 100% of your investment. It's not like it can't go down any further, but like basically that I think like the big institutions or whatever would have a price for most of these companies that we're talking about, for like a Meta or a Netflix or a Apple, that no matter the market environment, no matter what was going on at the company, they would buy it at, right? Say at Meta, it's $60. Or say it's $20, right? That Goldman Sachs would be willing to buy shares of Meta no matter the market environment. They would have some value ascribed to the company. They're not saying this company's worthless. The further the stock has fallen, the closer we are to that point. So to me, in that sense, there almost is less risk with a big company like Meta the more it's come down. Again, I don't really think that's a great way to think about it. I'm sure if I had some like, you know, business professor, economic professor, or some trader on here, they would tell me about how wrong that is. And it probably is. And this is not an investment advice. I'm kind of just like thinking out loud here. But again, that's my thought process on it, is that like there'd be a floor that a lot of these big companies could drop to in like worst case scenarios. And the more these stocks drop, the more we're closer to that floor. And I'm willing I'd rather essentially in the bear market buy a beaten up name that I think is due for a bounce than a name that's ripping that's probably due for a pullback. And it's probably the opposite in a bull market. In a bull market, if a stock is getting beaten up, I'd look at it and say, you're getting beaten up in a bull market. What the hell's wrong with you? I don't want to touch you. Whereas a stock that's going up in a bull market, that's outperforming the market, has momentum, has hype around it, I'm down to get in and ride that for a few percentage points. That's called support line. Yeah, I think essentially like support line if you were talking about it from a technical standpoint. I was talking about it more from a fundamental standpoint. But I guess that, it could still be a support line, like from a fundamental standpoint, right? Facebook has assets, has a cash flow, right? So at a certain point, institution would have to ascribe a value to that company. In my opinion, it's not going to be zero. It's a lot less for Meta in this market environment than it would have been 3 years ago. Unity dropped to 18 after... Wait, did it actually? Holy cow. Yeah, and see, this is what I'm talking about. So we're in a bear market. Now this stock has gone up from like 20 to 36 in like a couple weeks. I mean, this thing is on... Let's go to a monthly candle here. Up 25% in the last month. In a bear market... I kind of don't love that. Like, I'd almost rather, expect a little pullback here and then buy it once it's closer back down there. Because I don't think in this bear market, with the interest rates where they are, a lot of companies have been able to sustain these rallies. Looking like it's going to fill the gap, too. Which one are we talking about, Manny? I'm a silly goober. You got to be more specific, man. Are we talking to the downside, to the upside? Are we talking about Unity? Are we talking about the last stock I was on, which I don't even remember anymore? Oh, no. What in the absolute frick happened? How? How is it like right here where I buy my calls? Every time. Without fail. Without fail. It wasn't even like I was up for a few percentage points for a second before that happened. It just literally as soon as I bought the calls. What about Amazon on the swing up? Facebook, gap up. They always know. I don't get it. What do you mean my charts are backwards? What does that mean, my charts are backwards? Have I been reading charts the whole time? Are you supposed to read charts like Hebrew from the right to the left?
Oh my god, so my birthday's April 22nd.
All right, should I'm gonna do something stupid here. I'm gonna buy some more calls. A little lower strike price this time. Sorry, Mom. I know you told me to stop gambling. All right. Whatever. Make the opposite play. I honestly I've tried to do that before and it somehow doesn't work either. Cuz I'm like, well, here that's the other thing too is if you found someone that was actually consistently really bad at making stock picks. I'm not talking they're 50-50. I'm saying if they made 10 stock picks, if 8 of them are negative and they're just that bad, that's actually an incredible skill to have. I'd hire that person and just tail them every time. Just say, keep doing what you're doing. Don't change your system. But even that's hard to do, right? If you go out and try to find 10 stocks to short, I guarantee you're not going to be, 10 out of 10 on finding stocks to short. I don't think the best short sellers are. I mean, look how many people have lost money trying to short Tesla. I mean, what talk about like a LOL, Aaron? Like you're going to buy SPY calls and it is literally just going to fall off the face of a freaking cliff. All right. I have a lot of like, this isn't me just trying to play like devil's advocate. I kind of like always tried, like anytime there's like a big like mob mentality one way, I kind of just try to like see both sides. Like there's a lot of, I don't even want to say like misinformation, kind of, I guess. Like I remember there was one like screen post on Twitter of like 100 stocks with all the like negative returns and be like, these are the 100 stocks that Kramer's like mentioned in the last like year. And they didn't include any of the ones that were up. And it was just like cherry picked like the worst ones. And like, I get it. Like he has a lot of, and it honestly is funny how it is even with like, it doesn't even have to be with like stocks. Like he put on like the Phillies jersey for the World Series and then the Astros beat them that night. Like, or they got no hit that night in the World Series after he put on the Phillies jersey. Like that is funny. But I think historically, like, I don't think Kramer is some like he just talks about every single stock out there. So he's been like right on a lot and wrong on a bunch. And I think recently over the past like 2 years, he's been wrong on a bunch of stuff, which a lot of people have because the market environment's been tougher. So it's more like, I'm not really trying to defend him, I guess, is I'm just kind of like I'm over, I think, like the lazy jokes on Twitter of like, just do whatever the opposite Kramer says. You know, like it's again, I don't have like a problem with it. Like morally, I don't like feel bad for the guy. He's like a multi-million up there and he does say a lot of dumb stuff and he is wrong about a lot of it. I think I'm more just like that joke to me has been kind of overblown on Twitter. And I don't really think Kramer's as bad as an investor or stock picker as some people make him out to be. And that's just my hunch. Like I would love to see Kramer like one-on-one in like a trading competition or stock picking competition with some of these guys that want to, you know, act like he literally look. And it is kind of I would say a little bit disrespectful too that there are people out there that like I don't know. He probably does kind of not know what he's talking about, but like he's got to know something, right? He's been on CNBC for like 20 years. My dad used to watch like Jim Cramer growing up, and I remember watching or not me watching Mad Money, but like my dad watching Mad Money and hearing buy, sell, sell, sell. I mean, I think Kramer, like basically every other like news station media personality, like gets paid for like certain stuff, but I don't think every single time Kramer's talking about a stock, it's because he's getting paid for it. Again, I get it. Like he's a really polarizing figure, and honestly, granted, or there a lot of the jokes are really funny. It seems at this point like a lazy dunk now, saying, oh, like do ever what the opposite Kramer says, like inverse Kramer. Like how many more times do we have to like? And by the way, I wasn't saying that to whoever in the comments was putting that, because that is like basically what I was talking about, like making an inverse ETF of someone. So yeah, if I had a knack for just buying calls at literally like the worst time ever, but it is, and I think part of it is like it's psychological. Like look, like I bought calls here where SPY had already ripped up. So I probably should have been thinking, and again, this is a 5-minute chart. I probably should have been thinking like, all right, let me wait a little bit. And someone in the chat had even said that. But I was more looking at it on like a longer time frame. Like we're on the 5-minute chart here still, so this is only going back a few days. But I was still seeing it as like, oh, we're still pretty muted. We're still pretty depressed in terms of returns over the past few days in SPY. I don't see the SPY going up. I don't even know what this move was, from 394 to 395 and a half, $1.50. I didn't see that as like a big enough move to where it couldn't keep going up from there, if that made sense. Powell in 1 hour. Yes, Powell will be in 1 hour. We'll be on this channel. You do not need to go anywhere. Did he already go to the to the thing? I don't know, but there has been, I will say, I've noticed, like, maybe it's just from the holiday or like the past few days. It does seem like there's been a little bit less volatility the past few days. So it is great we haven't seen it today, but I am anticipating today a little bit more volatility, which should be awesome. Spy is about to get molly whooped. I've never heard that phrase before. Sounds like what happened to me at the Migos concert, though. Yeah, I don't know. I wasn't like around, I was around. I wasn't like investing at the time. But again, like that's the type of thing where I think like if you're cherry picking, you know, like Kramer did say he loved Nvidia at like $10 or something, right? Like, and that's like a thousand plus, you know, percentage bagger from there. Like you could have lost all your money in 08 on that one thing with Kramer and then made it all back on the Nvidia pick. Like that's what I'm just saying. I'm saying like you could probably cherry pick it on both sides, and I don't think. Not even that the people should be trying to be fair with him. Why would you try to be fair? They're just trying to dunk on him and like make a joke. And it is funny. And I don't think he deserves our sympathy or we have to be nice to him. He's a rich guy on TV. Whatever. That wasn't my point at all. But we'll move on from Kramer. I have a note in front of me. Don't buy calls. Do I follow it? No. All right, let's go back to our news feed on BZ Pro. See what is going on. I wonder if we don't have Bill here. I was gonna see if we had any like news headline that might have given us some insight into that kind of sell off there. I have "Are you emotional" sticker on my. Don't buy calls. Yeah, that's why like everyone says for options trading, like if you really want to be like consistent and like making money, you have to be the ones like selling the options and not buying. And that doesn't mean you need to like necessarily outright sell calls or puts. That puts you at like a technically, crazy like unlimited loss. You can like sell spreads and get credit spreads or debit spreads. And I mean, to be honest, like buying calls and puts I really don't view it as really anything different than like putting a bet on at the casino, because like I can read a chart, I can make my best guess, but at the end of the day, like you don't know what's going to happen on a day-to-day basis. Me betting that the SPY is going to close higher tomorrow than it is today is just so like silly to think about. But if you have conviction, and like that's, I think, like honest, and this happened to me where like when I have made really good trades, it's not because I, like had a 50-50 shot. The stock had to go up or down and I got lucky. It was because I was like a brilliant trader. And then when I lose a trade, it's like, that wasn't my fault. I was right. Like if that didn't happen or if the market didn't, whatever. And so it's like, I think a lot of people get tricked sometimes by thinking that they're, some sort of like master trader. I mean, look at, just talked about, I'm not going to mention his name, but a trader, a dude who started a sports media company that started day trading during COVID. And I think a lot of it, I mean, look, this was actually very smart. All right, fine, Portnoy. So this was actually very smart because Portnoy, obviously sports stopped during COVID. A lot of people at Barstool had very innovative ways to kind of get around this. Big Cat started playing like online NCAA football, but Portnoy was streaming about sports every day, for years. And then sports stopped. What is he gonna do? Like he's got an audience. Well, day trading's a good little thing. And turns out it was a perfect market environment for it, and he was making a bunch of money. And I think he was playing it because I mean, like I think Portnoy is like he has a good personality for being on like media and stuff. And so I think he was like I don't think when he was saying stuff like, oh, I'm better than Warren Buffett now, like I don't necessarily think maybe he believed that. I think he knows that like people like that. People like the like cockiness of someone streaming and yeah, I'm the man. And it's tough. Like it gets it gets tough when the markets turn over. And so I think a lot of people do think like when they start winning trades that it's easy, that there's some like master trader, and then it gets tough. Fed Cook speech in 1 minute. So we're getting 2. I saw someone talking about the DXY. I don't think we have the dollar index on Benzinga Pro, so I'm going to go to here for a second, which I hate to do. Let's pull up the comment real quick. DXY looks like ready to fly up on the 3-minute chart. Ooh, I don't know if I can get the 3-minute chart here on here.
The only challenge is like how do we get them, and if we do that, which I think actually probably now that I'm thinking about it on the fly.
Yeah, I don't know. I defer to Shelly on that, Clinton. She's my Forex expert, among other things. Let's go back to our Benzinga Pro. How's Apple doing today? Whoa. Hey guys. I didn't mean to go solo layout. Still figuring out how to work this. Ready for SPY dump 1 of 3 today, Phil Bonner says. I hope not. Did you not see me just buy calls? More calls? They're starting to come back a little bit, honestly. I'm up on the second thing of calls now a little bit, slightly, not much. Again, I think the more, basically like all economic indicators, whether it's gas, rent, freight index, shipping, lumber, mortgages, like you name it. Rent or inflation is looking like it's really starting to have a significant kind of reversion to the mean, come down. But I don't think Powell's really going to, like it wouldn't be smart for him to lean into it. I think because the market sees this, because, the bond markets see this and they're pricing in a 50 basis point hike. Like I said, I think it might be one of those things where Powell's tone doesn't really change all that much from, last time he spoke to this time, but they might hear it a little bit more dovish, if you know what I mean, right? It might not really be more dovish, but they might hear it more dovish. And I think that's a possibility because, they want it to be. And then now that we're pricing in a 50 basis point, I mean, you can't argue that if inflation is the Fed's primary concern right now, which it has been and which it is, that if it's as bad, if the inflation issue is as bad as it's been, say 6 months ago, that the Fed would be considering a 50 basis point hike. The only way you can justify going down from 75 to 50 is if that you acknowledge that inflation is you've made at least some little bit of progress on inflation. And again, I think that would probably be like if Powell had to be honest, that's what he would say. Is he's saying, yeah, we're seeing some effect of inflation, not enough yet, so we're going to continue raising rates, but we're a lot closer to being able to talk about being able to bring those rates down than maybe say we were 3 months ago. Now that's, I think, is what he would say if he was being honest. But Powell has a job here, a duty almost, to jawbone, which is a term that basically just refers to him talking tough without really ever having intentions of following through on what he's saying. And if that doesn't make sense here, I'll try to break that down and explain it. Because essentially if Powell says, yeah, we've made a little bit of progress on inflation, and the market goes up 3%, that's bad for inflation, right? So he doesn't want that. He doesn't want to see the market ripping on anything he says. So he's going to say, we have to remain tough. We're not even thinking about raising rates, yada, yada. And honestly, if he drives the market lower, he'll probably be happy with that because he knows that will have a better impact on inflation than the market going up. Now, I'm not saying he's going out there today and wanting the market to go down. I don't think he'll do that. But I think there will be jawboning. I think that will be the quote-unquote smart thing to do to maintain his inflation objective is to do that jawboning to basically say, yeah, we're not even considering, pivoting, even if they are. Because if they are considering pivoting and he says that, the market rips, whatever, now they're further away from actually being able to do it. Here she goes, SPY super bearish on the 3. I mean, should I buy some? You're scaring me. Should I buy some puts that expire tomorrow just as a little hedge, just so I don't lose everything? I also never use like a 3-minute chart, but if you're making new lows of the day, that's certainly not bearish. We're looking at a 5-minute chart here. I can go to 2-minute. Let's see. We'll see if we can hold this bottom. If we can hold this, maybe a little double bottom action. A little double bottom action on a Wednesday. Longy Long is saying, hedge it up, bro. That's not very longy long of you. I'll tell you what. If we break the lows of the day, I'll buy some puts. Lows of the day, we'll say, is 393.48. All right, so we're about 10 cents away. $393.48. That's my line. Let's watch it. I'm buying puts if we break that. We're so close. Who's short right now? Who's holding puts? Oh, Clinton got some XOM puts. Why XOM? Like, did you just think energy was getting overextended? No, Shelly, I haven't bet all my sports winnings yet. Thank God. Although this will take a significant chunk out of them if the SPY doesn't turn green on the day. But again, house money. So I always get more risky with house money than I do with my own money. Millions of dollars of puts getting put into the market. I just honestly I don't know why. I could just be missing something really obviously here, but I could just be missing something why are people so bearish right now? Why are there so many puts coming in? It seems like we're getting really good news in terms of inflation. I think there's a lot of China situation obviously is but all the Chinese stocks are up today. I'm kind of confused, to be honest with y'all. All right. We're getting further away from that 3948 level, 39348 level. So I'm not buying any puts right now. Let's keep watching this. We're on the 2-minute chart here, so quick movements here. We're watching right now to see if we come back down to test these lows of the day that we hit about 20 minutes ago. Oh. Yeah, that does look bearish. Wait, I don't understand how this chart looks like this, on the 4-hour chart. And you look on the daily, I guess. Yeah, from a chart perspective, I'll give it to you. That does look very bearish. That does look very bearish. I am not personally a big chart guy, but when a chart's screaming something, I'll give it to you, and that don't look good. That looked like gap fill to downside to me. 383. When was this? What was this day? That was November. Wait, so on a 4-hour chart, it goes back this far? That seems surprising. November 10th, that seems like so long ago. What day was... Oh, was that the CPI day? Had to be, right? Or was that the CPI day and that was something else? I don't know. But yeah. Yeah, I don't know either, Seekin. I don't know either on the 4-hour chart. Is 6.5... Joel put me on the technicals. Yeah, I'm... I don't think that's true. I think the Fed has started its quantitative easing. I could be wrong. When does Fed start or QT. Sorry. Starting on June 1st, the Fed will begin to reduce the size of its balance sheet. Yeah, the Fed has started to unwind its balance sheet. I don't think like that much or by any meaningful amount, but QT has started. Is Fed actually doing QT? Fed promises faster moves on largest QT program in history. I don't know. I was under the impression that they were. But I'll dig more into that to see what's actually been done since, like what quantitative tightening has actually been done since they announced that was supposed to happen a few. Whoa, we're kind of ripping here. Am I back green on the day? Almost. Good thing I doubled down on those calls at the bottom there. Knock on wood, at least for now. Again, here's where I stand in general with technicals. Is oh, here we go. Mitch just sent me a. Yeah, all right, here. This is exactly what I was looking for. While streaming, it's hard to find some of these stuff. So this is the chart of the balance sheet. You can see how much we spiked during COVID. And again, like that was out of kind of necessity, right? The Federal Reserve learned its lessons from 07, 08 when it kind of failed to act and failed to provide stimulus for a lot of people, helped people during COVID, reached a height around March, April, which, shocker, kind of like that's like right when we started seeing inflation kind of really get out of control. But starting to roll over since then. So the balance sheet has started to wind down. Again, like this tiny little curve down isn't that significant when you look at this huge move up. You've still got a ways to go. So for like all intents and purposes, you could still say the Fed hasn't really started like shedding its balance sheet. It's still super high compared to historical like averages, and you'd be right. But in like in the technical sense of the manner, I think it has started to cut down its balance sheet a little bit. Which way does AT want to go? I don't know. I could ask AT though. Are you talking about for my my calls? I got a long ways to go. Oh, you're saying for the Fed, yeah. Also, we're starting to see the rising interest rates to work through earnings. Yeah, and I mean, again, I think I'm not saying there aren't any reasons to be bearish out there right now. I'm just like, at least like this week, like there hasn't been to me anything that would make me like scared to buy right now. If anything, it's the opposite. If anything, I'm seeing like, inflation things looking better. I'm seeing, it looks like I'm honestly surprised that there hasn't been more participants coming in the market wanting to buy here. But again, maybe it is from technical reasons. What I was going to say, though, I got sidetracked. Going back to just like kind of where I stand on technicals in general, and again, this is as someone who isn't the biggest, I'm not the best at reading charts. I can I identify some support and resistance. I look for certain things, certain patterns. I do like double tops and double bottoms because I think that just makes it obvious sometimes if you hit a bottom right on the level and you start coming back up from there, it kind of makes sense. Like, oh, you had support there. But I am not someone who is going to trade 100% based on a chart. It'll be more something I use to help guide my entries and exit points, right? Like my thesis on buying SPY calls today before Powell was speaking had literally nothing to do with the chart. If it did, I probably wouldn't have bought them when I bought them. And so that's where I stand. I like to use charts in my trading, but never really as my one guiding factor. And a lot of technical traders, David Green, Options Mike, Rob Roy, people that come on the show that I'm friends with that I learn from would tell me I'm silly for that. They tell me you don't need to look at, and nor should you look at anything but the chart. And then you have guys like Warren Buffett that say, I flip the chart upside down and it doesn't look any different to me. I never look at a stock chart. And it's different because Warren Buffett's not trading, he's investing. But it's to me I'm pretty middle ground on it, I would say, to where I'm like, you know, like I'm not like some people think reading charts and technical analysis in general is all like Fugazi. I don't think that at all. I think there is legitimacy to it, but I do think also, you know, yeah, so I mean that's kind of like where I stand with TA in general. Have you not looked at fear index greed? No, we looked at this yesterday on the show, or at least we looked at it on the one that's on the AA. I was saying I don't really get this at all either, to be quite honest with you, because 3 months ago or like 6 months ago it says we were greedy, but 6 months ago the SPY was like getting crushed and like people were like pretty bearish. It seemed like, yeah, I mean 6 months ago was May. At that point, the market had already been down like 20%. Like, I don't know. Like, I don't know. Like, or if you could I really don't know. We had this whole debate yesterday in the chat about it. Some people were saying that, oh, you guys can't even see sorry, I didn't realize an ad popped up. But yeah, they have this fear and greed index here. I don't know like how much weight. Right, Clinton, I understand that's the sentiment, but what I'm saying is that like if like even on the days where like last week, for example, there was more bulls or there was more bears than bulls. There was less than 30% of people were bullish, more than you know, like there were more bears than there were people that were neutral or bullish. Going back, you know, just a few months ago, we had 60% people bearish. And in those times, this fear index greed was still saying that greed was dominating the market. So it didn't really make sense to me, because if I would have guessed, I would say, oh, selling pressure and like fear was dominating the markets when the thing was down a lot. So I don't know how much. I think the weakest edge on reports comes from sentiment reports, just my outlook. Yeah, Zane, good combo. I like, you know, all these different things that people, everyone has different strategies and different things they like to look at. The only reason I like looking at this American individual is like specifically because I think when, you know, like times like this where sentiment gets way overextended on one side, right? Because if you think about it, like if everything's even, you should have, 33% people be bullish, 33% people be neutral, and 33% people be bearish, or 50% bearish and 50% bullish, or 100% neutral, right? If everything was even. When you get these disparities where you have like 70% of people bearish or 70% of people bullish, you typically see the market like react not to that, but part of, like it's all part of it, right? So if we go, all right, 1 year bearish high, 60.9%. That was the week ending of 9/21. So now we'll go to SPY stock, and I have no clue on this. Like we're just gonna go look. So 9/21 was here, right? 9/21/22. So that was when the most people were bearish. Since then, the SPY has gone up 4.34%. Now, it did keep going lower for another 2%, so maybe a lot of those people that were bearish were just bearish for that next move lower than they were going to get bullish. But I think historically, right, and I'm not a big fan of back testing, whatever, but I think historically that if you go back and you bought every single time, you know, that the bearish average of retail investors got above 60%, that your returns would be pretty good. That's really the only thing that I like to look at with the yeah, I'll shoot you over Shoot me a DM on Twitter, Seekin. I'll shoot you over all the stuff that I use at AaronBree5. And yeah, that's the thing with like looking at sentiment. Sentiment follows price. So it's like you could look at the sentiment, which is going to follow price, or you could just look at the price. The more the market goes down, the more people are going to get bearish. The more the market goes up, the more people are going to get bullish. So in that regard, I will admit that looking at the sentiment may be a little bit, I'm not even going to say useless, but just like frivolous, because it's like, all right, why look at that? Like, I could look at the chart of SPY and tell you how the sentiment is going based on that. And that's my woman, I can't say my girl because she's old enough to be my mother. But Helene Meisler on Twitter, great follow, by the way. She writes a column for realmoney.com on the markets, worked at Cohen, Goldman Sachs, Cargill, former Asian expat. Her pinned tweet, nothing like price to change sentiment. So yeah, like you can think, oh, your sentiment's going to change based on like a thing that this company's doing, or based on the new product they're launching, or based on this. But price is really the biggest, driver of sentiment, right? Like, and you talk about this all the time where I'm like imagine Netflix. When Netflix was trading at $700, if I told you I would sell it to you, in 3 months for $300, you'd say, yeah, I'll take that deal all day. I'll buy Netflix at $300 all day. It's a $700 stock. What are you talking about? It's a $700 stock. Flash forward 3 months, now it's an $180 stock. Now you don't want to buy it for $300. What changed? Nothing really changed that much about the company. The only thing that changed is the price. But now your sentiment is all different about it. And that happens a lot with stocks where it's like, oh, I want to own that down here. And then it gets down there and then you're like, oh man, I don't want to touch that because it's so ugly. It's been just selling off every day. Why would I want to touch that down there? Yeah, Jay Rice, agree. Helene's a must follow. I think it's really cool. She does like her charts by hand still a lot of times, which I've never seen anyone else do with a weird, I don't even know what they're called, like tea candles or something. But yeah, must follow on Twitter. All right, let's go back to our Benzinga Pro. We've only got about 5 minutes left of the show. Debt got more expensive, bro. Are you talking about when I said nothing changed that much with Netflix's business? I'm saying, like, hold on. All right, that specifically may not have even been the best example, but my point is there have been a number of times where, okay, like take like NVIDIA, for example. NVIDIA, when it was up here at like $300, if you would have told me like, or I would have told you like, oh, I might be it's a little overextended up here, but if it gets down to, like 280, I like it. And then it drops down to 280 and you're like, and it looks like it's got like more to fall. Like basically, just as the stocks fall, the less willing you are to want to own it. When the stocks are going up, you want to own them. It's like that's just how it's just like the psychological aspect of the financial markets. It's how you get bubble assets, right? It's how you get something like Dogecoin going up 10,000% in a month. There's no real notional value to it. There's no underlying value to the asset. It's just the fact that it is going up, so other people want to buy it. The sentiment is following the price. So more people are getting bullish on Dogecoin as the price goes up. And as more people get bullish on it, the price gets up because it has more demand. And it's just an effect that play off each other until it hits a tipping point. So yeah, I mean, again, we were talking about this, just talking about the sentiment. Again, I like seeing it for when that you get those huge disparities on retail sentiment either way, whether it's bullish or bearish. Because if I see 80% of retail investors are starting to get bullish, it might be time to buy some puts. But you could probably see that on a chart too, where the prices would just be getting overextended and overbought. So whether you want to look at the price or the sentiment, I think you're basically just looking for the same thing, which is just anomalies to either side and trying to play for like a reversion to the mean. Yes, we will be streaming J-Pow here on the channel. I think Money Mitch is going to hop on here in a minute or two for about half an hour, and then we'll lead into to J-Pow, or maybe Mitch will be streaming too at the same time. I'm honestly not quite sure, but we'll figure it out. Yeah, and like, okay, that is a fundamental change to the business, right? That got more expensive. But in December 2021, I mean, we knew at that point the Fed was going to start raising rates, right? Like, we knew that was going to happen. That wasn't, and actually, now that I say that, there was kind of a fundamental change in the business and that it stopped growing. That is a big fundamental change. So again, I'll just admit that wasn't the best example, but my point still stands that as the price moves lower, sentiment drops. Netflix looks like it's ready for the next leg up. I mean, yeah, I think this gap's got, I think, up to 340. I think you can play that up to 340. Really, I mean, depends on your time frame. Like, I could see it coming back down here to 225 before, but I think ultimately, like, the next, say, 2 months, this thing is going back to 340. All right, guys. It's 12:59. If you've got any stocks, questions, last comments, questions about Powell before we head out for the day, speak now or forever hold your peace. I've had fun hanging out with you guys today. I hope you guys had fun as well. Good show. At AaronBree5 on Twitter if you want to stay connected there. I know someone asked me for some for some sources, not from sources, some resources that I'll hit you with on Twitter. So if you want anything there, that's a good place to get in contact with me. Checking in on my SPY calls one more time before we go. We are pretty flat. Pretty flat. What time does he speak? He speaks at 1:30 p.m. Eastern. Here in about 31 minutes exactly. My boy Jay Powell will be speaking. How do you think SPY will hold up with the expected Powell talk? Well, I bought calls, so I'm betting that it goes up. I'm not really certain that it will. I'd say it's about 50-50, Levi. No, not investment advice. 50-50. It'll go up or down. No, I don't know. I don't know if you've been with us, Levi, but I talked about it more extensively. What my predictions were for this speech. Essentially, I do think Powell will maintain his same tone, and he'll continue to jawbone, where he's basically going to talk tough on inflation, say we're not done, still need to do this. But I think the interpretation might be a little bit more bullish, just because people kind of are antsy and wanting that. And the fact of the matter is, like, you gotta, like, anyone looking at the situation objectively would have to admit that there's been some progress made on inflation, whether you're talking about housing prices and rent, or gas, or new and used cars, right? Or just CPI and core inflation. And that's not to say there aren't still really important areas like food that haven't normalized yet. Just that I think anyone that was truly objectively looking at the situation without some sort of motive would tell you, yeah, inflation's, come down a little bit. And like, if Powell says that could have a positive impact on the markets. I don't know if he will, because the job isn't done yet, and he wants to see this through. He wants to talk as tough as he can until the job is done, and it's not done quite yet. Do you think that will be like the last few talks, or at least the market will reflect the same movement as it has? Look, I don't know. Like, your guess is honestly as good as mine. Powell, the last few times he's talked, the market has not responded well because of what I'm talking about. Like, he's been jawboning and been talking tough. And I think part of that is because Powell and the rest of the Federal Reserve was like surprised / disappointed that the raising the rates didn't have an immediate effect on inflation right away. And I think a lot of economists said that when it happened, that like, hey, look, a lot of this inflation we're seeing is on the supply side, not the demand side. So by raising interest rates, it's not going to do anything to make gas cheaper or to make used cars cheaper without crushing demand. So I think, like, it's just Powell now, I think, kind of swung pendulum the other way, right? Was too easy for too long and has now been too hard. And I don't really see that pendulum swing back to the middle. I think he's still going to maintain his like very hawkish stance. But again, maybe, just maybe, the market interpretation is that they're hearing something a little bit more bullish than it really is, right? Because that's what they're looking for. Out of SPY puts may re-enter. Are we still ripping on the SPY? No, not really. I mean, I'm still flat on my calls, but I've definitely made my. I was down like when that big leg down happened. Mini disinflation happening. I think so too, and I think you're seeing it in certain, especially certain things like electronics and like appliances. There's a lot of things that have like started to get cheaper. Thing is when the Fed pivots, it will be a mistake to think it will be positive for market. Normally, when the Fed starts cutting rates 6 months after the market bottoms, and it's time to go on. Well, all right. So Zaki, the thing here is what you have to consider is that normally when the Fed starts cutting rates, it's because we're in a recession or because the economy is like slowing down massively and it's forced to cut rates. I don't even know the last time we've, you'd have to go back and find a time that the Federal Reserve cut rates because inflation was normalizing after it raised rates to fight inflation. And like if you go back to like 2008 or like the last few times the Fed has had to like start cutting rates, it's because of that recession. So it makes sense that the market would continue to have weakness in like an economy that's shrinking. But I wouldn't consider this economy to be shrinking by any like meaningful standard to where if the Fed cut rates right now, I think it would have a very, very positive impact on the market. So you just have to consider those kind of different circumstances in different times where the Fed may be cutting or raising rates. Yeah, 100%, Shelly, especially certain close. And disinflation is a big problem too, like for stocks, okay, think about it for Apple, for example. So Apple, say, I bought this MacBook for $2,000, and say Apple sells, 1 million of these for $2,000 in a quarter. Say disinflation causes Apple to now bring that price down to $1,800 instead of $2,000, and they sell the same amount of laptops the next quarter. The earnings are going to be bad the next quarter, and there's an argument to be made that disinflation can end up hurting stock prices. But again, there's all these moving parts. It is 1:05 p.m. So without further ado, I'm gonna go ahead and pop off my Benzinga Pro. Go ahead and bring on my man, Money Mitch, looking fresh in the suit. Money Mitch, how we doing? Oh, the old mute trick.
The old mute trick. Come on, Mitch. Come on. Gotta get better than that. You already know where we're going down. Don't miss it. We got Powell speaking in a little bit, right? That's definitely going to be something. We'll definitely find out what happens there. But like AB's been talking about, I don't expect to see too much different, right? There's not too much that we expect, right? What do you expect?
I don't know.
Fireworks?
I don't know.
Get some fireworks?
I'm hoping. I bought some calls just because I was feeling YOLO, but I don't really feel that convicted on it. I don't at all. Because the past few times.
One thing that, of course, we get Powell to speak today, but tomorrow PCE, right? That could help out your trade too, right? I mean, inflation coming down.
That's true. I like the way you think, Mitch. All right, man. I'm gonna pop off. Leave it over to you. I'll be back. I'll be in the comments.
I'll see you in the comments, my friend.
Sorry, I cut myself off too early. I was gonna say last thing. Smash the like if you have not already. Not for me, but for my man Money Mitch. And go ahead and comment. Smash the like. Subscribe to the channel if you have not already. All right, Mitch, take it away.
You got it, my friend. I'll see you next time. Let's get right towards the action. This is Stock Market Movers, where we get you to the headlines. What's moving out there? What had their earnings today? What is making moves? What economic data came out? And of course, 1:30. You guys can also tune in. We will be streaming, of course, that Jerome Powell speech. So if I see some of you guys bounce or maybe do 2 streams at once, I won't be mad at you. Definitely hit the thumbs up. Hit that subscribe down below if this is your first time joining in on some Benzinga action. And say hello. Looks like there's some new faces out there in the chat. Shelly, FHIX4223. What's going on out there? David, Manny in the house. It's good to see you guys in the chat. Phil, Levi, Worry, Party Farm, Zachy, Phil, stick around. We got some more talk out there. Let's get right towards the action. All right, so you guys are here, Stock Market Movers. We got another great guest for you today. Can't wait to talk to Shayna Sissel, of course, President and Chief Executive Officer at Barron Capital Management. Excited to go ahead and talk to her. We're going to get into some different conversations. We're going to talk a little bit about what she sees. What are the best opportunities? Any names she likes, right? We'll take a look at the market outlook. That's going to be coming at 1:45. We'll also take a look at what do you think of the Fed moving forward. Of course, the speech will be going on while she's speaking, so it's going to be kind of hard to go ahead and jump on that conversation. But we'll take a look at how she's looking at the Fed going into 23. Let's get right towards the action. Let's take a look at the markets and get to it. Stock Market Movers, I'm your host, Money Mitch. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, team, let's get towards the action. We'll get towards a look into the overall market. Looks like the SPY is getting some rebound after starting the day into the red. A lot of what we saw out there came on the economic data. We'll talk a little bit about that as we pull up the tape here. You guys can see the SPY is actually making its way back towards 395. Talked about that level, how important it was this morning. Was saying, were we going to break above 396, below 395? Eventually, we broke down through that 395. Starting to recover some here towards that 395. We'll see if we actually can hold above the VWAP there. Of course, Jerome Powell could shake all this up in just a few minutes. But let's talk a little bit about what we got on the day, right? Well, when we take a look at it, the ADP numbers came in, right? ADP number non-farm payroll came in at 127,000 versus 200,000 estimate. What does this show us? Well, that it's a good sign, at least for everyone that's trying to call for the Fed to slow down the interest rates or towards the pivot, right? Well, this shows us that there is some weakening in the labor market. Now, what was a little bit confusing is a little bit later in the day, we got the JOLTS job openings, and the JOLTS job openings came in at 10.334 million versus 10.300 million. So what does this show us is that there's still more job openings than was estimated here. So it's a little bit of a mixed signal from the labor market that we're getting here. Now, the GDP number at 2.9 versus a 2.7 estimate really kind of gave more ammo to the Fed, right? This leaves more room for the Fed to continue raising those interest rates because the economy isn't contracting or falling off the tape, right? I think that this is what we need to keep our eyes on. And of course, the jobs number in labor market is going to be important, because if they really truly start deteriorating, that's when I think you'll start seeing the Fed kind of mention more of worrying about the labor markets and different kind of stability control. But for right now, this GDP number, and at least what we've seen in inflation, it is slowly turning around, but it's not a massive drop. So I think we still got some room here for interest rates to continue hiking. Of course, will it be a 75 basis points in December? I don't think so. I think we're still looking at 50 basis points, but something to keep in mind, especially as we get into tomorrow's PCE report. It's going to be very important. PCE index, the Fed's favored inflation indicator, right? Well, we need to catch that tomorrow to see what happens there in the PCE index and to see if Powell could possibly at least think about slowing down a little bit and talking a little bit more in that dovish stance than what I expect today at 1:30, which is more of that hawkish stance. He needs the numbers to really kind of give him that outlook, right? Well, data dependent. We'll find out if the data is showing us that downturn. All right, let's continue going. We can take a look at different stocks, but today there was some more catastrophe and continued downside action coming from, of course, the cryptocurrency space, as Kraken, the world's third largest crypto exchange by volume, is laying off about 30% of its employees, the CEO said. I don't think this is a good thing. Of course, we're talking about the third largest cryptocurrency exchange. We've been seeing so many platform concerns. I will wave the red flag again. I don't think that FTX is the last that we're going to see in this contagion, right? I think, we saw BlockFi kind of get out the door there, but there's still more, and there could still be more that gets hit here. So I would be concerned about the cryptocurrency space, but like always, just trying to wave the red flag so that you guys out there can be careful. I also saw news today that DoorDash announced 1,250 job cuts. What does that show me? Well, that shows me that we definitely are starting to see companies really, truly focus on their cost as they're seeing, of course, not seeing the returns from probably the revenues that they need, worrying about economic slowdown, and definitely starting to lay off. This is how we end up seeing the labor markets really start dropping. And then that's when I think we'll start seeing more talks about a pivot, but we'll have to wait and see what happens to the labor markets. All right, let's continue going. We can get into different stocks that reported today and got some movement. So let's go to the first one that I want to talk about, of course, is CrowdStrike Holdings. Let's get into some of the cybersecurity stocks. All right, so CrowdStrike, of course, CRWD. Let's take a look here. Looks like we're going just straight sideways here from kind of the open. We did come down a little bit, but no movement today in CrowdStrike. Even though it got the earnings, it did get hit. Q3 adjusted EPS at 40 cents, beat the 31-cent estimate. Sales at 581 million, beat the 573.82 million estimate. Now, where did they kind of start bringing down where did it get hit, right? Because it doesn't seem like it's a beat and a beat, right? Why did they get hit? Well, their total revenues outlook for Q4 was given underneath the estimate. And I think this really had an effect on the outlook here as CrowdStrike started getting hit hard there. We'll take a look to see if maybe PanW is getting a little bit of a lift there. That one actually popped up, but also came right back down there towards that pullback. And you can see it here after the tape when CrowdStrike hit. It did get pulled down towards those levels. We'll look to see if PanW bounces or does CrowdStrike just drag it down. All right, next one we can get into, of course, we can get into Intuit. Intuit, of course, Intuit is INTU. INTU, and so you guys can see this one pushed right out the gates there, and this is definitely one that we need to keep in mind. It's kind of more of that value type of play, right? And you can see here on the hourly, we are getting a nice little push up here towards the 400. Will we get past that resistance? That's an important level definitely to watch as we get towards it. But it's been a great day here in Intuit. Let's give their numbers. Intuit sees EPS at $1.66, beating the $1.22 estimate. Sales at $2.6 billion, beat the $2.5 billion estimate. They do see Q2 EPS at $1.41 to $1.45 versus a $2.06 estimate. Expected sales growth of 8 to 9%. Sees full year 23 adjusted EPS at $13.59 and the high end of $13.89 versus $13.75. They did reduce that revenue growth guidance from about 14 to 16% to 10 to 12% growth. So it looks like, they didn't give the best guidance moving forward. But it's not a bad stock on the case of if you're looking for cheaper stocks, right? So we'll see what happens to this one. I wanted to take a look at how we're looking on the PE here. So the PE I have right now, the forward outlook is towards 27. Overall is at 5.2. Need to keep watch here to see how this kind of keeps moving. Revenue growth is at 32.1%. I'm going to keep watch to see what happens here and Intuit, but nice little run there. We'll see what happens on the daily. Can we really get back through these kind of levels? You can see there's a longer term trend line here that we're kind of going towards. We'll see if we can actually get it up here towards kind of 412 area, towards the 200 moving average and Intuit. All right, catching up with the chat. What's going on out there? Seeking PDD just popped 2.5 points. I have to take a look there. We're in Hawaii. Time change. Keep kicking you out, Janie? Oh, man. We're going to have to find you another way to watch us. But if you're in Hawaii, you enjoy that. You enjoy that beach life. I know I would be out there. Let's get into who chose CrowdStrike. CrowdStrike is – I was calling it to the downside on at the close, but that's just because what I saw from PanW. I don't know if you were choosing it, Kenneth. Let me know. Let's get towards some next conversations there. You take a look. You saw PDD get a pop. I'll take a look right quick. These stocks have been ripping all day, these kind of Chinese names. I'll take a look to see if there's any news that we have for you. It definitely got the pop there. Let's see if there's anything that shows up on the tape here of why it got the pop just a few minutes ago. All right. Not seeing anything right now. Looks like Barclays maintained overweight there, but definitely getting a big push. It has to be something that's coming out of probably China. I can go to FXI to maybe see if I can see anything that shows up there. Just give me a second here as I'm looking through here. I see some 3M CEO talk, but about half of the hospitals in the U.S. are in the red. They're holding back. CEO China lockdown says we're seeing some impacts already in the electronic side. So I'm seeing some kind of relaxed COVID mentions, but nothing insane. Let's see Baba, how's that's reacting to this. Is it getting the pop? And no, it isn't getting the pop. So I do think it's more PDD related. Can go to maybe like JD, see if that kind of catches the pop here. If PDD is going to keep popping like that, maybe look for JD to continue strength. We're looking at it on Monday. It's already made its way back to the 200. We'll see if it can continue making a run. All right, the Chinese stocks are definitely confusing, so I'm going to get through that and keep going towards the next one here. Let's go to HML. HML, of course, actually, is it? No, I'm messing up on the tickers today, man. HRL. I'm getting dyslexic here. Let me take a look here. Hormel Foods. Let's talk about it. Right now, we're going to a staple here. Hormel's Food EPS at 51 cents beat the 50-cent estimate. Sales at 3.3 billion, missed the 3.38 billion estimate, and coming down fast. This one was looking good here. You guys could see I had drawn out the play here. It did pop up there towards the 49. Couldn't get through that 50. Couldn't fill the gap completely. It did get up there close towards the 50, but couldn't close that gap. Now it's right back into this bearish zone here. We'll see if it comes back towards 45, but definitely taking the hit on the downturn. And I think overall, defensives were down today, so you got to be careful there. We'll see what happens there, and we'll take a look at that when we get into what was hot and what was not. All right, let's go to one that is just surprising to me. Let's go to Build-A-Bear, as this has continued to make a nice little push into the intraday action. Build-A-Bear Q3 EPS 51 cent, up from 36 cent year over year. Sales at 104.48 million, beating the 102.62 million estimate. They did raise their total revenue guidance for full year 22, and you could see it. I guess Build-A-Bear not turning around. This is a crazy stock. If you guys remember when it was in this kind of sideways action, I was like, man, is this just setting up for a big short? It came down. It popped back up, came down again, and now it's all the way back and past that price point. So it looks like it's definitely ripping here. I don't know why, but Build-A-Bear won't go away. And sometimes when you don't see a stock turn and you feel kind of bearish towards it, sometimes you just got to stay away from it. So in my eyes, I'm not a bull in Build-A-Bear. I'm not a bear. I'm just going to stay away because in this case, I don't understand why the stock just continues to rip. But at the end of the day, they continue to hit their numbers. And you guys can see here on the 15-minute, they're getting some appreciation after their earnings. All right, let's keep going. We can take a look at some different Chinese stocks. Looks like, Jim, you ever look at the Strat, Mitch? Yeah, and I know the Strat, Jim. I definitely have taken a look at the Strat. I think the Strat does a really good way of trying to make things discretionary. And so if there's one thing that I would definitely say about the Strat is that they figured out a strategy that's discretionary versus indiscretionary versus discretionary, right? At that moment of decision, there's a lot of strategies where it's kind of more subjective than objective, right? I feel like the Strat does a good way of turning it into an objective strategy where you don't need to question if you need to get in. You just do. All right, let's keep going. That's enough Strat talk, but of course, you guys can reach out. We did some Strat education actually yesterday. I don't know if you caught it, Jim. We did it after live trading. So if you missed that, check Benzinga TV yesterday, right after live trading. Did some education for the Strat. All right, let's keep going. We'll go towards some different stocks, and we'll take a look, of course, at some Chinese stocks. Xpeng. Xpeng, let's go towards it. XPEV. All right, XPEV getting that nice little lift there towards 1064. We'll see what happens on that one. Can it continue to run? Let's talk about their numbers and what they gave. Xpeng clocked 15% Q3 delivery growth and expects Q4 deliveries of 20,000 to 21,000. Now, one thing to kind of keep in mind is that their sales came in, EPS came in kind of in line here. Sales at 959.23 missed the 1.01 billion estimate. Now, they did state that Q4 vehicle deliveries would be down 49.7% to 52.1%. That's not a good outlook going forward, but it's still getting the lift today. Of course, the reopening kind of helping that out. You guys can take a look at different autos today. LI getting the lift there. NIO getting the lift there. And I think that we need to keep these on watch because, I mean, if they keep pushing, they could get Tesla up there. Tesla's just battling around right now. Of course, Tesla does have the catalyst that tomorrow is expected to be the semi-truck delivery for, of course, Pepsi. This is going to be an event. I'm definitely going to catch this. This is Tesla event. We'll see what happens there. And can that get Tesla running towards maybe the close? It's been sideways on the day. I think if it can stay sideways on the day, who knows? We'll just have to wait and see what happens from the semi-truck event. All right, getting out of Xpeng, we could take a look at Workday and Wayfair coming up in a little bit. Especially, we'll also touch a little bit of Petco. But let's go to what was hot and what was not. That's why we take a look at the sectors and industry that are moving. So if you guys caught a big mover, throw it up in the chat and we'll go through it. All right, let's keep going. Looks like you guys are talking about LeBaron, Freddie. All right, I see you guys in the chat keeping up with each other. That's what it's all about there. BBWI. I'm going to have to take a look at that. That's, of course, Bed Bath & Beyond, right? Oh, no, that's Bath & Body Works. I always get these twisted. But there you go. It looks like that one's continuing. That one has some good earnings pushed up there. Looks like it's trying to continue pushing. Apparel stores. Not looking too bad. Remember before the earnings season, everybody said that this earnings season would be a disaster. I don't think it's been a disaster. I mean, I know that the kind of the bigger stocks let us down, but some of these smaller retailers have really been able to find a way. It's really interesting to see that. Let's keep going. Phil saying 4 minutes and 50 seconds to the reckoning. I love it, Phil. Way to keep us honest. All right, we'll see what happens there on BBWI, but let's get into what was hot and what was not. That's why we take a look at the sectors that are up on the day and what is moving there. Well, technology, you guys see it pulling back down. The reason I'm trying to get through this before 1:30 is because once 1:30 hits, things are going to turn around. As soon as we get towards 1:30, I'm even going to pull up the SPY to see if we get some movement. But I have a feeling it's just going to take a long time during that speech. And then there's going to be kind of a slowdown. We'll have to wait and see. Technology, you guys can see here, solar names, we're getting a little bit of a bounce there. Internet content information, that's not too bad to take a look at. We can take a look there. Leadership, getting some lift today. Google, getting a little bit of a push up. Meta, getting a little bit of a push up, right? Airbnb, I did see an Airbnb mention this morning about kind of adding apartments to their kind of their properties, right? And working with landlords so that you can actually rent apartments there. That's not a bad outlook there for Airbnb. My biggest thing with Airbnb is just not in favor right now. It needs to come back. Eventually, I feel like it'll come back towards that 120 and I'll try to take a ride. But for right now, I'll stay out of Airbnb. Let's take a look there. What else is making a good move? Solar stocks getting a nice little push back. FSLR, like I've talked about it, the leader doesn't want to give up. It pulled back here to this trend line, now starting to recover it. Now we'll look to see if it gets back above 170. If it cracks through these lows right here, 160.81, 160.88, I think you'll finally get that drop that you're looking if you're looking for the pullback there in First Solar. But right now, it's holding that and now starting to get back up. Now you got that little double bottom on the dailies. Look for that to kind of hold. All right, let's keep going. We'll take a look. Dude, it's got to step up to the podium, clear his throat, and flush. We'll see what happens there, Phil. There's still a couple of minutes there till we get Jerome Powell speaking. And, you know, sometimes he might be late. He might not be as late as Biden, though. That I know. SPWR, we'll see how those kind of continue. Solar stocks still battling. Let's take a look at some of these software names. Software names, right? We saw Intuit get that nice little lift today. Will some of these other ones start really pushing? Salesforce, right? Salesforce is right off the bottom. Eventually, I feel like Salesforce won't be the worst company, right? It's one of the best and leaders in the industry, right? And so SAP, another one that's gotten a nice little push lately. I would stay away from SAP just because it gaps too much in my eyes. But now looks interesting here, trying to catch some bottoming action. Uber trying to catch some bottoming action. I'd be careful with Uber, though. I don't know if this kind of down gap is going to hold there. But we'll have to wait and see on Uber. It is going sideways there. I saw, we mentioned earlier, right, that we got some job cuts that came from DoorDash. We'll have to wait and see. I wonder how Dash is doing today. Dash is actually up on those job cuts. And wouldn't you know it? Stocks going up when they're cutting jobs. Well, it seems like it's been helping companies as of late. Normally, this would be a negative. But in this environment, it's viewed a positive. And that's just how it is sometimes. You got to always ask yourself, what environment am I in? All right, let's take a look. Utility stocks are getting a little bit of a bounce here. We'll see if these can continue into the plus side. Where did I see the rotation go away from today? Well, financial services, that's definitely an area that I saw it just started dropping right out the gates. They were holding up. They were looking strong, and it looks like they turned around on the banks today. JPM, one of those. Goldman Sachs, one of those. Now the big thing is, will it break longer-term support, right? Well, it's right near that daily support. We'll look to see if these kind of break down, or will they get the lift? Bank of America also breaking down at the gates. Eventually, we'll see if they can catch the support. They're right on it. We're going to have to wait and see. Definitely, this was one of the areas that I'm going to keep watching because if financial services turned around, I think there's going to be an opportunity there eventually. Basic materials pulling back, silver into the green, industrial metals into the green, copper and coal and gold, but steel in the red, lumber in the red, agricultural inputs into the red. Now on coal, we have been talking about certain stocks here to keep in mind, right? We've been talking about the CEIX. Look at this one continuing, team. We talked about this one earlier in the week for a push back above 70. It's already there to 77. It's not a bad one there, up about 13% in the last 2 days or 3 days. Not looking too bad there. We'll have to wait and see what happens to these stocks. One that I'd keep on watch is AMR. It is pulling back today, but I have a feeling we'll eventually maybe get that 180 run. Just keep it on watch. Alpha. All right, let's keep going. Look at the SPY. Look at the SPY. There it is. It's 31. Let's go taking a look. Let's see if we're going to get that movement. We're getting the lift there right out the gates towards the 397. There you guys have it. It looks like we're getting some, at least for right now, some lift here. The bulls are trying to take the lift, take the control. Definitely the volume came in towards the plus side. We got up there to 397. Look for stocks that have been weak to get strong. Apple, look at that push. Amazon, look at that push. We'll see if these can continue pushing. That's why I wanted to get to what was hot and what was not before that happened. But let's take a look there. How is the China stocks making a lift here? There you guys see it. Baba even getting a nice little push there. JD, will this get the lift there? Doesn't look too bad, especially if PDD is going to stay that strong. You see how this one lagged? This is what I call leaders and laggards, right? So Baba was already making the move. JD is kind of lagging. PDD is the leader. And you guys can see PDD trying to take that next step up. I'd be looking at JD if I was trading right now. But like always, you guys choose your own investment decisions. All right, so definitely Jerome Powell is going to be speaking, and in the next couple of minutes, we should see some volatility continue throughout the day. We'll just have to wait and see if this is the real move for the upside. Daily chart now kind of catching here on pullbacks, it doesn't look too bad as long as we stay kind of sideways. I've talked about this before. If we can stay kind of sideways levels, it doesn't look too bad. We did try to break the 395 multiple times today. We'll see if we eventually break it on the daily. All right, there's the 396 pulling back here. We'll see if it breaks through the 396. It definitely got all the way up there to 397.58. Will it come back up for that level? All right, we'll have to wait and see. Powell watching China. We'll wait and see. SPY ripping. There's a lot going on. I'm definitely going to try to do my best to kind of pay attention to it. Looks like I'm starting to see here that Fed Chair Jerome Powell says smaller interest rates could start in December. I don't think this is anything that we didn't expect. So, yes, it is having that bullish reaction, but was this kind of known news? In my eyes, that was a known news. That's what he said on the last meeting. But of course, he did say that that monetary policy is likely to stay restrictive for some times until real signs of progress emerge on inflation. We will stay the course until the job is done. And so there's still a lot more there. It seems to me like maybe the algos might have jumped the gun, but I'm not watching the interview right now, so I'm not going to go too far on that end. I'm just going to wait and see what the price action tells us. So I'm moving towards the 3 minute to kind of slow things down a little bit. Even the 5 minute is what I'd be kind of watching. What happens on this 5 minute candle? Do we break through the highs? Do we break through the lows? It's going to be an important level to watch for. We'll have to wait and see. SPY definitely moving all around. Let's keep it going. Looks like we're struggling a little bit with the Fed interview, but if you guys are watching that, I'm sure my man AT's been working on that in the background. All right, in a few minutes, we'll be getting towards our interview at 1:45. Excited to go ahead and talk to our interview today. So stay tuned. And if you guys have any question, stay tuned. We got Shayna Sissel, the CAIA President and Chief Executive Officer at Banrian Capital Management, or as sometimes better known as the Queen of Alternatives, coming up at 1:45. Don't miss that, team. We'll definitely get into some good questions. Let's go back to some of these earning stocks and see how they're reacting on this SPY news. Of course, I'm going to keep watch on the SPY, so we got to go ahead and kind of watch multiple charts here. So what I'm going to do here, since we're watching some live action, we're going to use what I use with my multi-charts, right? And so I'll put the SPY here on the right-hand side just to kind of keep watch on what's going on in the SPY. And then I'll kind of make this a larger chart here so that we can keep watch on some other stocks, right? So let's go towards some other areas so that we can get in through the headlines, and we'll keep watch on the SPY, see if we can kind of keep taking off there. Let's go towards Workday. Workday is definitely one that to keep in mind. WDAY, if you guys want to kind of stick around, and you guys can see here on the 3 minute, it's actually been getting a nice little push. Not looking too bad on the chart here. Let me lower down the volume here and the MACD. The MACD indicator, you guys know I like my indicators. That's the moving average convergence divergence. We'll see what happens on Workday as we're trying to get through the resistance above here towards the 163. You can clearly see it, right? I mean, this looks like clear defined resistance. We'll see if we eventually get through there. Let's go towards the hourly. Hourly has a nice little trend line that we broke out of. Now we need to see if we hold pullbacks towards that. So I would be looking to see what happens after that. Looks like we held the pullback today and then got the next push towards the resistance. Now I just want to see it get a close above 162 to continue showing me that strength. And you can see here how the 9 EMA keeps following on the 15. This doesn't look too bad there on Workday. We'll see if this can continue making moves. And let's give their numbers, right? Might as well. I know I had their numbers here somewhere. There it is. Workday EPS at 99 cents beat the 84-cent estimate. Sales at 1.6 billion beat the 1.59 billion estimate. Workday sees full year 23 subscription revenues of 5.55 billion to 5.557 billion. We'll see what happens there. New share repurchase program. Authorization of up to 500 million in shares. We'll have to wait and see. Definitely trying to get through that 62. we'll wait and see what happens there. In workday, let's go to Wayfair. Wayfair was one that I was watching to see if we would get the recovery going towards 35. SPY looks like it wants to keep coming. I'll keep keeping an eye on that, keep making comments. Wayfair bouncing back a little bit. They announced this morning strong 5-day peak holiday shopping period, including a low single-digit sales increase. Repeat customers accounting for 73% of holiday orders, and hundreds of thousands of new customers ordering from Wayfair for the first time. So that looks like it's definitely trying to continue getting some lift here. There's the SPY breaking through the reaction. So looks like we're getting some bullish reaction here from Jerome Powell's speech here as we get the daily coming back up. Next level to watch for me on the upside is going to be from Monday's kind of open 399. Can we get up there? The high is 481. Who knows where we can be heading towards now with a nice little break onto the upside on the SPY. Apple, of course, right? I talked about that. Would that be a good play here? Well, you guys are seeing it get that nice little lead there. Amazon, Tesla. Can Tesla get that nice little push? We were just talking about this just a few minutes ago, how this has a catalyst, a positive catalyst going into tomorrow. Of course, if I could trade right now, I'd be thinking about trades like this, right? Swing trades going into tomorrow, but it's already getting the lift there. We'll have to wait and see what happens. SPY continuing to push there, and it's that kind of day today, guys. Last kind of headline stock that we can get into, and then I'll take a couple of minutes to take stocks from you guys. If you guys are seeing some big moves, throw it up. I got you, team. All right, so next one up, let's talk about Wolf. Who let the dogs out? Looks like Wolf coming back here. I was liking this little pullback today towards this around 1026 level. Was thinking about riding it towards the 11. It's starting to get a nice little lift here. We'll take a look at the hourly. You can see how you're starting to get that nice little push. We'll see if it gets the next lift here. So definitely Wolf. Petco, let's talk about their numbers. Look at that nice little push in the SPY. We'll see if it can continue. Petco's Wellness, Q3 EPS at 16 cents, inline sales at 1.5 billion, beat the 1.49 billion estimate. They reaffirmed full year 22 net revenue guidance and revised adjusted EPS guidance from 77 cents and 81 cents to 75 cents and 79 cents. So reducing some of that net revenue guidance, but at least coming in line and kind of meeting their numbers, right? They just met their expectations. It's not a bad thing to do on a day where we're getting the SPY with a nice little push. So we'll look to see if this can get back through 11, start making its way back towards resistance. Could see resistance coming into play, let's say above 11. Then the next following level, I'd look for some kind of support action here. Could look for 1120s, maybe even a little bit above that towards the 1150s. We'll see if Wolf can have a day two type of move. There's the SPY continuing towards 399. It just hit it there. Talked about how that would be the first daily level to look for us to get towards. There we just hit it. Now let's see if we can get towards the 400. That's the next step up. And if it's starting to go towards the 400, you can definitely start looking to see some of these stocks making that continuation move. We'll just have to wait and see. Did the banks reverse, right? Those were looking so bearish. Look at that. Even the banks coming back a little bit today with that nice little push up. We'll just have to wait and see. But it's not easy. It's not easy by any means to trade some of these companies. Is oil coming back on this? That's an interesting outlook, right? Look at oil even coming back with the SPY ripping. Well, that just goes to show us we got to be careful out there. And anything can change the tape. AB, good call on your SPY calls. Hope you lock in some profits. Shout out to my boy AB. I hope you get those profits too, my friend. And like always, it's nothing wrong with running towards some profits. We'll see what happens out there, Phil. Definitely, it's getting that push. We'll have to wait and see, Phil. It looks like it got towards 399. And I mean, we really didn't get too much, at least too much difference. I mean, he gave the exact thing that we were kind of expecting, but it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down, stated by Powell. So definitely keep your eyes on that. We'll have to wait and see. Powell definitely getting a little bit of a push. And some people are probably going to say that he got a little dovish there. I think he just reiterated what he's already kind of spoken about. But like always, when we're getting the tape as it happens, it's going to be a little bit difficult. But Powell getting a little bit of a push into this market. Looks like the printers went burr, like they used to say. Those printers have been put to rest for a long time, but we'll wait and see. SPY continuing that push. Let's go. If you guys have any stock that's making a big move, you guys want to talk about it before I get to my guests, go ahead and throw it up. I'll give you guys a minute or two here. And if not, we'll go ahead and get towards our interview. But definitely this is going to be a shakeup, right? A shakeup for sure. One of the things that we've been seeing is Apple. Apple's been coming down fast. Big level for me is always that 150 recovery. You can see how we fought it multiple times. We can never get back above that 150 on Apple. That's where I start looking towards the bullish side on Apple. But you can see lately it's been really failing once it gets towards 150. Last time we did a 157 move and then came right back down towards that 138. So we'll have to wait and see. And a lot of Apple kind of been getting a little bit of a shakeup. Mentions with Elon and stuff like that, but I don't think that's going to be a long-lasting effect. SPY pulling back after that 399. We'll see if it can continue to run. And it's going to be one of those days where the volatility definitely takes control. All right, what happened to all the bearish sentiment? Well, it's still out there. We'll talk a little bit about that probably coming right up. So stick around, RJ. We'll give some conversation. And if you have any other questions for my guests coming up, you guys get an opportunity here, right? That's what it's all about at Benzinga, is that you guys also get a chance to ask your question. I'll look to catch one or two in the chat. Let's go ahead and get to our interview today. All right, let's bring back on Shayna Sissel, President and Chief Executive Officer at Banyan Capital Management, better known as the Queen of Alternatives. Welcome back. Oh, looks like I'm getting a little bit of mic issues. If you could do me a favor, just check the mic on the background. Sometimes it's just the platform that we're on. So go to the settings and make sure that your mic settings are correct there. And then give me a thumbs up once you feel like you've checked those mic settings. You'll see a little wheel bar at the bottom there that has the settings. That should help you out there. You let me know when you're ready, and I'll bring you back on. Good. All right, let's hear it. Sounds. Boom.
Does it sound better?
Sounds great. There you go.
Perfect.
I'm not going to lie. For a second there, it was a little chipmunky. I was like, I can't have Shayna on like that. So we fixed it. We got you back on.
All right.
We're
Perfect.
good. Let's get towards it. Hey, sometimes we shake off the rust. That's how we do it, just like in trading action. So let's get towards the action. It looks like, of course, Jerome just shook up the market. We're getting a little bit of a spike. But let's stay in kind of the longer term sense. Let's start focusing. Where do you see the best opportunities right now in this market?
Well, I think his comments are actually relevant to where I see the best opportunities.
Yeah, so let's bring it up.
So I think his comments are just continuing to suggest that they are going to remain quite aggressive with their tightening. That he made several comments saying that while he's seen some softness in the economy as a result of the increases in rates, what they haven't seen is any real movement in inflation, which is his main priority, which suggests that it is going to continue to be aggressive for longer. As a matter of fact, he said exactly that. He said, we expect a period of much slower growth for an extended period of time. So I'm positioning for that type of environment. I like staples, industrials, healthcare names that will do okay in a slow growth environment. So I sent a couple of names over that kind of are some of my favorites right now. One we've talked about before, Leidos. That stock has done incredibly well. Government contractor. Fun fact about Leidos, they have 100% market share in airport TSA. I'm sure we've all seen that additional machine you go through if you get tagged for additional screening. That is a Leidos owned technology, and they have 100% market share in that space. They have a tremendous growth in their technology offerings, whether it be cybersecurity or things like airport security. But they also have a rapidly growing health and human performance division that's both civil and military. That has been their key growth engine, which should continue to do well even in a softening economic environment. The stock has done great, so I almost hate continuing to say it's one of my favorites because since I started talking about it, it's up 27%. But it is still trading at a reasonable multiple with an attractive dividend yield and still has great fundamentals. So that's one name I really like. The other two are kind of questionable. I've sized my positions accordingly because they have some risk associated with them, but they fall into these buckets. So Humana is another one. They're obviously, you've probably seen the millions of commercials they do about their Medicare supplement programs, but that is actually one of the key fundamental positives for Humana is the growth of these Medicare and Medicaid programs that they have and our aging population. Healthcare spending doesn't go down because the economy is slowing. In fact, programs like the ones that Humana offers becomes more important to make healthcare affordable, especially with those who need it most. So Humana is another one. I say it's a little expensive. It's trading at a slight premium to the market, but it has a very attractive dividend yield. The one caveat that gives me pause is recently they've had some insider selling, which is typically not a good technical sign, but fundamentally, like I said, I think the company has some attractive fundamentals. So that's a name I really like. And then the third one is Americans Home for Rent. Lots and lots of discussion about single family home rentals. They are a leader in that space. They don't just build houses, they build single family home like almost apartment communities with swimming pools and gyms and exactly what young families are looking for, single family homes. They're a leader in the space. They're in the most attractive markets, Texas, Atlanta, and the North Carolina are a substantial part of their market share. So people are very attracted to what they're offering. They want that single family home experience. Millennials are having families, but buying a house is just not possible right now with interest rates where they are and home prices and lack of inventory. So this is a logical solution. And I think more and more we'll start to see this. And again, they're kind of a first mover and a leader in that space.
Yeah, definitely. It seems like sometimes it's right now, especially, it's more focused into the fundamentals and the non-sexy plays, right? It seems like the value plays that seem to make sense. The other day I was watching IBM move. I was like, I can't remember the last time I thought about IBM, but let's take a look into how your outlook has changed. What has changed recently? Is there anything that you've been looking into that you weren't thinking, let's say 3 months ago?
I actually don't think much has changed, honestly. I've kind of kept this course of having, we've talked about this, liquid alternatives as diversifiers. I continue to believe that they belong in portfolios at least for the next 12 to 18 months, because I do think we're going to have some difficult economic times, and these are products that are going to help with risk management and downside protection. So these are not going to be new tickers to you. BTAL, FMF, MRSK, IVOL, these are all names that I think are attractive risk management tools for portfolios, and I continue to use them in a substantial allocation in my client portfolios, because I think these are the things you need to have in your portfolio as we kind of move to the into recession, and it's looking more and more like that's where we're at. I will say MRSK is a newer name that I've started using in my alt portfolio because it is a little more sensitive to equities, but I think we're closer to a bottom. And so I want something that's going to continue to provide downside protection, but also participate in upside if and when equities do turn. And we have to keep in mind that equity markets are a leading indicator, and they do tend to turn 6 months before a recession ends. So, if we just look at March 2009, that's when the market bottoms, but the actual recession didn't end till well into the summer. So these are things we have to consider. And so I am positioning a little more with a hedge, but maybe a little more upside potential with some equity exposure.
Yeah, I think you mentioned a lot of great opportunities in having the uncorrelated hedge, right? And having that aspect into the portfolios where I see a lot of people feel that their portfolios are balanced, but really when it comes to a time like this, they wake up and they're like, well, was it really balanced, right?
Right. Fixed income's down double digits. Equities are down double digits. Now, I would argue that fixed income is now starting to look very attractive. We know
Yeah.
rates are going to continue to go up. And now even if you lose a little bit of the principal, you're being rewarded with pretty substantial yields on your investment grade and your government, where you're getting 7-8%. I mean, I don't know if many of us remember when there was a time where you could get a 6% CD, but they
Yeah.
exist now. And so these are things that actually are starting to look more attractive. But as Powell said, they intend to continue to remain aggressive. And as long as they keep raising rates, that means the actual par value of fixed income will go down. So you want to make sure you're getting enough interest rate reward for the fact that you are still going to have some downside on your principal. But it's starting to get to the point where fixed income is looking more and more attractive, if just from the income perspective, because you don't need to take on substantial credit risk in order to get attractive yield.
Yeah, definitely in a time where there's some alternatives, right? I mean, and for the queen of alternatives, thank you for bringing that up, right? Let's get towards the holiday season. How did you see it? And do you feel that the consumer is starting to weaken?
I think the consumer is weakening. I think these initial numbers out of Cyber Monday and Black Friday aren't going to show it, because I do think consumers went out and spent. But I don't know about you, but my inbox was flooded with every company I've ever bought anything from in the last 10 years offering ridiculous sales that went well beyond Cyber Monday. I'm still getting emails about, slashing prices. That says to me, they're trying to entice consumers with just rock bottom prices, which isn't actually good for margins. It might get a lot of people out there spending, but what is the average dollar amount they're spending? I think that is going to be lower than it has been in the past. They might be out there, the customer count may be up, more people may be spending, but they're not spending as much. I think the holiday season is one I think we should watch. We've seen rising credit card balances, so people are using credit more than cash and savings for their spending. As that continues, I think they're being more cautious about what they spend this year for the holidays. And they're certainly taking advantage of these tremendous deals, but that does not mean that they're spending more.
Definitely. I mean, at the end of the day, there's only so much the consumers can take. There's one year of inflation, but it seems like now we've had a year and a half and looking to continue being at high inflation next year by all means. So it's going to be tough on the consumer.
I think people are also worried because we're seeing more and more layoffs, and it's starting to move out of tech.
Yeah,
and
it's
so
not
that is something where people are starting to become more aware about job security and things of that nature as well, which also affects the way that they spend their money.
Yeah, you start seeing it and you hear it from workers all around now. They're really starting to look left and right. They're starting to see the layoffs happening around them, and a lot of job security is starting to become in question. Now, we've gotten a lot of mixed signals from China. And it seems like, some can make it as noise, some can make it as news. What do you see here? Do you see an opportunity in China stocks, or is this a risk that you would likely avoid?
Right now, I'm likely avoiding it for a couple of reasons. Number one, they haven't given up their zero COVID policy, which means they'll continue to disrupt the supply chain in a meaningful way. Second of all, yes, we're seeing the rise in protests. Civil unrest is not necessarily economically a good thing. It might be after we get through it, if there's a change in regime, that could necessarily be positive. We have no idea how these are going to go. In the past, the communist government there has been able to get these things under control very quickly, and it's made no difference. Maybe this time is different. Quite likely, the willingness of people to actually challenge the government seems much greater this time because of what they almost feel like, what else can you do to me? You already locked me in my house and I couldn't leave. What's worse than that? Killing pets, taking kids away. I mean, I think they see it as there's really no downside. So more people are willing to participate in these types of protests. But the question is, will it result in any change. And I'm not convinced that it will just yet. It's way too early to make that. So I'm not looking at China right now as a potential opportunity. I think we kind of need to see how far this goes. And if the unrest seems to be moving in a way that suggests it'll overthrow the government and potentially install something that's more open markets, then maybe I'll take a second look.
Now, the last question I'll leave off with is a cryptocurrency question, right? It seems like there's a lot of talk out there. Of course, some people feeling a little bit, and I would say a little bit hurt from the FTX situations and all this situation that has really ruined and left a sour taste in a lot of investors, outlook into cryptocurrency overall. What is your outlook going forward in cryptocurrency?
So it's interesting. I've always been a fan of the blockchain, and cryptocurrency is kind of a necessary part of the blockchain. But I focus more on the blockchain. And, it's funny, you mentioned IBM. I'm fairly certain it was the IBM CEO that was on CNBC a couple of weeks ago talking about blockchain, and where he felt and they wanted to make investment was blockchain for supply chain logistics. I think it's become a greater focus now with the supply chain disruption that's coming from Asia and China. So I think that I want to start looking at the underlying blockchain technology and how adoptable it is and what is most likely to be adopted for those kind of scenarios, which clearly seems to be where big tech is looking to invest its money. So I'm going to look at things whose blockchains are conducive to smart contracts. Things like Solana, Ethereum, Cardano are the three that kind of come to mind. They all have, pros and cons. And I know there's some newer blockchain technology and newer crypto coins that are coming out that are also playing in that space. I'm choosing ones that people are more aware of. But my point is, now's the time to not get caught up in the hype of what's the newest and greatest coin that everybody wants to jump on, and focus more on, whose blockchain is actually applicable to the use cases that people want to invest in. And anything that can work in smart contracts that can help with supply chain logistics, I think that's going to be the winners out of this. But I think we're in for like a crypto winter, kind of like we saw with tech, where a lot of things do a lot of nothing for, an extended period of time. But in the end, I think you will have winners, and the winners will be the ones that are in the spaces I just spoke of.
I think it's an important outlook too. I think that a lot of people get lost in that it's the platforms that themselves went down, and it wasn't the cryptocurrency blockchain that brought them to it. And it's just, it's tough. It's tough, especially when you're dealing with kind of a new outlook in an area where a lot of people, I feel, just don't do enough research to understand what investment they're truly being a part of. Appreciate you, like always, coming on, speaking on different areas. We talked about stocks. We talked about the Fed. We talked about retail. We even talked about China, all in one interview. So thank you for joining me today. Shayna Sissel, we'll definitely have you back on.
My pleasure. Have a great day.
You guys keep following the Queen of Alternatives, and I'll definitely make sure that her Twitter is in the description below so that you guys can go ahead and give her a follow. Let's continue going. Let's get back to the market action. Of course, the SPY is moving all around here. It looks like we're up there now towards 400. If this is a breakout by any means, there you guys see it. Now they're towards 400. Daily chart has a nice little push. We're getting closer to the 200-day moving average. Talked about how that could be a level where we could find resistance. 401.14. Have a feeling that we're going to be stuck between some range here. We're going back towards kind of making this third high, right? It looks like we're going to go up here into making this third high. We'll just wait and see if we can actually break outside of the daily range. This is definitely something to keep on watch. Big push today. It's 201 though. We get into overtime here. I'm going to go ahead and get out of here, team. I myself need to go check that interview. So bring you guys some more information on At the Close. That's what it's all about here at Benzinga. Always trying to bring you guys more information. So definitely check it out. Hit the thumbs up. Hit the subscribe button down below. We had a great show today. Great guests. Talked about a lot of different areas. And of course, Jerome Powell shaking the markets up. We were looking red early in the day. Now we're getting the pop. I wonder if my man AB sold out, but we'll find out tomorrow. Hit the thumbs up, and we'll see you next time on Benzinga TV, live trading Benzinga Live, Stock Market Movers. Some of the top 3 shows out in the finance industry. Hit the like. I'll see you next time, team. Coming up next, you guys will have at 2:30 Cannabis Stream. Check it out. That will bring you over to At the Close. At the Close with Joel Elconin. As we take a look at this market spike, what else is going to keep moving? Just have to wait and see. Hit the thumbs up on your way out.